Hello and welcome to another live stream with me, Christian Rauchenwald, on this beautiful Monday. Today, as always, we're using the Elliott wave principle to map out GameStop, or to kind of like try to predict what GameStop or the GameStop stock is going to do. Am I gonna disconnect from here? No, I'm gonna keep that open. And welcome John, welcome Captain Caliente. And question was, what's everyone's floor? 10 million, 1 million if you're paper-handed, and as always, sell on the way down. My question is, should I go all in at market open or wait? Good morning. Yeah, for me, good afternoon. For you guys, maybe good morning, good evening. I know we had someone from Lurk from Australia last time. For him, it would be good or horrible night, depending on how the market develops. Just need to move some windows around and actually start wave basis, and then we can jump right into it. Now, over the weekend, okay, my free trial has ended, so I quickly need to sign up for the paid plan of wave basis, or motive wave, sorry. Yeah, quit. And pricing, monthly, ultimate. Over the weekend there were a few posts about lights being on at Citadel at 3 in the morning or so, and that according to Google it's more active than usual, which are quite interesting. Might not necessarily relate to enter email address, what? Yeah, but this is my trial email address. I need to press submit, got it. So might be interested, but maybe related to the other announcement. I think the SEC announced that they will have or indict a couple of market makers or bigger players for, I think, money laundering for because they use cryptocurrency to apparently avoid paying taxes or something like this. And credit card, blah, 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 price, address, submit payment, there we go. And yeah, might need to move money later. Account summary up. Yep. So that is done, and technically I should have a new license key now. Oh, my existing license key has been automatically updated, so let's hope that that's that one. Yep, looks like it's that one, okay. Screenshot of this, payment approved, and here we can go to investing, portfolio, and yeah, so let's see how GameStop is doing in the pre-market. Already 11% up, which kind of like fits nice. I mean, we will see if it holds on to that, but based on how we ended the week, we were at the end of our triangle in wave number 2 of wave number, I don't know, we'll have to look it up. And the logical conclusion would be that we're now going up. So obviously pre-market and aftermarket prices are not really relevant for us. But if we start higher, it will result in a candle that's higher for us. So connecting to interactive brokers, up, GameStop. We need to check interactive brokers there. Software is running, but we don't have, oh, now we have prices. Okay, now something starts to update. And yeah, as we see, so last week we ended our live roughly here with the prediction, okay, we might drop a little further, and so that our wave E breaks out a little further. As we see, while the rules of triangles, as far as I recall them, would state that wave E never breaks out, like even in the book, pretty much every example of a triangle where it's detailed enough shows that wave E actually briefly breaks through the line before it goes up. And we would have the same case here, so it breaks a little bit through and then it goes up. Now wave E point would likely be here. And technically, if we look at this very small wave that we could already start here, we would already see And I'm just gonna double check that I'm sharing the screen, yeah, so that everyone already sees what I'm talking about. If we look close enough, that move up is followed by a 61.8 retracement, and again, it's like incredible how often, or yeah, like, I mean, it doesn't hit it on the spot, but how close it gets to precisely that area. So how often retracements are either 38.2 or 61.8% retracements. And that usually would be the sign of a wave 2. So technically this could be the beginning of a 1, 2. And if we open the pre-market higher, so if that is the highest point we stay at, then we would have a base channel, a new one on the small scale. And we would basically wait for a breakout up here, and that would indicate that we are in our wave 3 of this very small 1, 2, 3, 4, 5. That may not yet be, I'm gonna zoom out here to probably hourly, yep, and move those things a little bit further ahead, yeah. So that very small 1, 2, 3, 4, 5 that we get to see here in this very small trend channel is obviously or very likely not the 1, 2, 3, 4, 5 that will take us to that 0.3 here. So, but it will be one wave of a very small degree. And yeah, pretty much what we are hoping for, actually what we expect to see, is this bigger 1, 2, 3, 4, 5, yeah, or actually this bigger wave 3. And based on our recent experience, it's, if I remember it right, where do we have the earnings low? Here we were at 38, that's not, here we have the earnings low, yeah. So pretty much this 1, 2, 3, 4, 5 almost happened in precisely one day. We got till here in one day from like even from somewhere here, so it dropped further and then went up. And then the next day we pretty much got to see most of that sideways movement to confirm the first ABC that we wrongly identified. And yeah, like, so pretty much every day, if we look on a small enough scale, we finished almost one pattern, which makes it likely that today we will get to see an entire 1, 2, 3, 4, and maybe even wave 5 of that small impulse here, or maybe even an impulse of 1 degree bigger, yeah. Now, yeah, like, still missing prices here, but I mean, we have the last price, but the rest of the information is not here yet. Oh, and we're not connected anymore again, so might need to restart wave basis. And on the other side, I also on the weekend took the time to look over my existing positions that I manage in my eToro Popular Investors portfolio, and we'll also then, once the market opens, add a few positions. Overall, so that's a kind of like a small portfolio with roughly 3,000 euro in balance there. Oh, I need to move here so that I can drag it up. And basically I'm gonna add a little bit, so 3% to Amazon, 1.6% to Coinbase. I think there we are now seeing the 1, 2 of the first impulse, but it's a little bit of a gamble because we know initially stock prices, we always have to wait a little bit before we have our so-called irregular first wave. But I think with like less than 2% of my portfolio, it's an okay point to start. Add Nvidia for 3%, Spotify small position, Apple increasing, American Express increasing my position, Alibaba increasing, Lemonade increasing, Microsoft I think adding, or like a new position, Netflix new position, and adding to the Ziri position that we opened last week. So maybe we'll look at those charts later today. And yeah, still not connected, so I'm gonna need to restart that. But I wanted to let you, or share it with you, that that's what I'm planning to do today, to basically increase our positions there. And yeah, so motive wave again. And what else? Yeah, so the question, should I go all in at market open or wait? Well, the thing is, if our analysis is correct, then it doesn't get lower anymore. Yeah, now obviously, or let's say quit and remove the Coinbase integration because we don't need it. So if our analysis is correct, then the point is that it wouldn't get any lower anymore. So then obviously buying at market open, or actually personally from experience, one could also consider, if we open at 170, that very often, but not always, yeah, like here for example, we did not, yeah, but very often we close the gaps. So do we see, yeah, it's hard to spot here because we closed them, but we had a gap up here. No, wait, earnings low here. Yeah, no, not earnings low here. Wait, what? 130. Am I on the right stock? Yeah, I'm on the right stock. Okay, that's already good to know. E, 1, 2. I'm just too far zoomed in. Yeah, 1 hour. Earnings low, we had a gap here and it also closed pretty much immediately. Yeah, so that gap here eventually got closed. Those gaps here got closed, not on the same day likely, you see, but they got closed. So not all our gaps got closed, but we see here we had a big gap from here to here, but then a couple days later we closed that. The gaps here only got closed like really a while later. Yeah. So while there's obviously no guarantee, and if you play for the gap, then yeah, kind of like you might get a little bit cheaper entry, but it could also be that you miss out completely. So it's really hard to say. Obviously, decision is up to yours, and like Captain or like you yourself say, like to a $10 or for a $10 dip, it's kind of ridiculous. Yeah, I mean, if we consider that even our intermediate wave 3 target is above $1,000, then yeah, if you buy at 170 or something and then temporarily watch it go down and then we go up, or if you gamble just to have like a small percentage advantage, yeah, totally agree. And again, we're still not connected with Interactive Broker. So let's try that again. It says connecting. We click on the GME, sort that. GME, we have a price, but we don't have anything else. Okay, so I'll need to check why. Connection successful. Okay, great. So do we stay connected now? And yeah, and hi Luke, in case I haven't said hi yet. Yeah, pre-market around 170, blah blah blah. Yeah, ignore and wait. Should be an interesting open. Yeah, as mentioned earlier, so because we last week ended pretty much at the end of a wave 2, based on our labeling, which would indicate that today we see a 1, 2, 3, 4, 5, like a small impulse wave, part of a bigger impulse wave, but basically part of a wave 3 that takes us up there. And wave 3 usually consists of strong movements. So we might be able to see quite interesting aspects. Now, today is actually the day where I slightly regret that I don't have a wave basis license anymore, because there we could instantly hover a point and see the predicted price area, which will be nice on the way up. And I still haven't fully figured out which Fibonacci extension applies to come up with those areas. Yeah. Hi Jake, that should also answer your message. And yeah, can you show us your long-term price targets for GME? I don't have, hi Ray, I don't have them till wave 5. Like we pretty much are now currently waiting for wave 3 to finish at around 1,250 according to Jeffrey Kennedy. And my prediction before that was around 1,300 to 1,500 for that same wave 3. So we're waiting for that, because only once we know where we exactly land there, especially if you consider that if we see some kind of squeeze, we shoot through some of those areas, so we fall a little short because of a trading halt or something like that, yeah. And only once we have a point for our wave 3 precisely can we, with some accuracy, really predict our wave 5 target. And yeah, and I think right now for most people the assumption, or yeah, like my opinion, so not financial advice as we all know, that we go from basically less than 200 to more than 1,000 is already yeah, like gain enough on the short run. And yeah, so it's kind of like if we zoom out too much and try to predict our wave 5 target, chances are that we get that one wrong. I know in my original posts on Reddit I also shared the bigger scope, but since then I've also spent more time reading and learning about Elliott wave theory, so I'm at this point not really willing, and I'm still not getting a connection here to Interactive Broker. Hi Ben, great to have you here as always. Can you please connect? connection error, couldn't confirm, enable, yeah, like that's set up, like it's been set up already before. Like, am I missing something? File, global configuration, API, settings. Yeah, like all of that is set up. Oh, I might have, do I still have, oh, that might be the issue. Terminal, ifconfig. Okay, too many adapters here, but then network. Oops, wrong, not this network. Network. No, I still have the same IP address. 129.168.0.104, also not connected to a VPN. 7496. And let's try it again. Configure 7496, and the IP of my other machine is also unchanged, I would say. CMD IP config. Wait, what? Oh, that's the virtual adapter. Yeah, it's still the same. Inbound rules. In the firewall also allowed for 7496. And let's say any port instead of TCP. And it says connection successful. Update connection, update, close. Oh yeah, it's gonna almost crash, saving the settings as usual. And sucks you're having all these issues with your data. Well, I think it's only one issue. What we're experiencing today is my Motive Wave trial expired and I quickly signed up. And yeah, like for some reason now it's not connecting. And it's not really a data issue, but it's then, if at all, like maybe an internal network issue, because my Windows computer is, or the client that you need to run for Interactive Broker is running on my Windows computer, and my Motive Wave, as you may know this, is running on my Mac, so it's kind of like connecting to that other machine in my network, because if I run the Interactive Broker software as well on the MacBook, it kind of like gets a little bit too much from a poor little MacBook. And yeah, plus I prefer to have like kind of like software like that not on my Mac. So but yeah, I mean, either we get it to connect, or worst case we end up using something like TradingView, which will be less intuitive and will suck with labeling waves of different degree, but it's not gonna stop us. In any case, I think we're in for a decent day. How's the rest of the market doing? So GameStop up pre-market, and the rest of the stuff that I have on that watch list here is kind of like neutral. Sixth, okay, not doing well. Palantir not doing well, okay. And Gateway. Confirm, yep, and connecting port is the same. Yep, it is like especially I didn't change anything in there. 7496, and there it's also 7496, yeah. And 7497 would be for simulated trading, which we're not using, yeah. Precautions, bypass order precautions, yeah, news, briefing, blah, blah, blah. Download, oh yeah, all of that is set up the way it should be. And 7496, yeah, like if I don't use trusted IPs when allow connections is enabled, I ignored. Ah, okay, but if I wouldn't, so if I would delete that, what you guys don't see right now, but if I basically do that, then I would see a system generated pop-up for the request, technically. Or I don't. But still, 120, 129, 168, 0. What was it? 104. Apply. Nine minutes to go, so 9 minutes to get this somehow sorted out. And good morning, Jeb Fisher. It would be so easy or so boring if everything would just work the way I want it to. So let's try this again. Motive wave. Continue. Hi David, great to have you here. And fingers crossed. So far so good, it says we're connected. We also have more data than we had before, so I think we got it working now. And yeah, we also see the last price, 172, so pre-market price. And yep, that should do the trick. So again, quick summary, based on the hourly chart, we had this wave 3 here, which started below $30 long before the drop here, and are currently finishing up or finished up wave 4 here. And at the end of last week, we started to label that wave 1, 2 here. And basically because the last labeling that we came up with ended in a triangle, and that we can see on the 5-minute chart quite nicely. So this triangle here, and a triangle is always the last corrective pattern. So basically we already expected that today we will see a burst up. Didn't know how far, or didn't calculate how far. Technically, that green wave 3 that we have to that we're seeing here, there I don't have the right trend channel set up for that green wave 3 right now. So that would be from 0.0, 0.2 versus 0.1. So technically, that wave 3 has to break through that trend channel that is out of scope now for us here. And I'm fairly confident today we will at least see the 1, 2, 3, 4, 5 of this impulse, maybe followed already by the ABC. So maybe we see an impulse even, or an entire 1, 2, 3, 4, 5 of a bigger degree as well. The pre-market price of 170 would indicate that, because obviously it would already be a breakout from here, confirming that it is our wave 3. And technically, wave 4 very often, but obviously not in every instance, corrects down to the base channel. So we might see 170 and then maybe not followed instantly, but with a little sideways movement and a drop that either takes us onto this channel. Sometimes, but in GameStop, that's also not 100% reliable because of the big movements we have. Sometimes if you duplicate the width of that channel, then that's where wave 4 corrects. But again, not always the case, so yeah, like we'll have to wait and see. But pretty much when we open at 170, or if we open around 170, it would confirm that this is indeed 1, 2 of a very small degree, and the 170 is then our wave 3, not the entire wave 3, but basically a very long extended wave 3. And the assumption here is that because this retracement here is almost precisely 61.8%, which is very often the wave 2 retracement, so either 38.2 or 61.8%, making it likely that this is a very small 1, 2 of a very small impulse. And yeah, so that's what we're going to do today. Blah, blah, blah. And great, we have the connection issues fixed. That was the word I was looking for. Hope everyone had a great weekend. Didn't miss anything worth rewatching from the start of the stream. Hi, Nuns with Guns. No, just had some connection issues with getting data into Motive Wave, but fixed now. and pretty much just a summary where we left off on Friday. We left off, I think, with those candles here, saying that we either expect a little bit of a further drop to finish that triangle and then go up, but it kind of like after ended the screen quickly recovered, dropped a little bit again, and then started the breakout here, which indicates the triangle is finished, which indicates that our double free correction here is finished, which indicates that the screen wave 2 is finished, which indicates that we are currently in our wave 3 upwards. And based on like the last 2 or 3 months or so, I would expect that we get to see an entire 1, 2, 3, 4, maybe even 5 until the end of the day. Now I'm gonna do my best to, likely if we have such movements, to stay online the entire day. If in between, whatever, like maybe the so wave 4 turns again into an endless sideways movement or so, and we don't see much movement at all at some point anymore, then we would call it a day. But yeah, so nothing important missed. So got that out of the way. Now I can close that. Market's gonna open soon, which means I can then execute my other positions. So we have one other thing that I mentioned, but it's not relevant for GameStop. It's that I also looked at my other positions that I have in my Popular Investors portfolio. And today I basically, so that Popular Investors account has roughly $3,000 in it. So $100 is roughly 3%. So based on what I looked at on the weekend, I will basically add those positions or increase my positions according to that. Yeah. But other than that, nothing really happened. And I mentioned initially briefly that there were a couple of posts on Reddit over the weekend about that there are lights at Citadel and so on. So likely the quiet before the storm, or them trying to, like in the movie The Great Short, where they are then calling everyone in at night to kind of like figure out if there's some kind of solution or not. Which could relate to GameStop, could relate to other things like the announcement that I think the SEC will indict some bigger players for money laundering in terms of cryptocurrency, cooking the books. Yeah. Especially if we consider that we also in the cryptocurrency market had sell-offs pretty much across the band, and kind of like doesn't make a lot of sense if you already know that you likely got caught, because that's what people kind of like, or many people don't get, misinterpret, or however you want to call it. While Bitcoin is anonymous, or every cryptocurrency that uses blockchain, but it's only anonymous until you kind of like create one knot with your real life. So if you use Coinbase or Crypto.com or whatever, any exchange that's like regulated and therefore it has a KYC process where you have to prove your identity, if you use any of those platforms to buy a cryptocurrency and then you transfer it to your regular crypto wallet, there is already a link between your bank account, credit card, whatever you use to pay for the cryptocurrency, your identity, and your crypto wallet. So whatever transactions you then make with that crypto wallet can technically be traced back to you. Somebody would just have to trace that one funding transaction back to Coinbase, and then get a court order that Coinbase gives out your personal identity, or Binance.com or whoever, yeah? And so basically cryptocurrency is only anonymous if you mined the coins or got them somewhere randomly without ever using your own bank account, PayPal account, credit cards or something. And if you pretty much never use them on any exchange to where you would have to provide your identity. Or even if you think about, even if a cryptocurrency, or what I want to say, like I'm kind of like easily distracted today. Yeah? Hi Josh. Yeah, I had a great weekend. Was a little bit lazier than expected, but still got some stuff done. David says, unless they pump strong a crypto or a few and dump them to make some money to cover, to save whatever can be saved. Yeah, but that would not, I mean, I'm currently talking about the theory that there is this indictment for cooking the books or money laundering with cryptocurrency. And then there was the sell-off in cryptocurrency, which doesn't make a lot of sense, because again, as soon as you have some kind of link between your wallet address and your real company or identity, that link is there permanently. Yeah, markets open, and we basically start off here. And yeah, which definitely is obviously based on this one too, would be wave 3, where we now would connect point 1 with a parallel through point 2. Yeah, and the moment we would have a breakout of this channel, we would basically know that we are in wave 4. Yeah, so kind of like nice market open. And yeah, so if you think about it, even if you use your, let's say you got your cryptocurrency anonymous, so somehow somebody sent it, you got it through airdrops or whatever, and then let's say we live in a beautiful age where you can pay it on Amazon with Bitcoin, and so you buy, or any other online store accepts cryptocurrency, and you, I know some of them do already, just as an example, then you end up and you go to buy yourself some new sneakers. And then technically, if somebody like a government agency wanted to figure out who is behind that crypto wallet, they would see there's a transaction to the Amazon crypto wallet, and then they could again, with a court order, get the order details from Amazon, which would then include your Amazon account information, what you ordered, and the delivery address for that order. So again, cryptocurrency is not really anonymous, like, unless you have people that are willing to just for cash without any bank transaction, PayPal transaction, and so on, kind of like exchange your crypto for you into US dollar or other stuff. But then you would also have to meet those people or be in contact with those people. So yeah, like while it's like one of the benefits many people focus on, that cryptocurrency is anonymous, yeah, it's only to such an extent. Yeah, I'm sure if you put enough effort into it, you can have your cryptocurrency anonymous by, I don't know, using like a ton of wallets and kind of like sending from one to the other, splitting it up in 10 wallets and sending it further. But there you would then also end up like losing a lot of money to transaction fees and put in a lot of effort, which, yeah. So in other words, I don't think necessarily that the sell-off in cryptocurrency is related to the announcement that there will be indictments for money laundering with cryptocurrency, because it doesn't make sense, because if the crypto wallets that have been used are already somehow connected to whichever market maker or big fish there is, then selling the cryptocurrency doesn't really help you. Maybe could be based on US law that if you kind of like, in Germany, it's for example a case if you would commit tax fraud and the government kind of like indicts you, yeah, indictment would be the right word, yeah, then you're facing this punishment. But if you go to the police and you kind of like admit yourself, hey, I committed tax fraud, I'm really sorry, here's the proof and I'm willing to pay the fines, then you get lower fines. And maybe there's such a thing in the US as well. And so if there is, then maybe it was a smart play from, I think the SEC made that announcement to say, oh, we're going to indict or arrest or whatever a couple of you big players for tax fraud with cryptocurrency, because they may have already 1 or 2 or 5 where they have proof, but they're gaming on some of them, kind of like saying, oh, we're sorry, we did it as well, before they get indicted, so that they get a lower fine, sentence, whatever. Yeah, so that would then explain technically the sell-off, because then they would have done it to end that practice. But there's a lot of ifs and when and who knows and whatnot. So yeah, we'll have to wait and see. And yeah, I quickly need to manage my other positions on my other screen, and then we anyway wait to see how far the drop here goes. So we're gonna add 100 here. Yep. And 50 for Coinbase. Coinbase not open. Gotta, of course, open Coinbase. Market open. Yep. And then Nvidia. And Spotify. And Apple. All the big players and the boring stocks up. and American Express. Dun, dun, dun. And Microsoft. And Netflix. And Siri. Now my Siri in the background reacted to that, yeah, but not that Siri, the stock. There we go. And yep, so caught up with my purchase list here. And yeah, so I mean, in between today, we definitely will have some boring phases. Like, I mean, right now it's exciting to see if that gap will close, but considering that we're expecting a wave 3 with a strong upward movement, I don't expect to see it close. But yeah, likely that was now our wave 3, which would make it a very extended wave 3. And it may not even be our complete wave 3 technically, because we cannot confirm it, because we would need from here to here fit another 1, 2, 3, 4, 5, which we likely cannot even do on a 1 minute scale because we opened here and fell down. So technically, if we consider the lessons that we learned during the last weeks, that the look of the waves is also important, then that is not wave 3, but that could technically be wave 1, 2. Yeah. But it also could then be that me labeling this as 1 and 2 is already like wrong. In any case, this is the start of our new upwards impulse wave 3, and with a few more candles we can make sense of it. And it can also be argued that if we would consider, yeah, I mean, we don't use after and pre-market because there's too little volume, so mass psychology doesn't necessarily apply. But it could be considered that since we are looking at such a small time frame, that's the reason why we at some point are not able anymore to confirm waves on a lower level. But based on the Kennedy channeling technique and on the, as mentioned, retracement that we have here of 61.8%, it would indicate that this is 1, 2, making this an insane long wave 3, which then likely, if I recall it correctly, would be followed by wave 4 and a wave 5 that might not exceed. So like I think when we have an extended third wave, we might see a truncated fifth. We had that topic last week, but I already forgot it again. Somewhere on page 50 something. There was a sentence about it, like not a full, what was it, 40? No, maybe earlier. I have fifth wave extensions, truncated fifths, and ending diagonals all imply the same thing. Okay, that was what happens afterwards. Dramatic reversal ahead, which is not what we expect, so no. It was fifth wave extensions and truncated fifths, yeah, no, but we don't expect that. And yeah, like where did we have it? Diagonals, third wave extensions. Yeah, so a truncation often occurs following a particular strong third wave, but which would be, if we consider this here 1, 2, that's more than a particular strong third wave. And therefore, if we now see 4, somewhere then here, technically, it could also go up first, of course, and make this third wave even worse. And if we see 4, and then our wave 5 could be ending a little bit early, followed by, that would then be basically 1, 2, 3, 4, 5. So that would then be wave 1, not our entire wave 3, so not the green wave 3, but it would likely be something like the golden or brownish wave degree that we have here. And then followed by basically 1, 2, by another correction, 3, 4, 5. And I think we will see the pattern in brownish today play out. So, but yeah, like we definitely get a lot of stuff to see. Maximum pain is 160 according to Captain Caliente. So basically for those that are buying call or put options at 160 or above, it hurts the put options buyers or sellers, depending on how you look at it, the most. So it's safe to say it won't go below that number. Well, I mean, if you have put options and maximum pain anyway only applies on Friday, then definitely today would not be the day where you blow your ammunition to try to keep the price lower. But likely as we come closer towards the end of the week. But I also, again, like our assumption, if our labeling is correct, is that we're currently in wave 3, so there's no sideways movement. There might be sideways movement here for this wave 4, which we, now that we also have more than one candle, also can create already our channel. It would look like this. So we take that high here with this and connect it through the low. So currently that would be our expected channel for our wave 4, where, I mean, it's not even yet confirmed. First we have to leave that so-called acceleration channel to the side. So which we can either, so like to be more precise here. So first of all, we would say this here is 1 and 2, making this currently our point 3, and 4 and 5 are, I don't know where. It connects them now to another wave, which is actually not correct, but I'm actually going to disconnect them real quick. Okay, need to switch, not daily, but so that wave 5 here is not this one. And down we go. And we zoom in. And yeah, still cannot see the wave 5. Where are you? Where are you? Where are you? There you are, yeah. So that's what we're working on right now. And back you go. And yeah, so technically, quick refresher in the Kennedy channeling technique, when we have our point 0, 1, 2, we can create our so-called base channel by connecting point 0 with point 2 and point 1. And the moment we have a breakout from the channel, it indicates that we're in a third wave. Yeah? And now we can connect our point 1 with our assumed point 3, which is in that case the highest point here, with a parallel through point 2. And the moment we have a breakout to the bottom in this case, or to the side because it's so steep, it would indicate that we're in wave 4. However, if we would have a candle here that goes higher, still within that channel, it would indicate that our wave 3 is not this one here, but that it actually is whatever the newer higher candle is. Yeah. So have to wait and see. However, also technically, because we're looking at a very small degree here with very fast movement, if we really want to jump the gun, which we are very rarely doing, we could also already likely say, okay, from the top here, down here would be wave A, wave B, and this is currently wave C of a zigzag. Yeah? But that would just be a sign that we are looking too close. Yeah? Then we have to wait a little bit more for a few more candles to play out to get this labeled properly. But for now, looking as close as possible based on the 61.8 retracement here and the huge thrust up there out of that base channel, it definitely looks like 1, 2, 3. Expecting to see wave 4. Yeah, like again, as mentioned before, sometimes or often actually wave 4 would retrace and touch the base channel, or if you double the width of the base channel, get to this area here. But not always. So we've had cases in GameStop and in other stocks where that isn't the case, but it's like kind of like if you use the trend channels, an okay technique to kind of like try to define how far it will fall or could fall technically. Yeah? In this case, really hard to say, but if this here turns out to be some ABC pattern, then I don't know, like maybe around 165 or so, maybe a little further, we will see. And yeah. Is there any chance we will see a superior fifth wave truncated due to a potential squeeze? A strong wave 3 might cause that. It's hard to say. I think on the if we look on those things like daily, monthly, or higher, then yes. Yeah. I mean, on monthly we might even have trouble to label a fifth wave. Yeah, so there we might technically stay in wave number 4 even after the squeeze, and wave 5 will only happen in like 20 years from now, yeah, because again the look of the patterns is going to be important. And if we look at this, so now we assume that we are still in wave 3, yeah, here, and then we would have after the squeeze our wave 4 followed by our wave 5, but we also have to consider the relationship in length and so on. So of the biggest degree that we have labeled here, yeah, like we likely will not see wave 5 anyway, so of the really biggest degree, or wait, which one? Yeah, so of the really biggest degree we likely will not see that anyway, and it's possible that on the daily chart we will run into the same issue in order to keep up the look and feel of waves. So we have here 1, 2, 3, where is it with a circle? Oh, there we are in this wave 3 now, which already takes us to 1000 and should definitely trigger, or 1250, and should definitely trigger the squeeze. Then maybe because of trading halts or paper hands at 1000 or so, we see wave 4, likely not that long, it's just placed there randomly, yeah. Although according to Elliott wave theory, it should actually go into the area of wave 4 of the impulse of the previous impulse of a lower degree, yeah. And then we have our wave 5. And I think on daily, it's also possible that we might not even get to see that wave 4, but that I mean, the squeeze should go like not on 1 day, but 2 days, maybe longer, yeah. But it's still not enough candles to form all those patterns. So I think on daily we also will be stuck in this wave 3 maybe. Maybe then it just overshoots its price target insanely or so. And that wave 4 might then be the after squeeze where the price normalizes, which might be lower degree would be this one here. So where after the squeeze then technically the price would fall into the area of 350 to 160 or 118 or whatever we had after the earnings. So this way there would be enough candles to play those, or to have those patterns play out, yeah. But as a result, we would expect that wave 3 here to be super extended. Kind of like if we look at the 5 minute right now and we say 1, 2, this would not be a normal wave 3. Yeah, like wave 3 might be, I don't know, like again, I haven't looked up or not fully understood yet the Fibonacci extensions to figure out where we go. But technically, if we just apply a Fibonacci extension, then yeah, like common levels would I think be 161.8, 261.8, and likely, since it's highlighted, also 423, yeah, which even that we shot through here. So, and if we were to do the same thing on daily, and in that case it would be based on wave 1 and 2, yeah, which might not make us super happy because our 1 and 2 are down there, but let's see what we get then. If we say 1 and 2, yeah, then we would have a 686 would be the next one. Yeah, so what else do we have up there? Does it stop then there, or do we get more retracements? No, nothing more set up, yeah. But, oh yeah, 600, yeah. Which kind of like would align with my roughly 1,300 to 1,500 prediction, yeah. But again, like there, if somebody can do it in wave basis, there it would be easier because you just label 1, 2, and there it would likely tell you that wave 3 should end here or something like that, yeah, in a reasonable area. And yeah, so in other words, the wave that we have labeled here with our target at 1,250 to maybe 1,500 might likely be, depending on the time frame we're looking at, already something that gets far exceeded. And on daily or maybe even on hourly and higher, we will not see wave 4 and 5, because it will then, wave 4 would be the retracement down again into this area here after the squeeze, and wave 5 would then be the next, I don't know how many years for GameStop to even remotely come into the area to qualify as like high enough as parts of in relation to the squeezer. So we'll literally have to wait and see. So, but I think if we look on the everything under hourly, 10-minute time frame, maybe even 15 and 30-minute time frame, we should be able to see things play out. And it could be that we will see a truncated fifth wave, but a truncated fifth wave would still indicate or would still reach 70% of wave 4. So if we fall from here to here as after the top of the squeeze, and it's not wave 5 here already, but that was 3, and then it's 4, then a truncated fifth wave would at least recover 70% of that. So we would still be very close to the actual top when we would then either consider smashing the sell button or placing a trailing stop loss to follow it a little bit further if possible and sell there. Yeah, so just have to wait and see. Yeah, and yeah, it kind of like looks like, I mean, again, like jumping the gun here, but if we take this here, and obviously in time it doesn't look the same, yeah, but it looks like we are literally, that could be an A, B, C with those candles, and the C is just a little extended. The whole thing here could become an 1, 2, 3, 4, 5, which would then be wave A, followed by wave B and wave C. So in that case it would then be 1, 2, 3, 4, no, 1, 2, 3, 4, and 5 would likely be here. And that would actually be a nice corrective pattern, because it would literally take us down to touch the base channel, which again, not always happens, but is often an indicator, and would then form a nice zigzag here. Yeah? And from there we would then go up in our goldish, brownish wave 5, and which would then become wave 1 of a bigger degree. And yeah, then we would draw another base channel 1, 2, whatever, somewhere, yeah, and go from there. So have to wait and see a few more candles, but based on the Kennedy channeling technique, unless that candle here rushes all the way out, within the next 10 minutes we will have a candle that's fully outside of the channel. And if it's fully outside of the channel, it would indicate that we have our deceleration channel, so that we are really in our wave 4, which should move in there, and the moment we have a breakout from here would indicate that we are in our wave 5 then. Yeah? And yeah, so that's where we stand. That's how things are right now. And let's check. Okay, that's excellent. Okay. And back here. Okay. Let's see, I'm gonna check on the other screen in the meantime if there's anything really noteworthy on Reddit to look at while we wait for a few 5-minute candles to play out. Please do not fall for hedge fund tricks. If there's a sell order tomorrow for 200,000, it's not deep fucking value, blah, blah, blah. It's actually a smart move, like to create a post and say like, okay, deep fucking value will sell, and then some hedge fund just creates a 200,000 sell order, and then they spread the screenshots and say like, look here, it's likely deep fucking value, margin call misinformation. Yeah, that obviously once the first hedge fund, that's also an interesting approach, like once the first hedge funds would get margin called, the smallest one or with the biggest position or the smallest balance or whatever, they'd obviously, or the other hedge funds would obviously throw a Hail Mary, again under the assumption that the stock is heavily overshorted and whatnot, yeah, and therefore then try to force a drop after the first squeeze, which might be at the high at 1,200, you know, like if we get that high and then the other hedge funds might likely violate even more rules and print more naked shorts and so on in a last effort to say, fuck it, we're anyway already screwed, let's violate some more rules and regulations in the hope to make people believe the actual squeeze is already over. And yeah, so can't wait to shake all your hands at the Moon Festival. Yeah, like I hope somebody buys the Citadel headquarters building so we can have it there. And gotta enjoy that morning movement of drop and bounce and sideways in the morning. Actually, like if you look at it today, it's really, really nice because today we didn't close the gap. Usually we open higher, and like very often we close, I mean, we don't open that much higher, yeah, but very often we close the gap within the first hour or less. So did you see the Standard & Poor's graph from 90-30? Based on that, if we did not break the resistance line, they say market will crash this week. You mean, was there a post on Reddit? I mean, do you mean in general, or do you mean based on the Elliott wave book? I think at least those who are aware, most won't believe that small drop after a run to wave 3 that the squeeze is done. Well, it depends, you know, if you're still having problems grasping that a price more than north of 1,000 is possible, because it's one thing, you know, it's like the same thing that I mentioned earlier. Is it DD? Okay, I will check it. It's one thing to say or to believe, okay, I think GameStop will go up, I buy a share. It's then the next level to be like, to tell your friends, oh, you take a look at GameStop, I think it would be a smart move for you too. It's then the next level to go publicly on the internet and say like, I think GameStop will go up and so on, yeah. And the same applies here. While many people might say, yeah, I'm gonna sell on the way down and whatever my floor is 1 million. Well, imagine if you're a broke student or something, and again, like I mentioned it in previous streams often enough, when you are like, maybe you have $100 allowance per month, so $1,000 seem like a lot of money to you. Maybe you earn $1,000, so $5,000 per month seem like a lot of money. Maybe $50,000 absolute seems like a lot of money to you. Maybe you already have a higher salary, but still 500,000 seems like a lot of money to you. So while many people might talk now, yeah, and say this and that, but even if you only hold one share, when that share then says like, okay, it's worth 100, 200,000 or so, yeah, I mean, if it gets that far. But what I mean is like, for many people, if they hold a little bit more shares and the stock already reaches 1,000, the number that they see in their portfolio may already be, oh my God, I'm not willing to lose that, yeah. And that they then sell because of that, yeah. So it's like, especially if it's followed by a significant enough drop. So, and you could consider like, we are in this mess because of naked shorts and so on. So if one smaller hedge fund causes some kind of squeeze to get us into whatever like area, slightly above 1,000, it would definitely be the point, if the other hedge funds haven't been margin called yet, for them to really say, screw it, let's throw on the printers and print shares, yeah, like in terms of open more naked shorts to get this price down. Because it could also be a mix of like trying to save themselves with greed. Because if they print those naked shorts, they don't have to. If they naked short it, they don't borrow a share, but at some point they could still buy the share back, and would then technically even own a share, yeah, or not? Like, well. Anyway, but point is, if it reaches a certain level, first funds get margin called, but there might be some players that still have a cushion and could survive another $100 of price increase before they get called. And that would be for them the perfect time. If we reach 1,000, for many people, that's already a price that seems insane. So if they after that press the price down and again into the area of whatever, like 400 or lower, yeah, or 350, there would be definitely enough people that would not believe that we will go up above 1,000 again, yeah? So that might even be a challenging point for me, yeah? Like, well, I'm not gonna be a millionaire if I would sell at 1,000, but if we see 1,500, and then based on Elliott wave, I would need to look that part up, if it's like a rule that it always happens, or if it's just a guideline, yeah? But if I'm not mistaken, it's like a rule, I might be mistaken, that when we have our fourth wave, that it retraces into the area of wave 4 of the previous impulse of 1 lower degree. So yeah, like cannot show it here, but that would then mean by definition that if we are at 1250, our wave 4 would have to reach or go at least come very close to 350 again, yeah, which kind of like would fit nicely together. But then it could be that again our wave 4 is something that we only see play out over a longer time, or wave 5 then takes quite long to develop or something like that. We'll have to work on that as we go, and with every candle that we get on the chart, things become like more detailed for us, yeah. And granted, I would expect hedge funds to pull a lot of shit to get people to sell. Yeah, especially if you really know, okay, now it's like last chance, and what does it matter anymore? Like if you already have, I don't know how many naked shorts, and you know you're gonna be bankrupt. So it's kind of like if you now short it from 1,000 down with naked shorts and somehow make a profit out of that, yeah, maybe it brings you enough cash. So by naked shorting it, that you move your margin call limit higher up. Maybe it gets enough people to sell for you to survive the whole thing. And if it doesn't help, well, you were anyway fucked if you didn't do it. So yes, post on Reddit, so we'll check. It's some Plato's allegory of the cave level of mental seal selling at 1,000. It's some Plato's allegory of the cave level of mental seal. That's too high for me. Yeah? Stop with the fancy word like selling. What's selling? They can't even comprehend big numbers. But yeah, like it's, you know, like it's one of the, I mean, my wife is also a business partner. She runs her own YouTube channel. She's essential in our software business and so on, yeah. But initially when I met her, she was also like her whole life working as an employee and simply had a different mindset. And it was like for her, I mean, it took me years myself to get to the point to realize that whatever I want to achieve, if I believe that it's possible, I will find a way. And for her and for many other people that I talk to, it's initially when you tell them, you know, if you want to do something, you will always find a way. Like literally everything is possible. Yeah, it might not be legal, it might not be smart, but it's possible. Yeah, and for most people, it's hard to grasp, and I think there it's the same thing. It's like people set their own limitations in their mind. Yeah, it's like, I don't know. It could simply be, you know, like if you never if for you $5,000 is already like you perceive it as life changing because currently you're behind on your rent and it would give you a couple of months freedom. Yeah, then if you own 5 shares. And you see the price is above $1,000, then you may look to justify it for yourself. Well, in January they said 1,000 is the roof. I don't see why it now should, or the floor, yeah, or actually the roof in that case. I don't see why it now should be more and so on. And then you just justify yourself to, I'm gonna sell now, especially if you see it in the start of like it goes from 1,500 already back to 1,900. And you're like, pooh, if I sell now, I still have like 4,000 something. But if like it looks like it's over, and I'm sure that there are just some people that are desperate and have no clue what they're talking about, blah, 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 and so on, yeah. So kind of like challenging, yeah. And then even, you know, like for example, the biggest example would be Deep Fucking Value with 200,000 shares where people, if he doesn't sell, I don't sell, yeah. But there's still, if you're really in the situation that you have the price so high that for you the payout is already life-changing in quotes, yeah. And then maybe you see, maybe he live streams and you see that he's still holding, but then your mind may come up with the justification. Well, he bought at whatever, $12 or less and blah, blah, blah. So even if he is wrong and it ends up at $300 again, he still looks at more than 10 million in profit and blah, blah, blah and whatnot. But for me, blah, blah, blah. So like people always hear what they want to hear and they see what they want to see. And I think that might be the case here. And I think, well, I don't think it will change anything overall in the result. It just means that if the price shoots or when the price reaches 1,200 and if the hedge funds are not automatically all margin called by that price level, but somehow still have, maybe they get margin called, but they have 2 days to get things back in order or something like that, yeah. I don't know. I'm sure they don't play by the same rule like you and me when we open a margin account somewhere at a broker with a couple thousand, yeah. And then you just do your Hail Mary, print naked shorts till, I don't know, your printers die, in quotes, yeah, and drive the price down. And I'm sure there are enough people that then will, no matter what DD there is and what proof there is, that will just, based on them seeing that as a money or an amount that right now makes a difference for them, will then smash the sell button, yeah. But yeah. And what is the link to the post? And I agree, but at the same time, this is a giant Nash equilibrium experiment. It depends on what people are willing to, with shares they have. Yep, under the assumption that the stock still is shorted more than 100%. That's like the big assumption, that literally the hedge funds, if they get, or if they're forced to cover, have to buy every available share at least once, yeah. Then every price is possible. Then one buy limit or sell limit order at $1 million for one share would cause the price on the chart to reach $1 million. Yeah? Not that anybody is crazy enough to set that limit order, but just saying here. And yeah. So, but yeah, and I'm still looking for the post. I'm just, talking blah, blah, blah. So do you think they will be able to stop it around 1,000? I don't think they can stop it, but I think, like, based on Elliott wave principle, if we believe in Elliott wave principle, then we would say we would have our wave 3 at around the 1,000 level, yeah, like this wave 3 here. And if we have this wave 3 here, it needs to be followed by a visible wave number 4. And a wave number 4 would require, our wave 2 here would be I don't know, I wouldn't say this is a complex correction compared to what we suffered through here, yeah. So technically that wave number 4 should also be a complex correction, which means that could be from 1,500. And again, I would need to read up on that, but again, if we have an extended something wave, then the wave number, or then wave number, no, that was for wave number 2, yeah. Or was it for wave number? I need to look that up again, yeah. But basically, there is something, and I'm, as you see, not 100% certain about the exact rules of it right now. But when we have a corrective wave, that it apparently it should be wave number. No, actually, it should be wave number 4, yeah. So if we look, this wave number 4 here, and then here we would have. I don't know what that 1, 2 here is. Oh, it's this one, yeah. But basically here we would have a 1, 2, or 1, 2, 3, 4, 5. There is one rule where we say when we have an extended 5th or 3rd wave, I'm not sure which one, then the corrective wave number 4 will often reach the area of wave number 2 of the previous impulse. And on average, the wave number 4 would reach the area of wave 3 or of wave 4, so between point 3 and 4 of the previous impulse wave of a lower degree, which means if we go up here to wave number 3, the previous impulse of a lower degree would be this one, yeah, and then wave number 4 would be supposed to go into the area of 350 or 348.50 to 100 something, 119. And so if we use Elliott wave theory, we go up to 1,000. Then based on the rule of alternation, this is a fairly straightforward corrective pattern, which means this one should be a fairly complicated corrective pattern, which could also be, it could be that we have a huge drop, huge recovery, yeah, a smaller drop, that it's kind of like a flat, and then just gets extended a little bit, maybe with hedge funds printing more naked shorts or whatever, to make it a little bit of a double free or a sideways movement before we then have the final takeoff. So it's like, it's going to be fun to figure that out, but thankfully we got more practice with corrective patterns, the last couple of weeks. So, and yeah. And the point still is, do they play by the same rules? Like for you, your balance kind of like gets too small, you instantly get margin called. They might have something like, okay, you would now get margin called, you have 2 days or 1 day or 6 hours or whatever to deposit more funds or manually close positions or, yeah, which would then mean for them, or print more, yeah, like create more shares out of thin air and create naked shorts to get the price down so we're not margin called anymore, yeah. And yeah, anyway. without any illegal actions like stopping buying or more shorts or others. No, I don't think that they will be able to stop it without any illegal action. I think anyway that we would have some people selling around the 1,000 area, some people still not knowing what trading halts are and panic selling once there's a trading halt and so on. Yeah, but I don't think without anything like printing massive naked or massive shares to naked short or buying restrictions, that there's no way that they could bring it down. Like, it's like tricky, yeah. Like, but I don't see any way. Yeah, and I think I think once it passes 400, they can't stop shit. I don't think so, because we already had a price north of 400 where we in January would have, in my opinion, triggered the short squeeze, where then the buying restrictions conveniently happened for them. Yeah. And they definitely made money there. They definitely shorted from 400 down and so on. Yeah. And definitely maybe at 30, maybe at 100, wherever, took some profits. So they definitely built up a little bit of a cushion with that dick move, in my opinion. And so I don't think 400 will trigger anything. Like, I think we would need to be definitely north of 500 to trigger something here. Yeah, I mean, consider things like the earnings call, yeah, or other events where MarketWatch announced the drop before it happened, yeah, which means they planned it, which means they were also able. So where was that drop? I think, no, yeah, we would have to zoom out again for that one, yeah. But which means if I already know that I will create a drop in that direction, well, I short and I already cover at the bottom to make profit, insane profit, yeah. So, and that fills your account, which means you have a little bit more tolerance to reach a squeeze. So while there might be smaller hedge funds or some other people for some reason that don't have such big accounts and are like literally just, in my opinion, idiots and shorting the stock for whatever reason, yeah. But I think for the real interesting margin calls there, we'd have to like go definitely beyond 500. So, and again, assuming if they have something like, hey, you would be margin called, you have X hours or 1 day to get things in order or manually close positions or whatever, then maybe we would trigger it at 500, but it will not happen because they still have time. And yeah, so that's why I think like 400 or so will not be their price. Yeah, there will be those, but I think once those people fall out, the rocket will go. Yep, exactly. And as said, like if there's really still more than 100% shorted and they are forced to pretty much buy every share back at least once, then every sell limit order that is visible to the market, that's the point. So it needs to be like a real sell limit order, not just within your broker, some kind of I want to take my profit here, would execute, which means my one share that I bought at Interactive Brokers for $1 million would also execute, yeah, which would then in case cause the price on the chart to show $1 million, and even if it's just for a short period of time, and if I then set a high take profit in eToro, which I can only adjust over time, yeah, because I cannot add more than 1,000% profit there, that would then also execute because the price went higher, and it would then sell at market price once the price went higher, which could then be higher than what my take profit is, but could also be slightly lower, yeah. And yeah, but yeah, so, and yeah, definitely some people will sell, some might do it at 500, so like those random or those predetermined psychological levels. We can even see it, well, I don't think I have all the data, yeah. You can even see it already here, like how predictable human beings are. When you look at the position size, yeah, and you look at $169, you see it's four shares, whereas at all the uneven market orders, it's like 111. You look at 168 more, yeah. What do we have here? 167, 165, then there 166, and the same with selling, yeah, 172, 173. So it's like where common sense, if you like really look for example, I entered $1 million here, which means if there's enough idiots that enter $1 million at their sell limit order, yeah, it means there's a chance that I was not the first idiot, and therefore other people's shares get sold first, and if not more than 100% of stock has been shorted and blah 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 and so on, then maybe my order doesn't execute anymore. Yeah, so it would technically be smarter to write 999,999.99 so that my order is not on a pile of other orders but is one before and gets executed first, and I only get 1 cent less, but with the guarantee that my order is executed before those other 21, for example, yeah, or how many others there are. So, and yeah, so that takes us to Plato's allegory of the cave. There were a group of prisoners chained inside a cave and were shown shadow puppets. These prisoners came to believe the shadow puppets are the real world. Ah, cool. One person escapes and goes outside. He sees the blue sky, the trees and grass. He's amazed. He returns to the cave and tells the prisoners. They don't believe him, yeah? Ah, yeah, that actually makes sense, yeah? But it's literally the same when people first said GameStop could go beyond 1,000, yeah? And it's also, if you remember, I mean, some of you saw the original version of Jeffrey Kennedy's Elliott wave labeling of GameStop, where he had a mistake and therefore re-recorded it, but in the original version, he actually starts the video. So a friend asked me if GameStop could go beyond $1,000, and my initial answer was hell no, yeah? It just seems so unreasonable based on what we've experienced from other stocks, or from if you already traded before, yeah? Like considering that a stock in a year from now or in 2 years from now makes more than 100% return because the company has a lot of potential, they have a lot of attention and blah, 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 yes. But considering it's like, okay, in a few weeks or months from now at worst, to basically make 500 or thousands of percent return, considering from the current price, not even mentioning where we started from, yeah, it's just so unheard of, or such a rare case, nearly so that kind of like, yeah, even professional people are likely conditioned to think it's like simply not possible. And yeah, so their minds have been closed, yeah. It's the problem that most people have. They think about what's not possible instead of like how could it be possible, yeah. And it's easier to say, no, that's not true. Or I have the same problem, like some of you know a project called Pi Network, which is a mobile cryptocurrency that aims to become a cryptocurrency that you get by just pushing a button on your phone. Yeah, it's kind of like for literally pushing a button, you get something that might be worth something in the future. Yeah, now there's no guarantee that it will be and whatever and so on. Yeah, but the point is, it's no time effort. Once per day, I open an app and I push a button, which takes me 5 seconds. Now, there's also a closed community called the Pi Lifestyle, or not a closed community, but a community that already uses that non-existing cryptocurrency, because it's not yet a real cryptocurrency, as payment. Yeah. So there were a few users within the Pi Network project that have the ability to already transfer coins. So they got that as part of an early test. Yeah. And so how they do it is, if you have Pi coins, you cannot transfer them right now because the majority of users doesn't have a transfer feature. Yeah. However, within the community, you can say, okay, I want to buy this or that or whatever. Yeah. So there are some people that sell stuff like t-shirts, fabrics, computer services, web design services, and so on. Yeah. So you can say, I want to buy that service, and then basically a ledger entry is created that says, okay, you bought that service, and the user that can already make transactions, so one of those beta users, basically lends you the coins. So, and again, they are not real coins yet, so he already pays that other user for you, and there's an entry, so once you are able to transfer coins, you are obliged to pay them back. Now, I know there's a lot of flaws with the whole thing and what could go wrong and blah 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 and so on, but the point is, I used that, and I used 0.5 Pi of mine to buy 2 like light mounts. So it's like the things that I have attached at the outsides of my desk here that hold my studio lights. Now that those 2 things from Newark cost like 50 euro, yeah, so with shipping 54 euro or something like that, and I paid 0.5 Pi coins for it. So basically I had like like an exchange rate of 1 Pi is $100, yeah. And I literally made a video where, first of all, one video where I walk people through how it works and how I place the order, and a second video where I unbox that stuff and again show proof of the Amazon order, show proof that I transferred it in Pi. And the way it worked for me is I actually paid them with my credit card, but on the same day I provided payment proof to the guy that accepted the Pi from me, so the Pi coins, and he reimbursed me instantly the same amount via PayPal. So technically I didn't pay euro for those newer stands, but I'm currently owing 0.5 Pi that at some point when I can transfer those coins, if the project doesn't fail and so on, have to pay back. But still, for people that are skeptics, instead of putting some effort, there have been like more than 1,600 transactions so far in that community with that not even finished cryptocurrency, yeah. But so instead of putting in some effort and doing some research and seeing if it's true, could there be something, they literally don't even bother to watch the video, but leave comments like, this is a scam, that guy is lying to you, and so on. And it's just human nature. Like, there's a lot of people like that somehow, for whatever reason, instead of believing, like just for a second assuming, wow, that would be great if it's true, let me verify it, they simply, that's too good to be true, that has to be a scam, yeah. But yeah, I can't help everybody, like there's a lot of people like that, so yeah. And so their minds have been closed, yeah. Thanks, Nans, all I've been reading is philosophy, psychology, stoicism, and Buddhism books. Interesting selection. I suggest the 48 laws of power, never split the difference. Yeah, haven't heard of that one. I'm gonna write it down on my reading list thing. Reading list thing. The 48 laws of power, and I guess never split the difference is a different title. Yeah. So. And interesting experiment with that story, and if it's truly shorted as we believe, we may pass the price of Berkshire stock price. I don't even know what's their price right now, but Berkshire, let's check. Now, like on eToro, Berkshire Hathaway is 271, so like I don't think that's kind of like something like an amazing, yeah. Anyway, the Tao of Pooh and the Practicing Stoic. Okay, I'm also going to write those down. I cannot promise that I will get soon to them, because at the moment I'm in a phase where when I read, I try to read some fantasy books to get my mind off other things. But it's always good to have some recommended books on the list. Practicing Stoic. Great. Thank you for the book recommendations. It's because from a fundamental they aren't wrong, but GME is not a normal case due to the shorts. Any investment medium is a gamble on the belief of the future. Yeah. Yeah, but I think that's, you know, like that's from the fundamentals, of course, they are not wrong. From the fundamentals, Tesla should also be likely at, I don't know, like way less than it's worth now. But it's kind of like with news events, you know, if we know there's the next, not talking about GameStop because there obviously things are already so, like a little bit different, but take any regular stock and then you know the earnings call is coming up, and you know, or the expectation is that the earnings will be super positive. And then before the earnings come up, suddenly people are reminded that the earnings come up and the expectation is super positive. So they start buying, so yeah, buy the rumor, yeah. And then the news come out and it might be positive, but it doesn't cause another surge because people already considered that news, yeah? So it's already in the price. And for Tesla, people already consider like what kind of, or expect certain innovation and changes created by Tesla or caused by Tesla, whatever, and therefore the price is already higher. And so fundamentals is a tricky thing because they very rarely nowadays reflect like the true fundamental value of the company, but always already consider what either actions of the company or marketing made by the company made people expect of the company in the future. The same thing would be with all the vaccine companies, like all those vaccine producers, where at some point then I guess people just, I mean at some point it would have been a smart move actually thinking back, to simply look up all the companies that were working on a vaccine and evenly distribute your money among all of them. I would need to check, but I would expect that on average you likely would look at a more than average profit compared to investing in the index during the couple of months where the race was on with the vaccine, yeah? And GameStop, and if you're doing investments, you cannot just say, well, no, GameStop cannot reach $1,000 because the fundamental value doesn't support it. Well, then you suck at being an analyst or a trader because you don't consider, yeah, like, I mean, in general, if you're asked and their first response is like that, then maybe, but
if we consider, if you did 5 minutes research starting January about GameStop, you instantly saw that it's about the short squeeze, and therefore you already should know the only thing that matters is the short interest. How much is the stock shorted? Is there a squeeze possible or not? So yeah, but yeah, so an investment medium is a gamble on the belief. Yeah, exactly. So yeah. And by the way, while we were talking here, we had a few more candles. Now technically it's possible that this here, our wave 3 basically moves here. Yeah, it's going to be a little bit tricky because we had this huge gap up. It's kind of like going to be about like how important is the look of a wave to us. Yeah. We could technically say this here is A, B, C, and we would have a corrective pattern here. However, we as mentioned, we are looking so close that we're not able to fit another 1, 2, 3, 4, 5 to confirm this wave 3. So technically that could be 1, 2, and like of a smaller degree, but then things would get even more out of proportion. So most likely I would say that our wave 4 actually ends here with this low point, and that this here is going to be the next impulse, or actually wave 4 might end here at this low point, yeah, and that's here is going to be 1, 2, 3, 4, and we're currently working on wave 5. Now here it complains, wave 4 terminates with, okay, might not work like this unless it's an ending diagonal. But again, we're looking so close that I might not be able to label this part up here as anyway. So, but technically then wave 4, I'm gonna delete that channel. Wave 4 would be this point. And we can also then use, again, Kennedy channeling technique. So that would then assume if we connect point 2 and 4 with a parallel through point 3, then we get the destination channel, and basically the target should be the top line of that channel. Now, it's a little bit tricky because if we assume that our wave 4 goes till here, yeah, so the orthodox end of our wave 4, then obviously it moves that channel and makes it a little bit more, let's say, reasonable. But just from the look of it, I would actually say that wave 4 ends here, and this literally is another, yeah, I mean the retracement here is a little bit further than 61.8%, but that this here could be 1, 2, or if we look a little bit bigger, yeah, we go a little bit below the 38.8, so it could actually be that this one here would be then 1, 2, and currently we're again waiting for 3, 4. So on this small level, basically we were waiting for a breakout from this channel to confirm that we are in wave 3. And that 3, 4, 5 would in the end basically finish this brownish golden wave 5. Yeah? But it's a little bit tricky because we're looking so close. So the bluish stuff here is more like a guesstimate than anything else. And have to see how that plays out. But definitely possible, like just on first glance, to say something like either 1, 2, but then we have the problem with this part here, so rather 1, 2, where also the retracement as shown is a little bit more accurate on the 38.2 line. And if we were to take this here as the end of our wave 4, then we see that our retracement here falls short. And if we were, or it could literally be from here, yeah, so because there we would have a nice 68.1 or almost nice. But then the problem still would be that this candle goes into the area of here, which we would need an ending diagonal here to make sense out of that. I think we'll see, depending on where we go here, because, well, let's check real quick. If that would be our base channel, so that would be 1, 2, then we would technically already be now in our wave. Yeah, then that cannot be wave 3, so that would be up. So it's more likely the way like it's labeled now, up, that we have wave 4, and this here is 1, 2, and we're currently working on our breakthrough to wave 3 here, and which, yeah, like don't know exactly how far we go. And then in the end, like it's like a little bit unlucky labeled now here, but this wave 5 here, so the bluish wave 5, which also is the brownish wave or golden wave 5, should be somewhere in this channel in the end, yeah, if everything is the way it's supposed to be. So, which is the reason why I meant that maybe the trend channel is somehow like this, because it flattens the channel a little bit and yeah, makes it easier to come through, because to reach that channel, we see that if we do it in this candle, we would need to reach at least, yeah, close to 200. In the next candle, we also would need to reach at least something like that. So yeah, so likely that we have to make an adjustment at some point with the 0.4 and likely to move it somewhere here further. Yeah, so on this candle, but we will see. So I'm still, okay, so I watched The Big Short for the first time in December. I instantly felt sick. I couldn't believe how the whole financial institution is propped up on tissue paper. Yeah, it's like, I think Henry Ford said it, if people understood how our financial system works or how our system works, we would have a revolution tomorrow, yeah? So something along the lines. Hi, oh, that's going to be hard. Torgier, what do you think are the chances of something actually changing the financial system after the GameStop squeeze? I suspect nothing will happen and it will just get back to usual. I think it's the same, you know, there will be, maybe they find a scapegoat, like obviously hedge funds will try to blame deep fucking value or Reddit or the retail investors and so on, and will beg the government to save their assets. I hope that when President Biden tweeted about that the American whatever economy or dream or whatever was built by the American people and not by Wall Street, that he will stand by that and not save the assets of the people that caused all of that, so that at least some of them suffer. But the problem is a little bit, it's like not only in the financial market, it's like everywhere. For example, if you think, I don't know how it is in the US, but if you think about in Europe, yeah, some guy might start a construction company, yeah, so like, and then he gets a contract from you to build your house, and so he hires another company that provides him with machines and tools and this and that, and you pay him, and he then just does some fancy accounting to get some of the money out of the company, and then when he's supposed to pay his suppliers, he just declares bankruptcy, yeah? And then the suppliers in return have to declare that they are good businessmen and honest businessmen and just want to do business, you know, but eventually if they have enough such clients, they also are forced to declare bankruptcy, because suddenly they don't get paid and they cannot pay whoever they owe and so on, yeah. But the first guy that declared the bankruptcy, what that guy usually does is, first of all, he transfers everything he owns, like his house, his car and whatever, to his girlfriend or other family members. So technically he doesn't own anything, so nobody can take anything from him, yeah, and still lives a nice life. And very often, if he had a limited where he himself, unless somebody can prove that he did the things on purpose, has limited liability, yeah, just starts a new company and pulls the same stunt again, yeah, or starts a company on the name of one of his relatives, yeah. I once had a client of mine for e-commerce consulting and so on that, I mean, back then it seemed like a lot of money. Nowadays, thankfully, it doesn't seem like a lot of money, but basically the invoices piled up for consulting calls and so on to 2,000 euro, a little bit more. And he ignored the payment reminders and so on. And on one of the calls, I simply asked him and so on and blah, blah, blah. And I told him, like, I'm really sorry, but if you don't pay this week or by tomorrow or something, I'll have to give this to a lawyer. Yeah, like, I'm sorry. Yeah. And he simply said, well, try. The business is in my daughter's name. And yeah, like, I don't have any money. So yeah, so pretty much he already had declared bankruptcy, and it was kind of like a failure on my end to do my due diligence to look into him as my contractual partner here, yeah. But the services I did were basically for his daughter's business, which he ran just on her name and so on. And so the only solution for me was to just say, okay, have a nice life, bye-bye, and just accept that I will never see that money, yeah. And there will always be people like that. So even if some people might get screwed or might even get jail sentences or something, I don't think anything will change, yeah. And even if the law changed, there will be new loopholes. So, and I think the only way things could really change would be if we would have a blockchain approach to stock trading, so that you literally have a public ledger where every position is visible, that there is no way for dark pools, or so instead of basically shares issued by the company, it would be like coins issued. So there's a fixed amount, you cannot magically make more appear and so on. Yeah, it might be tricky to come up with a solution how short selling could be possible in general. So that short sellers basically still that you can short stock, but not more than 100% and so on. Yeah. But only then you would have a blockchain with all the information. There would be no dark pools and this and that, yeah. And yeah, then it might be getting better. But yeah, then still, you can still do what hedge funds and bigger players did all the way before. Like spread some negative news to get the stock price of some company to fall a little bit, start buying, spread positive news to drive the price up further, start selling, and then again start spreading negative news so people drive the price down again. At some point, if you have enough money, you can move the market. Yeah. I mean, sure, there are regulations in place that you alone are likely, if you like things like if you, I don't know, own more than 5% of the company, you have to report it to the SEC or something like that, yeah? Well, then just set up like 20 different companies and each of the companies buys 1%, yeah? So that you don't have to report anything, and overall you own way more than 5%, yeah? So, and if you have the money to buy 5% or 10% of the company, you also have the money to hire the people to set up that infrastructure for you. And nothing will change that. So there will always be stock manipulation, because if you have enough money, it's definitely, you just have to look for a company with a market capitalization where the money you have is enough to cause movement. Yeah? And yeah, I think crypto may be a solution, but there will always be corruption and shitty people, of course. Yeah, yeah, but the benefit would be with crypto, or with not crypto but blockchain. So it's not really crypto, yeah, but simply that you have like not centralized but decentralized databases that are visible for everyone, where every share sold is showing up. Yeah, so and bought. So and also then as a result, every trading account would be uniquely identifiable. So if I place an order, while it may not show my name, but if you know enough of my trade history, you might be able to figure out exactly my wallet ID based on simply the movements that you can see on the blockchain, and then you would see who bought and sold. Yeah, but again, then you just would have 15, 20 different accounts, and you can still, without being obliged to report something, still do a lot of shady things. Yeah. But yeah. Hi, Michael. Great to have you here. Good morning to you. And we just have to, yeah, like, I think the problem is, you know, like, there are such things like, this is why we can't have nice things. Like, imagine you have a restaurant where you have a great menu and the offer is you can have unlimited refills for your drinks. Yeah. Now the majority of people will appreciate that. Some will not have any refills because they're satisfied. Others will have maybe 1 or 2 refills, and there will be that one douchebag or that one douche woman, yeah, that wants to take advantage and 20 refills, and oh, it doesn't mention that I cannot bring my own bucket from home and fill it here, yeah, and so on, until the restaurant simply has to say, I'm sorry, we have to say no refills anymore, yeah. So where one person ruins it for everybody. So this is why we cannot have nice things. Same is like, why do we have speeding limits? If you use common sense, yeah, you don't need speeding limits, you know. Okay, it's like an area with buildings and where people walk on the sidewalk. Well, you don't drive 100 kilometers per hour or something like that, yeah, because there could be somebody crossing the road, yeah, or it's raining or it's foggy and you only see 20 meters. Well, you don't drive so that braking takes you 200 meters, yeah, or stopping takes you 200 meters, and yeah, so I don't think a lot will change, because even if there is then there have to be some regulations. So either because the politicians actually want to change something, one option, or if that's not the case, they have to make it appear like they cared about what happened and that they are doing something about it, yeah. And but it will not change a lot, in my opinion. It will just, yeah, like there will be just some loopholes closed, and then people just use other loopholes, yeah. It's always been like this. It's in every aspect of life. And you know, like, it's not just the rich and wealthy, it's like really in every aspect. I see that, for example, in Ukraine, or I saw it also in Thailand. Like literally here in Ukraine, when you go to the driving school and you want to make your driving license, at the driving school they ask you, like, for your medical exam, do you want to go there, or do you just want to pay? So, you know, because they obviously have your eyes checked, so if you need glasses while driving, so you can just at the driving school pay, and you don't have to go to the doctor, and you get the certificate that you are fine and everything is in order. And also, if you want to pay for the exam, while you still have to show up for the theoretical exam, then you just sit down on the computer and you don't do anything, and somebody logs in remotely and answers the questions for you. And for the practical exam, while you still have to drive yourself, and if you really make bad mistakes, you still are not able to pass. But for a lot of mistakes where people that don't bribe the police would already fail, you will still pass, and so on. Yeah, and so you see it on small scale that the average citizen takes advantage of like loopholes or bribing and so on. And on big scale, it's the same thing. There might just be in many countries that it's not possible, so that just got invalidated, the blue one. In many countries, it might not be possible for the average citizen to come up with enough money to have a reasonable bribe, yeah. But it's the same everywhere else, yeah. I just yesterday had a conversation. We had an acquaintance visiting, and basically for his birthday, his family bought him like a delay so that he doesn't have to go to the military. In Ukraine, there is still military for 1.5 years, yeah. But now he got a delay until his whatever for the next couple of years. And then when that is over, he can pay another $1,000 to get a delay till he's 27. And when he's 27, he doesn't have to do it anymore at all, yeah. And so people will always, when they can take advantage for themselves, it's okay. But when it's somebody else is doing it, it's like, oh my God, they're cheating the system and it's so unfair, yeah. And human nature, there might be people where, when my wife made her driving license, I told her if she wants to, she can bribe and pay for the license, but she should also know that I will definitely tease her with it for the rest of her life. Yeah, and so she didn't bribe and learned for it and passed. I mean, she didn't pass on first try in the practical exam, but I guess that's also a tactic that they have here to let you fail, so that they then ask you, well, maybe consider bribing us, you know. But yeah, she passed and she earned it. And then other people that made the driving license, most of them that I know here, paid for it. And yeah, so it also makes her proud. Yeah, so, and I think, again, like, yes, it's a different thing if we talk about like hedge funds manipulating an entire stock, and especially during a pandemic, trying to drive it into bankruptcy just for a few tax-free profits, not even considering remotely how many jobs would be lost because of that, yeah, compared to some average person bribing to not have to go to the military and so on, yeah, or not have to learn for the theoretical driving exam or something. But at the end, it's still human nature. It's still somebody wants something and he has an unfair advantage or an unfair way of getting it, and he just doesn't care how it affects others, you know. Like everybody that bribes the police here for the driving license makes it harder for the people that actually want to maybe they don't have the money to bribe the police, or they just want to do it without bribing, because again, the police that does the driving exams here is likely inclined to let you fail the first 1 or 2 times, even if you didn't make real mistakes, in the hopes that you might also bribe them, because it's in their financial interest and so on. But if nobody would bribe them anymore, yeah, then they would just do their job and okay, whatever, either you passed or you didn't, but not considering, well, if we don't let her pass this time, maybe she gets frustrated enough to bribe us, yeah. So yeah, and if this is 2008, but even worse, I feel there will be definitely some change. Have you read the Everything Short? I don't know if there will be definitely some change. I think like, while we didn't have like a housing market crisis, but I think throughout history, like there's already enough examples on the stock market where simply human nature and greed caused the whole market to collapse to some extent. Yeah, like some extent, like huge, never before seen drops. Yeah, and might just be the same here, like so that it's then, and yes, there will be some changes, and there might be, people might be scared for some time and invest a little bit cautiously, but then eventually it's forgotten again and we go back to how things were and the big players find new loopholes and there we go again and we'll have the next crash. Like if you think about it, Elliott wave theory pretty much says that, like if we were to not look at GameStop for 3 months, but if we were to, I'm not even sure how much historical data we might have, but if we, let's check if we have any data there. I'm not sure if I'm subscribed to indices. It's not stock, but index, and okay, SPX. Yeah, I'm not subscribed to that data. But if we were to look at the historical chart there and we label Elliott wave theory, then by definition we need certain quite big drops as our wave 2 and wave 4 of bigger degrees. And to accomplish them, or to accomplish drops that are big enough, we need some kind of crisis. We need, I don't know, like a war, or we need some kind of market collapse, like .com bubble, housing crisis, GameStop crisis, I don't know. And so I think nothing will change. So nothing really big. And we may make a lot of money, but a lot of people will lose their jobs, homes, and many deaths. Yeah, but to be fair, the people that lose their jobs in this case are the people working for hedge funds. So it's not that it's people, and what do they really do in terms of kind of like a productive job that kind of like helps build or grow the country? And especially if their job is literally to try to drive other businesses into the ground for profit, then plus everybody makes his own choices, like it's like, I mean, I don't want to drive anybody into suicide, of course, but if you think about it, if you live within your means, and you don't max out your credit cards and you only buy things that you can afford and so on, then even losing your job will not drive you to jump off a bridge or something, and you'll just, well, it sucks. Maybe you have to sell a few of the things that you own. Maybe you have to get rid of a house or a car or of your iPhone or MacBook or something like that to stay afloat. But eventually you find a new job, which might not be as great as the old job, and from there then you just rebuild. But if you obviously live above your means and everything is financed and on credit and so on, well, then you're screwed. And financially. But if you only define your value and your life's value based on if you live in a nice house, or if you might even be homeless for a couple of weeks or months or whatever, then I think you have other problems anyway. So, and I believe this will at least put a good incentive for universal healthcare, universal basic income, and blockchain integration. I don't think that will help with basic income. I think basic income is an issue, like I see it in Austria, for example, where if you are unemployed, you receive for up to 6 months 75% of your last year's monthly salary, and then there is the point where then if people lose their jobs, and after that you still receive some stuff, but it's like then might usually lower and so on, but there's the point where then people get jobs offered that are something they don't like, maybe working as a cleaning lady or man or whatever, or working hours they don't like and so on, and the job might pay them €1,000, but the unemployment benefits are like €750 or maybe 800 or maybe 600 depending on what they earned before and so on. And then the logic literally is, why should I work 40 hours for €200 more? Why should I work 40 hours per week for €200 more, and then considering that I have to spend money for driving there or paying public transportation to get there and so on, so I actually effectively only earn €100 more maybe, but I need to work 160 hours per month. Or I just sit at home and I don't have the €100 more, but I can do whatever I want. And so that's the problem I see with basic income. I think there should be, of course, some kind of social security, and that like nobody ends up homeless, nobody has to starve. But it's a small line to walk between making sure that as a society we take care of each other, of people that just have tough times and so on, and creating a system where literally lazy people can just lean back and take advantage. There have been cases in Germany from unemployed people that received unemployed benefits but lived in Florida, yeah, and simply got doctors to state for them that traveling back to Germany would not be possible under their current health conditions. And so they had a nice life in Florida, apparently also earned some money there, but still got unemployment benefits every month from the German government, yeah, until some reporters made a story about it, yeah. And so really a fine line to walk. I think we should take care of people. I also think everybody is responsible for his own life and his own fortune, yeah, or with some exceptions, sometimes you have bad luck. I'm not saying that every person that isn't successful, it's their own fault, or every person that has struggles, it's their own fault. So some things are outside of our control, and there should be a system that takes care. But yeah, like universal income is like a slippery road to creating a system that can easily be abused. Yeah. Now, quickly before we move on with the comments, it's possible that here is actually still our wave 4. Yeah, so I'm going to delete that real quick. And that, I mean, we would have to look closer, but this here could be a flat. So where we have A, B, C, where basically point B is higher than the preceding wave. Yeah. It could also be, if we remember that when we have an extended third wave, then wave 5 very often is similar to wave 1, but then actually, I'm probably measuring it wrong, but then actually it would already stop here. So, I mean, technically we would fulfill, that here would fulfill, okay, could be wave 5. Yeah, we would have roughly a zigzag here, 1, 2, 3, 4, 5, but that would need to be an ending diagonal in there if we are even able to label it, which happens in 7% of cases. So then would that be 1, 2, and 3, 4, and 5, which actually looks quite nice in terms of when we connect the points and draw a trend channel, then our points from 1 to 5, and yeah, so it's possible that this is the case, and here we now see the ABC correction, because that goldish 1, 2, 3, 4, 5, although that one is not nicely on a trend channel, yeah, we'll have to, so that the bigger one here doesn't have the right look, but technically that could be the next corrective pattern here, basically wave 2 of 1, 2, yeah, and yeah, back zone. So we make a lot of money, I believe. Back in 2008, there wasn't Twitter, Facebook, Instagram, Reddit, there wasn't any record of what's happening. Yeah, but to be honest, like, you know, today you have a post go viral about, I don't know, like a poor kid in quotes, or somebody that had a terrible accident and can't afford the surgery or something like that. And everybody's like, oh my God. Like, think about it. Think about the few things that happen, like since we already had Twitter and Facebook and so on. Like after the Fukushima disaster, yeah, the atomic reactor in, I think, Japan, if I'm not mistaken, yeah, Japan. Like in Austria and all of Europe, people bought stickers like "Say no to atomic power" and so on. And it was like people maybe even changed their profile pictures on social media to point it out, in quotes, yeah. And who cares about it today? Yeah, like honestly, like who cares about it today? Who is like still outraged? Who still? I'm not saying that I'm better, yeah, but who really checked if there is still radioactive water leaking into the ocean and basically poisoning the fish and everything we eat from there? Yeah, so, and the same will be there. There will be the same as with the housing market. Back then, it was like, yeah, huge story in quotes, and it definitely was. But the people's attention span became so short, you just show them something else to distract them from this. Yeah, like, well, some people will always remember because they were part of that movement or part of the people that suffered the consequences. Yeah, but the majority of people, it will be like a news article that they read today, and in 2 days something else is popular and they already forget about it. Yeah, so, and yeah, but yeah, so, and this time is different. So while obviously it would be great if it was, I just don't, based on experience, it kind of like your statement would assume that we learn from our history. And Elliott wave theory, for example, when it comes to stock trading, says we don't learn from our history because we have the same patterns repeating over and over again. And other parts of our history, it's kind of like the same thing. It's on a small scale. It's when I was a teenager and I wanted to do something dumb and my parents or grandmother told me, oh, that's something stupid because of this and that. And I told them, or I thought, well, you are so old, you don't know anything. It's our generation, it's modern, and it has to be like this. Only to 5 years later realize, oh, she was right, yeah, or they were right. Yeah. And I think that's one of the issues. It's the same thing, like, I mean, I try to keep the stream politics free, but it's the same thing if you think about certain politicians claiming that the whole news is fake news and yeah, like everything, all the bad information, like the paradox to say, like to be a Christian, for example, and voting for a person that has repeatedly cheated on his wife and has, like, I don't know how many allegations of sexual assault and so on, yeah, but simply because whatever, like he constantly, or that person constantly focuses your attention on something else. So I think we didn't learn from history, and we won't learn from history now. It may seem like that for once the whole thing pops, for a couple of weeks, months and so on, there might be hearings and new rules and so on. But 5 years from now, again, the people that were involved, yes, they will remember, but the rest of the people will just not care anymore. And then maybe 5 years, maybe 10 years, I mean, we would have to label it out with Elliott wave theory when we expect the next big drop in the Standard & Poor's or Dow Jones. Yeah, so, and yeah, so yeah, I read DDD at Captain Caliente. Really hope it happens. Even though I don't live in the US, it will surely impact most of the Western countries. If have something gotta happen, lol. If not, I'll just invest in crypto exclusively after on non-American stocks. Crypto actually has the downside that there is enough American market makers or investors involved as well, and so you could technically only invest in other stocks in Europe or so, but they are not. There is not such volume moving, and obviously, then it's kind of like about if you start a business in Germany, it's way harder than if you start a business in the US. Like taxes and the other fees and stuff that you have to pay really make it harder for you as a company to grow. There's not such an active scene of like investors, so that you have a great idea, you build a prototype and somebody gives you 100 million or 10 million or so to get started, but it's more build everything from the ground up, and you need to be profitable every year or you're going to be broke soon, yeah. And that's why you have more of those fast rising and bigger companies in the US than in other countries. So even if nothing changes, yeah, as long as I don't get at some point totally disproven in terms of Elliott wave theory, I will still trade US stocks as well, yeah. I consider it an advantage if you know that things are manipulated to some extent. But yeah, if you diversify properly, in the end, like my investing is about like making profit for me and reaching financial freedom for me and my wife in that case, so that we can do in the future whatever it is we want to do, and that we don't have to work anymore, but that we can work when we want, and hopefully that we have enough money to also do a lot of good, to provide jobs for people that then work for us and help do a lot of good, to maybe set up a foundation that deals with online fraud and scammers and stuff like that in all the countries worldwide and tries to get them to justice, to, I don't know, maybe my wife loves cats, so maybe support or build an animal shelter or something like that, yeah. So, but I do it for profit, so there's always like, I might dislike how certain things are in America, but if I then consider the way smaller movements, in my opinion, or way smaller selections of interesting stocks in the European market, I would just hurt myself by being too, I don't know, like, yeah, I mean, yeah, like being too picky then, just because they have practices that I don't agree with. They won't change it just because I don't trade there. So just makes it easier for hedge funds to manipulate things further if there's less retail investors interfering. So, but yeah, so blah, blah, blah. And to be honest, most hedge funds people have a skill set that they most likely will be able to get another job. Yeah, hopefully, if your only skill is literally just, I mean, if you're working at a hedge fund and you kind of like try to find companies and so on, technically you should be good at trading. Yeah, like, while maybe within your job at a hedge fund you are suspected or supposed to find companies that you can smash into the ground because it's more profitable, yeah. But you should then also be able to do your fundamental analysis and find companies with huge potentials. And yeah, like even if you don't have a lot of money, you could start a YouTube channel about trading where you share what you know. You could become a popular investor on eToro and basically starting with as little as a few $100s, start to build up your portfolio, get people to copy you, get paid from eToro for people copying you and so on, and grow from there. You might have a challenging time ahead, yeah. But definitely, if you're not dumb as bread, then you will not starve because of that. Yeah, and only if you were like literally living above your means, everything is on credit, you don't own anything, and you're hugely in debt already, then it will likely be like a challenging and horrible experience, but still something to survive. You know, like it's not that they chop off your head if you're broke. So, but yeah, so. I'm referring how the common man's 401k advantage. Oh yeah, that's something US specific. Yeah, so the 401k is like where pretty much you have your retirement money in a fund. Is something that I didn't think of entirely until you now mentioned it, because it's not common in Europe. Like we also have our retirement funds and so on. Yeah, and they invest. But they invest very defensively, so they basically have no noticeable return at all. But it's also, so it's not just stocks, but they also invest in other stuff, so that basically even a market crash, while it might hurt the fund, it shouldn't be too bad. Yeah. On the other hand, I also have to say that it's not like a 401k where you actually own the money, yeah, and can just withdraw it for some reasons and so on. But it's like really different. So that's a US specific situation that I didn't consider because it's US specific. And I feel poor for those people as well. Yeah, if they lose their life savings in quotes, so their retirement funds, because of a market crash, yeah, that obviously there should be some relief for those, yeah, in some way. Yeah. On the other hand, markets tend to recover quite fast in quotes, yeah. So it really depends on, do you rely on withdrawing money monthly from that 401k if you're already retired, or can you afford to not touch it for a couple months or even maybe a couple years, maybe 1 or 2 years, for it to recover reasonably. But yeah, I get that those people definitely didn't consider that as that. Yeah. So my mother uses to say, job or no job, you decide. Yeah, it's like the same here in Austria and Germany and so on, or in Europe, when I see people that are like, oh, it's so hard to get a job. Yeah, if you want to have a job, you will always find one. It might not be the job that you like, it might not be paid well, you might not enjoy it, but you will have a job. Yeah, when I was younger and my business was going so bad that I needed to make money somehow, but I didn't want to give up on the business, I worked as a waiter. I sucked as a waiter, but like I still took the job, worked for at least a week or two before it was clear for me and the owner of the bar/restaurant that it will not work out, got paid for the time, looked for something else. I worked in a factory that produces insulation for pipes, yeah, horrible job, starting work at 6 in the morning, I hate mornings, yeah, and physically challenging work and so on, but I still did it for the period of time that I had to get the money that I needed to stay afloat, yeah, and a bunch of other things in my life, yeah? Like simply because I needed a job, and then I found a job, yeah, and it wasn't always what I liked, and I wasn't always proud of it, and especially if you're like, oh, I'm an entrepreneur, and then your acquaintances learn or figure out that you're also a waiter or that you also work there and start to gossip behind you and so on. Nowadays I'm above that, and I understand, like, I don't care what those people think. I go my way, and in the end we'll see, like, at the end of the game we can see like who made the better decisions and who didn't, yeah. But yeah, so your mother is right, like job or no job, it's up to you, yeah. And I agree with your analysis about how society should kind of be with society, yeah. Yeah, but problem is everybody cares about themselves. It's like the little things, like if you have, I don't know, a flat tire and you're on the side of the road and you're some average or maybe, I don't know, like maybe a slightly disgusting looking dude, likely everybody will drive by and not stop for you. But if you're like maybe a 20-year-old girl in a miniskirt, yeah, likely some weird pervert or whatever, or like somebody that has his mind twisted wrong will stop instantly to help you because he somehow thinks then you owe him whatever, yeah, happy end, or I don't know, yeah. So everybody just cares about themselves, and it's like, which is also important to some extent, yeah. So I also believe strongly that it's important that your number one priority should be your own well-being and health. So, and happiness. So you need to be happy, and you need to make sure that you have your affairs in order in terms of like you don't have financial trouble. You don't have to be rich, but you kind of like you don't have to worry about paying your rent tomorrow and so on. Because only when you reach that stage can you be a help to your friends and family. If you are struggling yourself, you're not going to be a help to them. You're just going to like you're going to try to help them, but you don't have enough financial freedom or whatever to actually help them effectively, and it just makes things worse for you, and they suffer, you suffer. So some selfishness and some taking care of yourself first, in my opinion, has to be there. But like there needs to be a line, and the line needs to be like, does my action or do my actions harm others in the long run? Yeah, like if you would consider, for example, scamming your insurance because whatever, like maybe lightning hit your house and you have a broken vacuum cleaner or something, so it was already broken, but you now claim with the insurance that the lightning broke it and that they should pay you for the vacuum cleaner, while it's for you nothing big, and you might consider the insurance company has a ton of money, but they don't care about how much money they have. They calculate how many claims were there, how much premiums or how much money did we get paid, and then they calculate like, do we need to increase premiums for everyone or not? Yeah. And so all those small little things that people might do where, oh, it's not bad because it's just a big corporation and so on, you still eventually end up hurting your fellow citizen, your neighbor, and blah, 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 and yourself in the long run. Yeah. So it's like, but that will never happen. It's kind of like in utopia that people stop and really consider like, how do my actions affect others? It's like we already saw it when you browse through Reddit and you see the posts about like people making a scene when a store demands them to wear a mask or so. Yeah, like instead of like spending 15 minutes arguing, like put on that stupid mask, walk through the store. Yeah, even if you feel it's stupid and ridiculous and there is no virus and whatever. Yeah, like simply for your own happiness instead of having confrontations and blah blah blah. Yeah. Just do it. It's their store. If I would have my own store, I would also insist on my rules. So just do it and walk out, throw your mask away, whatever, yeah, and run around without it again. But yeah, it's like we're never gonna get there. So did you see the Chinese diplomat asking the Japanese diplomat to drink the treated radioactive water? No, didn't see that. 5 years from now, I'll be sipping from a coconut on a remote island. Yeah, you're all invited. Actually, I'm gonna check if I still have the bookmark. Maybe I saved it. Maybe you might be lucky. Probably not. Damn. Was not trading. Damn. Did I delete that bookmark? Please no. Short codes. Yeah, there was a small island with like for place with like 4 houses or so, a place for like 16 people, and where you can rent it for, I don't even remember, but if you show up with 16 people, it's like $200 per night, and really, really nice. Maybe I find it again. So it was really, really a nice place. But yeah, personally, I'm more of a like I enjoy bigger cities and stuff like that, and no matter where I go, I kind of like my worst addiction would be having internet. So islands are kind of tricky, but yeah, like maybe just order the Starlink from Elon and take the satellite dish with me on vacation to solve that problem. And yeah, by the way, we see more pattern developing here. So yeah, still really hard to say, but while this could be labeled as 1, 2, 3, 4, 5, and in a flat, let's check in a flat, that should actually be any corrective pattern, so it should be a zigzag, yeah. But we can also, very often, if we can label it 1, 2, 3, 4, 5, we can also label it zigzag. Might not be a perfect zigzag here, up. But yeah, actually it complains here because it's a wave 5, because I labeled it as wave 5, yeah. Up, escape, let's get rid of that. But yeah, like either, again, like 3, 4, 5, or could be that this is still, we love correction. Actually, it should still be corrective pattern, to be honest, because we had a very short wave 2, which literally is just a small A, B, C, so A, B, or A, B, C, which means this one here should obviously be more complex, which would say, or yeah, it would make sense to say like this might be a flat. And here the low is 164.11 and here the low is 164.71. Now I would have to look up if for flats if the wave C has to go beyond the wave A. Flat, flat, flat. Corrective waves, zigzag, flat. A flat differs from a zigzag. The subwave sequence is 3, 3, 5, yeah, which we might not have yet. So it would be basically zigzag, zigzag, and then impulse, which again, considering how close we look, might be challenging to confirm. Since the first actionary wave lacks sufficient downward force to unfold into a full 5 wave, as it does in a zigzag, wave B reaction seems to inherit this lack of counter-trend pressure and terminates near the start of wave A. So, I mean, it's terminating higher here, yeah, not near the start. Wave C, in turn, generally just slightly terminates slightly beyond the end of wave A, which, I mean, we're not beyond the end, but we're going to check the rules around page 80 or 88 or 89. A flat always subdivides into 3 waves, yeah, A, B, C. Wave A is never a triangle. Well, that's definitely not a triangle. Wave C is always an impulse or a diagonal, yeah. I mean, could be 1, 2, 3, 4, or 1, 2, 3, 4, 5. Yeah, so that could be. And wave B always retraces at least 90% of wave A. Well, we exceed the starting point, so wave B retraces definitely more than 90%. And wave B guidelines, that's the important part, so those are not rules, but guidelines. Wave B usually retraces 100 to 138% of wave A. And surprisingly, if we look here, that would be 138.2 and we're slightly above it. Yeah? Wave C is usually between 100 and 165% as long as wave A. And wave C usually ends beyond the point of wave A. So our wave, and there, that's actually the interesting point, our wave C is longer than wave A, yeah, because our wave B is higher, and it terminates around the area. It doesn't terminate below the area. So technically this A, B, C here could be a flat correction. Are there more guidelines for flats? Yes. When wave B is more than 105% as long as wave A and wave C ends beyond, okay, then so if wave C would be lower, then we would have an expanded flat. When wave B is more than 100% as long as wave A and wave C does not end beyond, the entire formation is called a running flat. So technically this would currently be a running flat because here we have 164.71 and this price here is slightly lower by 60 cents. Yeah. So, but it would make sense and it would align with if wave 2 is a swift correction, wave 4 usually is more complex, and in terms of at least the duration here, this is more complex. And yeah, and if we look at the one-page cheat sheet actually that I have somewhere here, then we look for an impulse wave, and wave 4 is in flat would be FL. 48% of cases a flat, so it's kind of like our favorite option as well. And yeah, wave 2 would be favorite zigzag, which likely is the case here. The other option would be that somehow this is not 1, 2, yeah, and that whole thing here is basically 1, 2 now. But then we would still be able, would that make sense if this here would be wave 1 or wave 1? Then the retracement here reaches 38.2. So technically it could also be that this here in brownish is a little bit wrong and we would have 1 to the point B. This is wave 2. For that, we would then have here 1, 2, 3, 4, 5 to confirm our wave 1. And our wave 2 here would still likely, I mean, we are at the right price area, but our wave 2 here would need to be A, B, C. It's not a perfect zigzag by any definition, but it could still be possible, so that the bluish and golden one here was jumping the gun and that it's 1, 2. The retracement from here to here would fit that theory, and that we can label this 1, 2, 3, 4, 5 as well, would also support that theory. So tricky. Which means, 1, 2, 3, 4, 5, yeah, which means then that would be another 1, 2, yeah. In any case, if this is 1, so if this is from here, 1, 2, then that area of retracement is already sufficient and we should go up from here. Although possibly, or theoretically possibly, we could see also a retracement until 160. So it could drop further, which might, if this is really 1, 2, so that point B is actually 1, then it might actually be that we are looking at a zigzag here that I now cannot label because I already labeled something other. But basically that we're looking at a zigzag here that goes from here to here, so wave A, now wave B, and then wave C would be whatever, like from here, or would be from here. And in that case, that would actually be the interesting part. Do we get low enough if we start from here? No. But the interesting part would be that in that case, because even if this is 1, 2, then we would still have this 1, 2 here, 3, 4, 5, which means we would still have a base channel here, but of a lower degree. I'll go back. And it would be interesting to see if that base channel here then serves as a support or not. Yeah? So we'll see that in a couple of candles, like basically either the corrective pattern is over like this, and we go up from here with another 1, 2, 3, 4, 5 to complete this wave 5 here, which likely, in that case, likely the target area probably would be something like, I'm not sure if we can then draw the channel through point number 3. If we can, then our target area would be somewhere here. Two waves tend towards equal, or towards being equal, so it might be that we somewhere here. But on the other hand, we would have 1, 2 right now, and basically would have a new base channel, so we would be we would be waiting for our breakout from this channel to confirm our wave number 3, or a drop further down to confirm a bigger zigzag pattern that takes us to the 61.8 retracement. Yeah, so many options. So, and if we take that line here and we would apply it from here, it actually would take us too far. So it would be, and if this here is 1, 1, 2, or that cannot be 3, 4 because that would then be the shortest wave. Yeah, I'm open for alternative interpretations. I'm going to leave that labeling up, but we know that there's still, like right now, there would still be other options. Not a huge difference. In the end, the only difference is either we drop a little bit more, we go up, or we go up from here. And yeah, there's always a way to make money. Sometimes you just may not like what you got to do. Yeah, exactly, like breaking bones for the mob and collecting debt money or something. Yeah, like no, but it really is like this. Yeah, like how many people, I mean, honestly, how many people hate their job anyways and do something they don't like? Or maybe they like what they do, but they don't like their coworkers and are too scared to quit the job or change the company because who knows, it would be better at the other company and so on. So it's literally anyway, enough people do things they don't like. But yeah, like there's always work. It might be underpaid, so it might be that you have to work and you know that somebody's taking advantage of you. But at least then you have a job, you make some money, and you can use your time, the little time that you have outside of your full-time job, to look for a better one. Yeah? But to say there is no work available or so, there was an Austrian or German comedian, or is an Austrian or German comedian, because people also tend to say like, oh, those immigrants that take away our jobs, yeah, and I know that in the US that's also, or used to be a problem, or there's a certain fraction of people that says stuff like that, yeah. And the comedian basically said, so you're saying that those immigrants take away your jobs, but let me ask you something. If somebody with no connections, that doesn't speak our language, yeah, that only has been here for a few weeks, is able to take away your job, well, maybe you suck at it, yeah. So, and that's the way I see it. I think like, yeah, like there's always work. If you want to work, there's always work. You may not like it. It might be underpaid. You might literally be taking advantage of in some way, like that you get way less than what you deserve and so on, because the boss knows how desperate you need a job, yeah. But you'll always, if you need a job, you'll always have a job. And then it's up to you to suffer through that time and push through and use it to find something better. Yeah. Might not always be that easy. Like I think the only exception or things are like health issues. You know, that's the one thing where simply, yeah, if your body is really if you're sick in some way or you're broken in some way, and that makes it impossible, like literally impossible for you to work certain available jobs or so. Yeah, and you really need a job with certain whatever, like only an office job or only this kind of job or blah blah blah. But if it's some kind of health issue, and I also consider like mental health issues, like maybe phobias of like touching people or I don't know what, yeah, that's the only thing where I would say, yeah, like for you it's hard to find a job, but for everyone else that's like on average healthy, to say, oh, there are no jobs or so, it's, yeah, like I think there always are. So, and there's always, yeah, and Michael Clark shares some stuff, so I'm gonna connect to copy that link real quick. Is what I have plotted out since Friday. Yeah, wrong button. Copy. And go there, and go there, and go there, and go there, up. Imgur. And go there. That's interesting, yeah. So we would have, there we would roughly have not our earnings low, but the other low with that amazing zigzag thing here that we just don't care what it really is. And but doesn't that here, and then we would have wave 1, 2, and then from here you think, so basically your wave 2 already, your wave 1, 2 starts here, yeah. So if I zoom out a little bit too far, like that's the zigzag pattern here is for us this here, and you basically have your 0, 1. So you have 0, 1 that we have in common, and your wave 2 stops a little earlier and stops basically here at this point. And then you consider this here an A, B, C. And I would disagree with that, like, because for this to be an A, B, C, that would need to be a zigzag. So A, B, C, which it might be. This here would, this here would need to be an impulse, or a leading diagonal, so 1, 2, 3, or it actually can only be 1, 2 because the point here is so low, and so you kind of like have a hard time to fit an impulse in here. That would need to be a zigzag, and it doesn't really look like a nice looking zigzag, and that here would need to be another impulse, so, or ending diagonal, 1, 2, 3, but that 4 just goes way too much or way too high to make that true. Plus on top of that, if we look, like it's literally, it kind of is like that last part here. Well, we might have the barrier at the bottom. I drew the line too low now, but it's a little bit like a triangle, like, yeah. So even from that part here already. So it's like literally, well, again, that line is too high. Maybe I draw another one. So like, and a triangle, if this would be a wave 1 here, then it means that in here we would need to have another impulse wave or leading diagonal, which means we would have a, just reverse that. We would have a 1, and that would need to be wave 2, but our problem is that wave 2 is never a triangle, according to the book, and according to motive wave only very rarely. But that's definitely, from the looks of it, definitely a triangle pattern that we have here. And then we would have 3, 4, 5, yeah, so, but that's why I think that this wave, so first of all, that wave, that ABC here, I think might be challenging to confirm. Maybe if it's a flat, but then it would need to translate into zigzag impulse, and again, that last wave we cannot confirm as a 1, 2, 3, 4, 5 because of that huge move upward, where, let's escape that, where if we have it labeled like this, so, oh, I also have it here as a zigzag, A, B, C. But yeah, my zigzag stops sooner. My zigzag basically stops here. And then the question, and here 1, 2, 3, 4, 5, yeah, or well, 4 might be longer. So that kind of like works a little bit easier. So here we would have wave 1 would be 1, 2, or 1, 2, yeah. Or we would say that it's a flat and not a zigzag. So if it's a flat, then it would be any corrective pattern, which doesn't make it easier. Oh yeah, if it's a flat, it could be A, B, C. So A and then B and C. While we don't have a perfect time constraint, so our wave C here ends earlier, but in terms of the price level, it gets very close. And our wave B in a flat would be another any correction, but not a triangle, which could be another A, also not the nice one, obviously, but like A, B, and then with a long C. Or it could be, I don't know what other, like it could be, really don't know. But yeah, so, yeah, good call on the ABC. I keep neglecting the rules of my correction, still learning. No, I'm not saying that you're wrong, by the way. I'm just saying like what I learned, that would be the thing where I'm, maybe not even the ABC here, but really then if we think of, if this is a wave 1, then it would need to be 1, 2, because that's definitely the end of that wave 2 then. And, yeah, cannot, let's open image, a new tab, then tab. And if we look here, it's just so much of a, yeah, cannot, I'll need a Chrome extension for drawing, but it's really, if we can literally draw a nice line here, and it's really so much of a triangle, which cannot be wave 2. And if we go further, we can even say from here down, yeah, like quickly use my screenshot tool to get some drawing things. So we could even say from down here, we already have a nice triangle, yeah. So it might even be that our corrective pattern ABC, and then that's actually how I have it on my side, yeah, but not the start. So the starting point is then 0, A, and that's another zigzag, so we have the combination, so the double 3, which is in goldish, no, in this one here, and there we basically have our ABC. Then every wave X is usually a zigzag, and if we look here, if we go from here to here, might not be visible super well, and then apply the same to here, while it again in terms of distance is not super perfect, but it's almost a very perfect zigzag pattern here. And then the starting point of the triangle in this case would then be this one, 0, A, B, C, D, E, and yeah. And then, yeah, like, but yeah, like if we would have the starting point of our wave 1 here or here, it would become, yeah, like here it might be possible, but then we would need to label everything differently to kind of like end with our triangle early, or have this here an A, B, C, which would then be a double zigzag correction maybe, or a flat, yeah, double zigzag. But then the problem would again be with our, when we want to confirm that this here is a 0, 1, that this would need to be our 1, 2, and then the retracement wouldn't check out. So whereas if we assume that our correction ends here, and we take this point here and we assume this is our smallest 1, 2, then we see that our retracement, while not auto scale, while not perfectly, but gets close to the 61.8, so which is like either 38.2 or 61.8, so it's nicely in the area that we would expect for wave 2. And yeah, so, but yeah. I'm not surprised by the drop today. Well, yeah, I mean, it has to be based on different factors. People that bought here, oh my God, it went up so nicely. People trading the gap, you know, like people that think that gaps always close, and again, they often do, but not always, would already expect that, okay, we opened here, we'll go down here, I'm gonna sell, I'm gonna buy back there, yeah. Yeah, people seeing that drop, seeing the recovery, seeing that we bounce at 175, maybe on a higher time frame, that's some kind of like resistance level. Yeah, look here. So, and simply, well, last time we bounced off here, I'm gonna sell now as well. Yeah, and then, yeah, then there we go. And it's like, really, I think the only question is if what we have labeled here makes sense, but then again, with that new low, it already doesn't anymore, yeah. But I mean, it's still, if we look for flat corrections, we had the guideline that wave C is 100 to 160%. 100, page 80 something. 80, 165, yeah. So wave C would be 100 to 165%, and of wave, yeah, like paying attention to details. Of wave A, so technically, not that, but extension. And if we now just move that up here to the point B, so wave C could be to 165% or 100 to 165. That's just the guideline, so if it goes a little bit further, it would also be okay. So technically our wave C for that correction could also go here, and which would make this a more complex correction than what we had here, and which would also, in terms of, again, cheat sheet, so a flat correction would split up into any correction not a triangle, and an impulse or ending diagonal. And again, while it's, oops, wrong buttons, while it's not the nicest one, but that's definitely, okay, it's not able to find one, but I'm sure if I want to, from this high here, I have a zigzag here, I can make a not perfect but still very nice zigzag here, and if that should be an impulse, I could likely whatever, like let's, on a smallest scale I could say 1, 2, maybe that's now 3, 4, 5, yeah, and which looks a little bit more like an ending diagonal in terms of that it seems to extend a little bit. Or now ending diagonal would also move closer, yeah. But I mean, the 1, 2, 3, 4, 5 might not be placed perfectly here, but technically, if I really, really wanted to, I could confirm that pattern. And yeah, and the other option, so I think like that we start from here is established in quotes, and the other option would be that this is simply wave 1, because I said 1, 2, 3, 4, 5 would complete that as wave 1 and make this now a wave 2 correction, which means this here would need to somehow work out as like something like a zigzag or anything similar. But if this were a zigzag, it's kind of like already tricky, because again, if we talk about the look of a correction, then either this here would be wave A, then wave B, and wave C would need to, or be similar to this, yeah, or our wave A actually could be till here, then this is wave B, and we're currently looking at wave C, where this candle already ruins the day, yeah, and the correction would go way too far in my opinion. Well, it still would be okay with the rules that we're not entering here wave number 1 here, or which is irrelevant because we're not looking at that, but we would go way too far in terms of if this is 0, 1, then our retracement, as always, would be expected 38.2, where we bounced first. We went further, we touched the 50% line. If we fall further, 61.8 would then be the retracement area. And that just doesn't work out with a nice zigzag in terms of the price movement. Yeah? And it still wouldn't cover, if we go there, I would almost be willing to bet something that we will then also close the gap. Yeah? So we would then, if we already go down to 157 technically, then we'll also cover the last 4 or 5 euro or dollar to close that gap. So I think this one here, while not with that extended third wave, it kind of like reminds me of what we had, if we go to daily, there we had the big spike, and I think what we had here, so 1, 2, 3, 4, 5, yeah, where we have the same problem. We have a small 1, 2, a huge wave 3, 4, 5, and then as a result, if we connect that from here, so that would be 3, 4, our 5 doesn't end up in the trend channel that we would expect as the final trend channel using the Kennedy channeling technique, yeah. But yeah, so I think we're looking at something similar, which means that if this is our 1, 2, yeah, then we would now wait for the breakout up for wave number 3. And it would explain this pattern here, like 1, 2, 3, well, not with that wave 4, but with that wave 4, 5, because there we would end up in a similar situation that if, again, so 1, 2, 3, 4, 5, which makes up a 1, and that would be wave 2, but again, as mentioned, unlikely, because this can be easily labeled as an impulse, and if that would be some corrective pattern, we still lack a noticeable counter movement, and if we would see that now, the drop afterwards would bring us way too far down. But if this here would be 1, 2, 3, 4, 5, then we would have a similar situation like shown on the daily chart, that our point 2 and 4 connected parallel through point 3 would not create a final channel where our destination channel for our wave 5, but our wave 5 actually falls short of that channel, mostly because of how steep this channel is. Yeah, and yeah. But so yeah, considering all that, I think the current version is actually at least confirmed reasonably enough, yeah, to make the most sense. Not perfectly happy with the look, but the look of that wave is pretty much just screwed up because of the extreme wave 3. Yeah, if we wouldn't have that, if that would be wave 5, and then here's our wave 2. So yeah, like this extreme wave 3 screws up the look a little bit. But yeah, we'll see in a few candles. Overall, we already are doing great today, and we are still in the upwards movement. And no matter if wave 1 goes like this, so 1, 2, 3, 4, 5, or if it actually already was like 1, 2, 3, 4, 5, so if it's already finished at this point, those waves are still part of the bigger wave 3 impulse that goes upwards. So yeah, who cares? We're going up. And are we not supposed to factor after our pre-market for waves? No, like, I mean, technically you could try, but the wave patterns are about mass psychology, and mass psychology is basically more when the market is open and the masses can trade positions. Yeah, so I don't consider that the small percentage of traders that has access to after hours and pre-market, I mean, it may be a lot of people, but compared to the total number of traders out there, it's definitely a lot less, a small percentage. So I don't think that they represent the mass psychology behind movements. Yeah, but even if we did that, you might, if I show the extended data here, yeah, I don't even get it to show up properly. Yeah, I don't know what. Did the do I not have the volume visible today?
there we have it there, yeah. So it just, okay, the extended data doesn't make sense. It just shows me some random volume here, but doesn't change anything else right now, yeah. But then you might be able to map out the things in between here, yeah, but I guess that more often than not, the extended data will actually make it harder for you to label it all. So I was hoping for the return to the gap to grab some more shares after our pre-market is value, but the low volume means each movement has more weight. Yeah, like the movements are bigger based on lower volume. Yeah, but as a result, because of lower volume, it doesn't represent the mass psychology. It's not that there is like a lot of people behind or sharing or being infected by the panic or like positive sentiment about the stock. And yeah, I'm not sure, I haven't read anything about that says definitely that you shouldn't use it, but personally I never use it. Like I think it's, yeah, like the one thing that doesn't make sense. So, or where simply from, I don't know, I wouldn't say logic, or maybe logical, if we consider that it's about mass psychology, then you would focus on when the market is open and actually the masses can influence. I think that was also a mistake. So I had like my positions with Boxlit and something else hit a stop loss recently. So where I labeled it and set my stop loss according to my labeling and so on. And where I also think I'm actually switching my approach there. I just created a bookmark for investing.com most active stocks. Yeah. And I'm basically now just on regular basis, likely weekly on the weekend, will go through the top list here, whatever is the most active stock. It's not necessarily about the highest volume or about the biggest movement. So I don't know how exactly they define most active, or they say price, okay. So maybe price change, or we'll need to look into that. But basically, yeah, like I'm gonna look into the stocks that are most, maybe I should do it based on volume. So pick the stocks that have the highest volume, because they likely also have the clearest pattern of Elliott wave theory, because more volume means more people doing things, which means the mass psychology might apply more. I mean, it's just an idea. So instead of jumping on just popular stocks, to basically once a week analyze the top 10 stocks based on volume, popularity, or some other index. Finviz most active and market cap over 1 billion. Yeah, that would actually, hi Pete, not sure if I saw you already today. That would actually already make sense, yeah, so that you kind of like have a big enough company that smaller or that a little money doesn't create huge movements. And yeah, so, but yeah, so that's my idea by now. So I think like, while I'm still convinced that you can apply Elliott wave theory to pretty much any stock, because there are enough investors out there, simply the mass psychology idea behind Elliott wave theory would suggest that if you pick bigger stocks with likely a lot of volume moved, so a lot of people making actions, or yeah, even big players doing something, buying a lot or selling a lot, it's still more or less mass psychology, just that their psychology, that one person or that few people that make the decision have a bigger effect, yeah. So, but yeah, so yeah, like I think, I mean, there's like two ways now what could happen. It could be from here it goes up and we actually see a drop further down. So like we said, 157, which then definitely I would think closes the gap. And maybe makes this an ABC pattern, which would then turn actually, again, then it would be 0, 1, 2, 3, 4, 5. So it would be 1, 2. But I think in terms, the correction would go too far. And so I think it's more likely that we're really looking at this pattern here, because we are within all the guidelines as well. So wave C moves further than wave A. It's between 100 and 160% the length of wave A. The retracement of wave B is between 100 and, or between 90 and 138%, almost precisely, and so on. So making this very likely a flat, and in that case an expanding flat. Now we could actually look up
what other like miracle information there is about expanding flats. If there is more information, oh no, no wait, oh yeah, expanded flats. So maybe there is some additional information about that. I'm not sure yet. Probably not. No, I can't find anything right now on quick glance. But yeah, so I think it's more likely, which would mean that here we are looking basically for the next 1, 2, which means from every point here, we would expect a 38.2 retracement or 61.8 retracement to complete our 1, 2, which will then be from this brownish golden wave 5, basically the impulse, yeah. And in terms of the target area, because of this extended wave 3, we would likely expect to, oh, it might even work here because of our wave 4 also being further. So we would expect to reach the top of this final trend channel here of our destination channel. Not sure how fast, so depending on how fast we get there, it would be 180, 190, yeah, so which would then make up wave 1 followed by another correction, which in turn then, actually I think that fits nicely because again then the wave 2 would then correct usually 38.2 to 61.8% into, or basically more precisely it would correct into this area. And if we look here from our starting point, if that would be our wave 5, then our, and I'm going to get rid of that one real quick, then our 38.2 retracement and 61.8 retracement would bring us nicely into that area. I'm going to go a little bit further in terms, I'm not sure about that 100%, so, but I think that we can expect the 61.8 retracement, yeah, like that, to be the, yeah, that wouldn't necessarily work out. Let's do that like this. So in that case, if we draw the median here, so because we could also have a truncated fifth wave here in that gold brownish thing here, which would then at least move 70% of wave number 4, and 70% would be yeah, like somewhere in this area at least. But yeah, like even if we just hit the median here, we already passed wave number 3. Not as far as we usually would go, but that would already be sufficient. But it would still require us first to have like a 1, 2, 3, 4, 5 of a smaller degree, which might be hard to spot. So it could already be 1, 2. Yeah, and we'll see. But basically we're going up now, then we're going down a little, and then we're going up again. And yeah, so with that, actually, I'm going to take a 5-minute break. We'll see where the next candle takes us. Again, still possible that we actually see another drop here and that somehow turns into a magical zigzag. Yeah, so much fun with so much possibilities. But at least the bigger fun is that our overall pattern is upwards now. So unless we completely screwed up with our labeling on daily, where we assume that this is 3, 4, I don't see any way how we can get lower again. So I don't think that we can get lower than where we were here, 150 again, but that literally, well, technically we might be able to close that gap. If this turns into an ABC that totally overreaches the 61.8 area, not this 61.8, but the one till here, or from here down, then we'd, yeah, like might be able to close the gap. But other than that, I really don't think that we go down, but just up from here, yeah. Much love from Bakersfield, California, where wheat is legal and people are baked, yeah. Yeah, hi Bobby Hill, great to have you here. I'm just gonna take a 5-minute break and then we proceed from here. If you just joined in, then just rewind 5 minutes, and because I basically went over the 2 possible options according to Elliott wave theory that I see here right now. And yeah, I'll be back in 5 minutes and then we'll see hopefully already if we go like this or if this actually turns into ABC. And yeah, so
And here I am back again. Hope you don't get scared by the sudden noise. Now, basically nothing really interesting happened. Yeah, what we would wait here for would be, as said, a retracement to 38.2 or 61.8 from whatever high we have to indicate that this could be wave 1, 2 that will make up our wave 5. Now, since we already have more candles here, and if that would be wave 1, 2, we definitely expect our wave 5 actually to reach the upper boundary of the channel here. Yeah, but we'll have to see. Could be that we go higher and wave 1, 2 will then be a little bit bigger even and so on. Or again, still possible that from here we raise down a little bit to make this a zigzag and basically force us to change this to 1, 2. And yeah, so that's where we stand. And yeah, we'll just have to wait and see what comes through and what does not. And in the meantime, I'm gonna quickly do something else. And also still need to look for that one post that somebody mentioned about market collapse, basically. And yep. Like regarding a potential market collapse, actually thinking about it, I don't consider it much likely because how many shares in other stocks could the hedge funds that have GameStop shorted hold? I mean, I'm sure if they hold more than 5% and so on, there's a record. And then obviously, even if those positions get forced liquidated, we'd still have the point that there would be trading halts on the way down for whatever Tesla, Facebook, and so on. And so I wouldn't expect a complete market collapse here. But yeah, so we'll check. So just finish something up real quick. And here, and then here. 26, and then here, what's the last one we have? I think that one, 1, 2, 3, 4, 5, 6 seems about right. Yep, so 7 is just in just doing some accounting on the side, so in case you're wondering what I'm babbling about. Multitasking. In 8. Kyle. And that's done as well. Now obviously if this candle here would go higher, then we would move that Fibonacci retracement here to whatever it goes higher and basically then wait for whichever candle goes into that area. Technically, if this would turn into a big zigzag, we would also, the expectation would be that we have A, B, and then a C movement that's likely the same. So because the zigzag would break up into a 1, 2, 3, 4, 5, which we can label down here, another zigzag, and another 1, 2, 3, 4, 5 down here. And so currently still both options on the table, which is not much of a prediction. The stock goes up or it goes down. Hey Chris, I just bought Elliott Wave book because of you. Hi Shay, yeah, congratulations. I hope you don't just wait for the book. Depending on where you live, it might take a little bit, but also already start reading the online version. And yeah, like when it comes to the book, the
from all the chapters that are in there, the last parts, like from, where does it start, like chapter, yeah, chapter 7. So from chapter 7 forward, it's kind of like older forecasts that came true or came true after a little adjusting them, other approaches in stock trading and how they relate to Elliott wave theory and so on. So basically, the first 6 chapters are really what the crucial part, and after that, where does that line come from? From 170 remove guide. And yeah, so, but you can definitely start with chapter 1 online already. Definitely does not hurt. And yeah, so that's done, that's done, that's done. That might be what we've been waiting for a 38.2 retracement. So that might turn, I mean, we're pretty much on that line. We haven't precisely touched it. We can see the low here is 166.12 and we're still like 25 cents away, but it's not super important. Technically, this could become our wave 1, 3, 4, 5. And this would give us a new base channel using the Kennedy channeling technique, where pretty much, I mean, we would, yeah, like now this would be a lower point, so we would move there. So I'm gonna stretch that a little, and we'll see how far it goes. So here would also be fine, and which will give us a new base channel, and where we could then map out the 1, 2, 3, 4, 5 that will make up this wave 5 here. Yeah, but as always, a few more candles till we see a clearer picture, and which would mean if that here would be our point 2, then it would be that would be the base channel. Then our wave 3 would take us somewhere. Interestingly enough, how far would it go? Let's say roughly here. Wave 4 could correct down till here again, and wave 5 then technically could even go all the way up here, because wave 3 would still not be the shortest, and we would end up with an acceptable channel. Not perfect in terms of wave 1, but overall still nice. So which would take us to 190. So, but again, jumping the gun here, we don't have fully sufficient data yet. Still need to see where that candle ends. If it's then the low of this, of this retracement, and we move up, or if it actually was again A, B, and this turns into wave C. Yeah. I'm getting blinded by the lights. And on the side, I'm going to look for the post that we talked about, margin call misinformation, and yeah. They apparently, so one post on Reddit, and I'm gonna just move it over real quick, is a screenshot from Twitter. So apparently the SEC told brokers that they basically have to have the money to cover, but it doesn't sound like it's been an official rule, but if it all was just like some communication internally, but which would be interesting, because obviously it would mean that with the 22nd, we would, like hedge funds would need to close or recall shares or whatever, or actually the people that borrowed them would need to recall them, which kind of like doesn't make sense because they don't know if the person that borrowed them has the money to cover, because if I borrow you the share, all I get from you is the interest, not the information when you will get margin called. But yeah, might not be relevant for us at all. Yeah, we had the question a couple times, like if GameStop is manipulated and so on. Like honestly, just go to wavebasis.com, create your free trial account and just label some waves and see how often the predicted price area of the wave comes true and how often it does not. Yeah. If we have a short squeeze, it means that obviously we will overshoot some of our price targets and have extended waves. And other than that, manipulation in some moments might cause the stock to drop a little bit further, but still it's kind of like basically the assumption of all of us is that, or of most of us is, that the retail investors already own the float, so the shares that are in circulation and tradable. Yeah? And based on that, and that Elliott wave theory is about mass psychology, even if hedge funds manipulate it, it still applies. Yes, if they create more naked shorts, they can push the price a little bit further than what they could without the naked shorts, which means like some of the corrections go a little bit further than expected. But other than that, it still applies. Like during the squeeze, we might have to live with some slight rule violations of the Elliott wave principle. We will see that as we go there. But overall, yeah, like it still applies. It's like literally, we just have to look at the charts that we made. We haven't been always right, but then it was not because Elliott wave didn't apply. It was because we assumed this here was wave 1, 2, and we will see wave 3 here when only after more candles, and that's obviously not labeled right here because I changed time frames because it's like A, B here, so A goes here. But after more candles, we realized that it's actually a different pattern than here with this triangle pattern that we have here, for example. Usually wave E would only slightly go below the diagonal or the line that we can connect here from A to C, but in our case it went a little bit further, or a little bit further in quotes. Yeah. So those are things where I could think we could say manipulation played a role. But besides that, if either you have a trading strategy and you, like in my case, that's Elliott wave theory. So where I say, okay, I trust Elliott wave theory in pretty much every stock. And usually if I get it wrong, then it's because I labeled things wrong. Either I jumped the gun and labeled them too early, or I missed the obvious labeling and went with the labeling that I wanted to see. And like right now here, we can label this the way we have, and now something changed, so something jumped because, like our wave 2 here jumped where it doesn't belong, up, somewhere up, give me my wave 2, yeah. So, yeah, like this it was right. So, even if we look here right now, we can label this like we have it 0, 1, 2, 3, 4, and this is wave 5. But we could also label it 0, 1, 2, 3, 4, 5, and this here will be A, B, C. Yeah, so there's two possible ways how we can label this, which are both accurate. And I picked the one that first of all is in my favor, and second of all where I bothered to validate the rules and the guidelines, and they all apply. So it's the most likely one in my opinion. Yeah, and so either you pick a trading strategy and you stick with it, and that's how you manage your positions, and your trading strategy is more often wrong than right, more often right than wrong, or while you may be more often wrong than right, but when you're right, your profit is way bigger than your average loss, so that in the long run your strategy is profitable, yeah? Or you don't. The moment you, I know that you're just asking out of like curiosity, or because you're wondering or so on, but the moment you are like, well, strategy X, Y, Z doesn't apply here anymore because the stock is manipulated, you're basically kind of like trying to find a justification to ignore rules. And I did the same, yeah. So like during the last 1.5 months, or 1 month since I started those streams, I've also had labeling that was actually just really, really wrong. Because I wanted it to be like this, and so I came up with justifications that to me, like, you know, like made sense. Well, because we have more volume or whatever and blah, blah, blah. And only over time did I get to the point where I say, okay, we don't only just look at, can we label 1, 2, 3, 4, 5, but we also look at, does the pattern look the way it should look? So in terms of distances between waves, time that passed and so on. And yeah, so the moment you say like, well, it's manipulated, blah, blah, blah. Yes, if like we would have a downwards movement and it goes a little bit further than what we have expected, then, but it's still within the rules of Elliott wave theory, so it's still okay, just not, so for example, wave 1, we would expect a retracement to 38.2 or 61.8, somewhere in between, yeah. And if we would go down to 70, yeah, then it's still okay. It could still be wave 1, 2. It might not be because the retracement is a little bit too far, but that's something that could be based on manipulation, based on hedge funds publishing some fake news that talks negative about GameStop or whatever, yeah. But I would like, yeah, like I do my best to enforce all the rules, because the moment we accept rule violations and just came up with, yeah, because the stock is manipulated, nobody of us knows if the stock is manipulated and how much, or like we know that it is, but not how much it is at the moment right now, yeah. Maybe hedge funds currently just sit back and let it move organically, and then maybe we will have like a downward candle somewhere or downward pressure somewhere where it is manipulated, yeah. And you also shouldn't forget, well, with GameStop, there might be more manipulation going on, like buying restrictions and so on. But the things that the hedge funds did here, they're nothing new. They also did that in Tesla last year or the last 2 years, and in every other big stock out there. Maybe not to the same extent, but they still did them, and Elliott wave principle still applies there as well. So I don't see any reason, even in the Volkswagen squeeze, which is not the same situation, I get it, but even there, when you look at the 10-minute data, you are still able to nicely label Elliott wave patterns within this, during the squeeze, yeah, so. And so I have zero reason to believe that it's not gonna work out. And even if at some point it turns out that we have no clue how to label things anymore, it would still help us to get to that point, in quotes, and calmly watch dips, not wonder, okay, why did it drop now from 175 to 160 and so on, yeah? Or on bigger time frames from 350 to 100, I don't know, 20. So yeah. And yeah, so you mentioned looking at other trades for Elliott wave. Try BSCP and CLNA and one of the highest shorted costs. First gonna check if I can trade them on eToro, by the way. So BCPC, nope. CLNE, nope. And COS, nope. All three not available on eToro. But we can look, you say highest shorted cost up. Okay. My Palantir labeling may be wrong, looking at my position, how it's developing. Already looks like there was something going on, yeah? See, and I would, for example, tend to say this is already wave 3, but in terms of the time relationships, it's more likely that we are still within wave 3. And that here would be an impulse, and that here would be an endless long corrective pattern that I don't know if I can label it, but we can just roughly label it as an ABC. Yeah, not nicely, but more likely I would likely try to middle or to break it in the middle, like maybe like this. Yeah, because then this one would also be ABC. And in terms of the length, they also check out. I mean, that might not be right because we're looking at a very high time frame. But yeah, the price level here is a little lower than what we would expect based on a nice looking ABC. But in terms of the time, so 618 days, we're almost on spot, not perfect, but still, which means that then here at that low, and here the lowest point is 0.80, and here the lowest point is 0.8017. And I would need to check because my historical data for some stocks is not super accurate, so it might be that that is actually lower. Still looking into that issue. But from here we would go onto the daily chart, and yeah, which already is going to be challenging, but I would already on first glance I would tend to say that we have a corrective pattern here that is a triangle. Tools. Okay, unable to fit pattern. Maybe not the whole thing here, okay, because of this one falling short, but at some point here, I think it looks like we, very similar to GameStop by the way, but it looks like we have like A, B, yeah, it doesn't go all the way here. Or you could call it a bull flag, yeah, so kind of like breakout incoming, or very likely. But if we were to label that here further, let's try auto label, it would say this, and if it says that, we would also need to be able to confirm this here, yeah. Wave 3 is not the shortest, wave 4 would be extended, but could also be that it's labeled similar to GameStop according to Jeffrey Kennedy. So I don't know, let's say 1, 2, this would be wave 3, and yeah, it doesn't let me label that here, but that would be 4, and then this would be wave 5 of a kind of like a truncated fifth wave. But I think we fall short here because we're not recovering 70% of wave 4. So more likely that it actually is like this, and which means from here, or that corrective pattern is not finished yet. So again, like that still is playing out, and that's still wave 2 on this degree, because that still looks like very much like a triangle in some way. Not sure how I'd explain this candle here, not going up till here, but yeah, definitely would be interesting. I'm not going to invest because I could only now invest on interactive brokers, and there I have only a limited balance because I only deposited €1,000, and from that we have 100 something invest, or almost 200 invested, and 500 I need to keep available as free equity, otherwise I will stop to receive the data feeds. So, and I will only deposit more money after, like in a week or so, and then once the GameStop thing played out, actually going to yeah, like deposit more or move the funds, yeah. Yeah, Elliott waves of human nature will work it, and it will work for upside and downside. Yeah, it works both ways, so like in both directions. So, and is there any program that making Elliott waves automatically? Technically, yes. For example, Motive Wave that I'm using here has automated waves. So if we open a new GameStop chart here, for example, and yeah, switch that one, for example, to hourly, I could just say new study. Oops, not new text. So new study, and say Elliott wave, auto Elliott wave. Use all available data, and let's say decompose 2 levels, and it will automatically apply labels. So, but you see, for example, where Jeffrey Kennedy says this is wave 3, 4, and a truncated fifth wave, the automated labeling might not get it right always. Yeah, so it says here 0, 1, 2, which matches with our labeling, and then, or I'm not sure if it matches with our labeling 100%. We might have 1, 2. But yeah, so there are, but it's really, really tricky, and especially because so close that, because like here, like as mentioned, right now this could be the way we labeled it, but it also could be 1, 2, or not even, it could be 1 and 2 is not even finished yet, so this will be A, B, C, yeah. And so the automated labeling would just come up with something that's most likely But if you then trade based off that without verifying it, you kind of like, yeah, like I wouldn't say you're gambling. It might very often there might very often be clear situations, but it might also here and there get it wrong. Then the alternative software would be Wave Basis, which works in your browser, which we used in previous live streams till I think a week ago or so, and pretty much also has an auto wave count and alternative wave count. So it kind of like if you're on a high enough plan, it provides you with multiple potential wave counts. And you still need then to know your Elliott wave theory yourself to be able to figure out which one makes the most sense. Yeah. And it sometimes doesn't label it perfectly, so it might even label something that is actually invalid, so violated some rules. So it's like really, really tricky. I think while I enjoyed the automatic labeling in the beginning, to be honest, like now after only a few weeks, and I'm not using Elliott wave every day. Like I also have other things to do in my life than to look at charts, and so only after a few weeks, maybe total, I don't know, like let's say 100 hours of time, yeah, likely a little less, already with a little knowledge before, yeah. So it's not that I started 2 months ago and started from zero, but I already was working with Elliott wave theory. But during the last 2 months or since January or so, I might have spent maybe 100 hours using Elliott wave theory and looking into different tools and reading the book, rereading parts of it and so on, and reading parts that I initially skipped because I figured they're not super relevant when in fact they also contained valuable information. And now I'm actually happier with labeling things myself. What I'm still annoyed with is like, it's more like technical issues. Like for example, I don't know, if we go to Apple here, then my data source is not 100% accurate because if I jump on the 3-month chart, in reality the candles here were lower because my historical data here apparently doesn't consider the stock splits that happened, which leads me to label the wrong channels. Yeah. And so like for me, it's really more about like, is my data accurate that I'm working with? But if the data is accurate, then I enjoy the manual labeling more. And yeah, there are still some parts that I'm not great at, like estimating where a certain wave will go in terms of like profit targets manually. But there, yeah, like I think if you learn it yourself, the biggest benefit is literally like when we just took a look at the chart of costs, that the moment you start to do this more often, no matter which chart you look at, you instantly see patterns. If we go here and we look at Ziri, for example, 1, 2, 3, 4, although that would be a rule violation, so it would need to be a leading diagonal or an ending diagonal, 5. Yeah, could be. I'm just picking a random starting point, yeah. But could also be technically that this is 1, 2, because if that were 1, 2, then we would have a rule violation here unless this whole thing is a leading diagonal, yeah. And here 1, 2, 3, 4 could be like longer correction, could technically be, or 1, 2 extended third wave, 4, 5, yeah, where we likely are able to confirm 1, 2, 3, 4, 5, and where we're likely able to confirm 1, 2, 3, 4, 5 as well, or 1, 2, 3, 4, 5 to confirm it up till here. So also corrective patterns, like the more you do it yourself, the more or the easier it becomes. Like corrective patterns are still a nightmare, but in many ways, like you just become so much. That could be like theoretically a zigzag, A, B, C, yeah, and also in terms of the in terms of the length of that, yeah. So if we say like that would be like, I don't know, like maybe, yeah, I cannot draw that far, but if that would be wave A, and then wave C should be roughly similar. I mean, it's not exactly similar, and I may have picked the wrong point here, but yeah, the more you do that yourself, the better you get at it, the more sense things start to make, and the easier you spot where things are going, and the faster it is for you to, I don't know, if we jump on, maybe try Palantir, since I'm like they're currently not sure what's going on, yeah, like if we switch that on monthly, we don't have enough candles because it's a new stock, and if we switch weekly, still not enough. Daily might get interesting. And there we can already, like on first glance, this could be 1, 2, which would give us our base channel. The retracement might not be perfect here because that's definitely more than 38.6 and more than 61.8. But it could then also be that this is 1, 2, like, which actually might make more sense. So if we were to pick this here as, oh yeah, like, God forbid, like, yeah, like horrible to see. But basically 38.2 would be this line here, if I'm not mistaken. Although it's now reversed, so because this is an extension and not a retracement, so 61.8. So that would be actually the 61.8 retracement. So it's more likely that this here is 1, 2, which gives us the base channel 1, 2. A breakout here indicates that we are in wave 3. Now wave 3 here is like definitely an extended third wave, which gives us then our connecting point 1 with wave 3, parallel through point 2. Little tricky. The breakout here indicates that we are in wave 4. Now we could technically, yeah, like our wave 4 is definitely going till here. Very likely a triangle. So again, looking at this, so 0, A, B, C, D, E. So that's our wave 4, giving us our wave 5. And the moment we have our wave 4, although we had an extended wave 3, so there things are a little different, but the moment we have that, we can just do this and that. And I cannot mark it because there the interface of TradingView just doesn't want to let me in the right area. But that would be basically our target channel. It would be a little bigger. It should go through this point here, which means the median it would be a little bit further here as well. And that would be the target area of our wave 5, which we reach here. Now, because it's an extended fifth wave and usually only one wave is extended, it means that in this case wave 5 doesn't reach the boundary of the channel but reaches this one here, which means that here we have a corrective pattern. Yeah, so because all of this, so this 1, 2, 3, 4, 5 means it becomes wave 1 of a bigger impulse, which means if we clean that whole chart here and again Fibonacci from point 0 to wave 1, we expect a 38.2, or actually, again, because this is an extension and not a retracement, so this here is 38.2, and this here is 61.8, and we expect a retracement into that area. So between here and here, we fall a little bit further here, yeah, like it's not always perfect, but likely, and my assumption was that this is the corrective pattern, that it ended here, and this is 1, 2, and from here we go up, yeah, but as we can clearly see, if we were to apply Fibonacci here, and again I know it's going to look like him if I can, hello, Fibonacci. So if we apply that here, we can clearly see that we are already almost at the 100% retracement, so we are like basically at 80 something already, yeah. And so likely this is not 1, 2, but that's still part of the corrective pattern, which means this is likely complex like a complex pattern. It could be something like A, B, C, although we would need to check how that makes sense with that very long wave C, followed by wave X, and then that could turn into another triangle. So that could turn into another, I don't know, like, yeah, like gonna be tricky because I have sticky points, but it could be something that it ends up like, yeah, like this, and that would be then so ABC X, which works out as kind of like a zigzag, so ABC, and then here it would be 0 A B C D E, and or E would be there, and then we might break a little bit lower and break out from here. Yeah. Now that would be if it's a double 3. It could also be a triple 3, but since a triangle is always the last corrective pattern, and that starts like starts to look like the beginning of a triangle, I actually expect this might likely move sideways a little bit more in the triangle fashion, depending on how low that that area here gets right now. So it could be that we reach an area where this simply cannot be a triangle anymore, and we would then need to check what else it could be. But yeah, basically, the more you do, like honestly a month ago or so, it would have been way harder for me to come up with any kind of labeling here. And so yes, the automated labeling software helped to some extent to figure out how things could be and just like have them plotted on it. But honestly, if the automated labeling shows you a screen that looks like this, yeah, would you really understand what's going on? Like, are you already familiar enough with wave degrees that you understand like that because this here is a wave 0 to 1, it needs to have a impulse or leading diagonal in it, yeah, and so on. So like, if you do it yourself, it really has the better effect, yeah. So blah blah blah. I'm working on one, but it's a very difficult computer science problem. WaveBase is the best auto I've used so far, but even that is sometimes lacking, yeah. Yeah, like, the problem is, I mean, it's not a problem in software to, basically, I mean, Elliott wave theory takes high points and low points, and then based on that, you get your wave patterns. But then the problem, I think, with the automated wave is the orthodox highs and lows, yeah, because if we zoom out again here, then technically, yeah, now it actually is the case. But initially, for example, when we have a movement like this, A or 1, 2, and then we thought this here will be wave 3, and then it started moving like this, and we thought it might be 1, 2. So where not the lowest point is actually wave 2, but it's and the orthodox wave 2 is here, and that would be the unorthodox. And for labeling, we would use the orthodox one, yeah. And I think we also had similar cases in other situations already, where we basically were forced to use the, or to find the unorthodox, yeah, or like here it would be a perfect example because of that flat that exceeds the wave 3. So we have wave 3 here, and then usually we would expect the corrective pattern A, B, C to be lower than that point 3. But the labeling here is absolutely correct, and as a result, a computer might have a problem considering this option, yeah. And or like if we again look on Jeffrey Kennedy's labeling, where our high at 450 is not wave 5 but wave 3, and wave 5 is actually lower because it's a truncated fifth wave. So if it were always the case that always wave 5 has to be higher than wave 3, and always the lowest point is the point of the wave and the orthodox as well, then it would be much easier. But because that's not the case, you have the computer basically picking a wrong endpoint for a wave. So again, maybe it picks the low here instead. Maybe that wave C would actually be here, and then you suddenly would have to come up, what are those candles? Like, how do they fit into the next pattern when they in fact would be part of the previous pattern, yeah? And yeah. And yeah, wow, man, that's crazy. Yeah, it's definitely a lot of work to do. So what you're saying is HODL, yeah, William Leckie Beaver, just share info. These are all shares currently over 40% share float. Blink has been for over 4 days. All others just happened today. Blink, Eatwo, Flug, of course. You mean they are shorted more than 40%? I'm gonna check if I get any of that on eTower as well, because there is where I have more funds available. Flukt, obviously not. We had costs already. OSCR, no. OTRK, no. PubM, yeah. Well, gonna miss out there. But honestly, if I would have more funds right now on this account, it would likely go in GameStop or in Palantir. But yeah, for Palantir, actually, it means that I have to here, and also in eToro, I need to check that I take out my stop loss. Yeah, so because I have one there at 19 and 20, and we actually, if that turns out, because here I still have it labeled differently as mentioned, 1, 2, expecting that this already is wave 3, when it's more like, and I already labeled this as ABCX and then ABC and another ABC. So I already labeled this as double zigzag and a double 3, when more likely I'm going to update that real quick. So we're going to move that 2 somewhere. And yeah, I need to free up that, need to free up that, delete that, and that turns then into a triple 3. So where this C here is the last triple, that would be wave X. And now let's see if I can get there. And wave Z is still underway, which would then finish here. And and then this basically, I might be, doesn't have to be a diagonal, yeah, but it's just what lately, or a triangle, it's just what lately I started to like. Yeah, not like this. Tools, Elliott wave. And in terms of the platforms out there, Wave Basis is more affordable and definitely nice. And here we would still be in development, and then that would be C, D, yeah, and E would obviously not go that far down. So Wave Basis is obviously nice, but for example, in Wave Basis, when you manually label, you cannot really, you have no option to label a leading diagonal or an ending diagonal and some other corrective patterns, which makes it a little challenging. Yeah, now that might not necessarily be, as said, like it might not necessarily be a triangle. So we pretty much need a little bit more data. I mean, we need to, basically would need to see the upward movement to confirm our point D. And then also there are Fibonacci relationships, which are explained in chapter 4 on page 139, which say that if we make the 0 to 1, it would be, or the wave B to C should be 6.18. So, and while it's not perfect, you see that wave here is a little bigger. So the distance from here to here is a little bigger than 61.8, but it could be, yeah. And then the wave from A to B would need to be, so if we again, new Fibonacci, so wave from A to B would be 61.8 of C to B. So basically, or C to D. So basically wave D should be at like 24 point something. And we shouldn't really be able to fall much lower here because we are already a little bit further than the 61.8 that a perfect triangle Fibonacci wave relationship would look like. Yeah, so might not be that this is a triangle. It could also be, if we look at, it's also in the Fibonacci section, but in chapter 3 on page 126, when we have a triple 3, it can be flat, flat triangle, flat, 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 zigzag, flat triangle, or zigzag, flat, flat. So it could be zigzag, flat, flat, zigzag. That's not really a flat, but also zigzag, zigzag, but we don't have zigzag, zigzag. Yeah, so likely that's still not labeled 100% properly, but it technically is possible that this here is also just an ABC pattern in some way and will not be an ABCDE, or there are also longer ones. So when we look at triangles, as you can see, there are also those with 9 waves, so where we have A, B, C, D, E, F, G, H, I. Yeah, so yeah, H, I, the 9th letter of the alphabet. So, but yeah, for Palantir, that means that I'm going to take out my stop loss, and if we move a little lower, I will just average down because it just looks like our corrective pattern is not done, but overall it still looks like we are good to go. And it also means that here I don't have a stop loss. Great, so there it's already fine. So, and back to GameStop. So and zoom in a little bit. But yeah, so yep, so says Finvis Elite. Yeah, so apparently those stocks are heavily shorted. So, and the first one, COS, we looked at, even if we don't use Elliott wave theory, but just look at it, it looks like a huge bull flag. So even without Elliott wave theory, we might expect a breakout there. But unfortunately, yeah, like I could invest on Interactive Broker, but there I don't have enough funds ready. And so I'm going to stay out of that one. And yeah, how much are you paying for your data feeds? On Interactive Broker, I currently have subscriptions for €60 per month, so which cover the US market and the European market for stocks. But as we see in the indexes or indices, yeah, whatever, you know, like Standard & Poor's and so on, are not included. Yeah. But I'm still considering, like I'm still dealing with support from both MotiveWave and Interactive Broker to figure out why my historical data, like if it's like, likely it's an issue with Interactive Broker, so I might likely switch from I mean, keep my trading account at Interactive Broker because I like how it integrates, but switch my data source to bar chart again, where I would pay $79 per month. I wouldn't get the level 2 data, which, while it is kind of like nice to look at and fancy to look at, I'm not using it that much either. So, yeah, like overall, it would keep the price in a reasonable area. And yeah, so here technically, by the way, so we had the 38.2 retracement and we had it twice. So, but this point here is higher. So it's again one of those situations where we would have to figure out if 1, 2 is like this, or if 1, 2, or if 1 is actually here, and then this would be wave 2. And again, when we look so close, it just gets impossible for us to confirm further. Like technically this could be 1, 2, 3, or 3, 4, 5, and followed by A, B, C in some way, followed by, I don't know, yeah. So it's like kind of like, when we look that close, it gets hard to confirm. But I think it already becomes unlikely that our entire pattern here would be A, B, C, because for that, this here would also need to divide into an A, B, C, yeah, and it would already go quite high. Although it might then play better in the overall picture of our correction not going way or far too low. So always tricky. And you obviously like interactive better than wave basis. Well, that's not Interactive Broker, that's MotiveWave. So MotiveWave is the software. Yeah, so that one costs me $159 per month. Although one has to be fair, yeah, if we look at MotiveWave, and for MotiveWave you need a data source, but you could also, if you're not day trading, so once we're done with the whole GameStop thing, I might stop looking at the 5-minute charts or so and just trade based on the daily charts. Then you could just use Google as your data source for free, and but you would not have like hourly charts or stuff like that, just daily. And but it would still be likely enough to come up with should you buy or should you sell, yeah, so with your overall labeling. And yeah, and so the software is MotiveWave, and there, if we look at the editions, you basically have the regular Elliott Wave edition for $89, yeah, and the Ultimate edition for $159. And if we look at it, there are some differences, but when it comes to Elliott Waves, you already have all the Elliott Wave tools in the $89, so that you can multiple degrees and manual patterns and semi-automatic and so on, yeah. And on the higher plan, you just get a lot of bonus features, yeah, so like extra things. And for Elliott Wave, it would be the advanced Elliott Wave, so that technically I can right-click and say I want to trade wave 4, sorry, and have it automatically create positions for me and automatically close them at certain profit levels based on certain ratios between the waves, yeah. So there are some features. For now, I subscribe to the Ultimate Edition. I only tried once to use the auto trade, open chart by, yeah. So, and we saw it basically didn't work out well because it opened 3 buy positions and then seconds later already closed them, yeah, with a small loss for me. But yeah, like once I figured out how that trading or the trading stuff works, it will actually be nice, because you can then literally you just label things and you right click and say trade wave 2 and trade wave 4, and which basically would mean wait for the end of your wave 4 if I got it right, and it would then actually trade wave number 3, yeah. And yeah, like should help a lot and save time in terms of manually creating positions, yeah. No, Google for data, I mean, if you day trade, of course it's slow and it has a delay and so on. But if we, for example, if we, let's say here, Google, GameStop, GME, and then that would be the Google data source, yeah. And oh, we even have 5-minute data here. Let's just gonna double check that. Edit instrument, connections, Google, yeah. So that data comes from Google, and didn't know that it also has 5 minutes. But if we compare that, I don't know, doesn't look much different to me. Yeah? So pretty identical actually. So not even lacking behind here for some reason. Yeah, I mean the price doesn't refresh that often, but if you then really just look for most stocks, I actually didn't notice that we also get the data for lower time frames. But if you really just use it on the daily time frame to label and then trade on daily, where you anyway would end up holding your positions for a couple of weeks, I think it would be sufficient. And then you basically just need the, remove that ticker. You just need Motive Wave. And I like Motive Wave for a bunch of reasons. Like, first of all, we can have unlimited charts open. So I could open GameStop in 50 variations. And if I want to, I can link the charts as well in some way. And so I can have multiple labelings open for GameStop. Like with the right broker, like TradeStation, Interactive Broker, and a few others, you can even manage your positions in Motive Wave, which is nice. And as you can see here, we see the profit of that one share that I bought at 140, and how it will affect when the price goes up and blah, blah, blah. So, and for the Elliott wave labeling, obviously it's nice that we have different wave degrees. And unlike wave basis, where when you auto label it, it also sets the right degrees. But when you manually label it, you have to manually right click and set wave degree. And Motive Wave, the moment if I change the degree of the blue wave, it automatically, if the points are connected, automatically changes all the other degrees as well. Yeah. Plus, in wave basis, maybe you label this 1, 2, 3, 4, 5, but you're not sure about how to label this part. So you label it manually, and then you use the auto label for this one. It will always delete your manual labels. Yeah. And in here, I can basically, every time I just use the impulse tool, and by now I know the keyboard shortcut, so I can either say 1, 2 and manually label it, or with the same tool I can just click and drag and have it auto label. Yeah? And it doesn't affect my previous labeling. Yeah? And then there's like other things, like I can click on a Elliott wave, and then somewhere we can say, first of all, we can also do ratio analysis, but I haven't looked too much into that to see the Fibonacci ratios between certain waves. Yeah, so wave 1 and 3, or 2 and 3, and so on. Oops, no, don't delete that wave. Just get rid of the ratio again. Ratio analysis, get rid of it. Where there also are shortcuts that I just haven't learned yet. And also you can, show second wave range, which is this second wave, okay. Then it prints the range on the chart, which is then useful if we consider that the wave 2 of the next impulse of a bigger degree should retrace into the area of wave 3 and 4 of the previous degree, of the impulse of the previous degree. But then there's also somewhere, show the channel. So now I anyway manually created my channel, yeah. So like similar to the Kennedy channeling technique, it then prints the channels on the chart, and like a bunch of other stuff. So show ratio price, blah blah blah. Yeah, also time analysis, which is obviously the least accurate. So in terms of how waves or predict the when, yeah, and again decomposing. So where you basically say, okay, fill one level lower. And in that case, we already have lower levels. So, hide the ratio again. So, but if you can manually label an impulse and then just have it auto label the subwave for you if it can. Yeah. So, but as said, like as long as you can look into the details, like it's literally the trading strategies and the Elliott wave scanner, which I haven't used too extensive, plus the other stuff. But Hurst cycles are total garbage in my opinion. Looked into it really. Advanced Fibonacci pack might be interested, but likely you also don't need those. Yeah. So study scanner, we already had that. Option chains, gauge panels and so on. So likely the $98 package is already enough. So for now, today, because my trial expired today, I rather subscribe to the big one. So we definitely have everything we used to, instead of discovering, oh, now this and that is missing. And the scanner would be this feature here, which I showed in a previous stream already, where we can basically set up a scan. So I mean, give it a name, pick Elliott wave, then select your instruments, say time frame, and you can pick multiple. You could say 5 hour, 1 hour, 1 day, 1 week, and so on, and then say wave 2 or wave 3. Yeah, again, how many bars it should consider and how many levels, and then you just save that. And when you start, it starts to look at all the stocks and says, okay, in Facebook we are currently in a wave 3, starting from here, and you have to verify that it's not always correct, yeah. But basically, you could use that to already just have like 100 stocks or how much ever you want to monitor, and then once per day, if you day trade, or once per week, have it look at it. And yeah, you see that here, for example, it would tell 0, 1, 2, and wave 3 going to the bottom. And the other one would be 1, 2, and we go up. Yeah, so you see that it detects 2 different wave 3s, one going up, one going down. But it already would be a good idea maybe to take a closer look in that case at Siri to figure out which one is it, and then depending on that, close your positions or open positions or whatever. So, but if it's worth to pay the actually double, yeah, not sure yet about that. So I might also downgrade. And yeah, you can also create multiple screens. So that's our home screen right now. But I could also say I create another chart screen just for GameStop. So where pretty much everything are just GameStop charts on different time frames and so on. And I'm not yet sure how great it works with multiple screens. So actually we can test it real quick. Or hopefully I don't break anything. But technically, can I drag that screen? No, cannot. Okay. So in terms of window, bring to front, restore, yeah. Like, so if you have multiple screens, it may not be super supportive of having charts on multiple displays, yeah. But yeah, overall, that's why I like it more than wave basis. And I think the biggest difference, well, on wave basis, even on the highest plan, you have limits in terms of how many charts you can have and so on. And when you then close a tab, it doesn't save anything. So if you switch from GameStop to Facebook, or on the lower plan, you can have 3 charts open, but 3 tabs open with a total of 10 charts. But basically, you can look at 3 assets more or less. And so if you want to look at the 4th one, you have to close one, and then when you switch back, your labeling is gone. Whereas in Motive Wave, as long as I don't manually delete everything, or now even if I clear the local data, it just clears the candles but not my labels, yeah. So if I switch between charts, my labels are still there. So it's like a lot of reasons where I think wave basis is great when you're just getting started, yeah. So it's kind of like, it's better than using something like TradingView where you have zero assistance with Elliott wave theory, so no validation. But it's cheaper and easier to set up because you can use it in your browser than Motive Wave. But at some point then, Motive Wave seems to me like the right step. Yeah? And especially because of things, if like this is a corrective wave, so if I would try to label this here as, which I will not be able to, but if I try to label this, you see it already doesn't let me do certain things. And if I would label this as 1, 2, 3, 4, 5, it would tell me wave 4 is a corrective wave, cannot contain an impulse or so, or even other things, like if wave 4, if I put it down here, then it tells me wave 4 terminates within the range of wave 1. So just for those cases where you might not pay attention yourself, or maybe where you're zoomed so far in that your wave 1 and 2 is out of the screen, and then you think it's wave 4, but you suddenly see, oh, it's not possible. Yeah, so I think it just takes it to the next level, but at a price tag where it only makes sense once you already grew your portfolio a little bit. Like if I would just trade with €1,000 here, it would not be justified, because the €60 for the data feeds per month plus even the $98 for the lower subscription of Motive Wave, I would never be able to make that profit every month without taking insane risks, yeah, to pay for even that, yeah. But considering my overall, my overall portfolio is around right now 21,000. So including my crypto holdings, yeah, without them it's around 15 or 16,000. So still not a huge amount, but it becomes more reasonable that I'm able to recoup the costs for the software. Need to drink more when I'm talking that much, yeah. And yeah, it might be, by the way, that we still haven't seen of that wave, the end of that wave 4. But at that point, then I would wonder if the whole pattern actually looks reasonable, yeah. If not really, it's more likely that this is our wave 1, with our wave 2 maybe still being in progress, like not being here, but being like finished somewhere here. Simply because of the way how it looks, you know, like we have a very quick 1, 2, an insane 3, if that is like this, and then a very long 4 that might not even be finished yet. So that could again be A, B, C, or even it could be a flat followed by some other weird sideways correction, because we are blessed with long, boring sideways corrections in GameStop. And yeah, so tricky. I think the only thing that's missing here is that we have alternate labeling on the same chart, so that you can literally have like, I don't know, Marcus alternate, or that you then color code different ones. But still, there you could likely just split the screen, that you have one left, one right, and then you have one labeling here and a different labeling on the second chart here. And yeah. And then, yeah, like you can decide if you want to show your positions on the chart, which works best if you actually open the chart from the position list. Yeah. And yeah, if you want to have your take profit or stop loss visible, where they can also like easily drag it up and down the way you want to and adjust it like in the chart. So a lot of benefits or nice features with MotiveWave, especially if you have a browser that, not a browser, a broker that supports it, yeah. Yeah, but yeah, we're still looking for that one post on Reddit. Sit back. Synopsis, is it maybe mentioned in there? And yeah, also there were stocks of a lot of bigger banks dropping. Yeah, I think the most popular were in the aftermarket. I think the Royal Canadian Bank or so. I don't know, like if we can find the stock of them, but Royal Bank of Canada. Now back at normal, but in the after hours, I'm not sure if here we cannot turn it on to see it while we are in live. But I think during the after hours, there were like a few small volume traded at like $30 or so. But maybe I got the wrong stock, but it was some Canadian bank, yeah. And then we had the news about there being lights at Citadel headquarters and so on, yeah. During the weekend at 3 a.m., basically people working there. Google Translate. It could be crypto related, yeah. So, okay, so ABN AMRO settles for almost $500 million with the Public Prosecution Service for inadequate checks on money laundering. Former CEO Salm suspect. Okay, he's suspect, okay. Because they failed to combat money laundering. Not sure if that is related to them, yeah, committing some fraud. Just they neglected to kind of like do something against it, yeah. Blah blah blah. Okay, then yeah, never mind. No dates. Yeah. Yeah. Domo Capital Management, the ones that also last year already basically said GameStop, great investment opportunity. So do like a kind of like an AMA tomorrow, yeah, on 420. And yeah, so uh, whatever. Okay, yeah, so still not finding the right post. GameStop announces CEO succession plan. Let's see if there's something worth showing. Does it say Cohen anywhere in there? No. So on July 31, George Sherman will be stepping down, or earlier upon the appointment of a successor. The board of directors thanks Mr. Sherman. Yeah, definitely, blah, blah, blah. Okay. Blah, blah, blah. Yeah, so nothing really super bullish there, but let's keep looking. Okay, also just speculation in that other post, so not worth really talking about. Yeah, nothing. We keep dropping here, which might indicate that this really is just a longer corrective pattern. Again, much fun, so wow. Yeah, I mean, OVS 61.8 could still be 1-2 in some way. That's something interesting, like a survey from Robinhood. A group of investors used Reddit to coordinate driving up the price of GameStop stock. Yeah. Please rate your level of agreement. Robinhood delivered timely communication during GameStop events. Robinhood was transparent in its... yeah, sure. Yeah, definitely. Yeah, like the title says, if you're still using Robinhood, it means you have absolutely no respect for yourself. Yeah. And I agree with that. Obviously, I get that some people cannot switch right now, and so on, because the transfer to Fidelity or another broker might take a couple of days, and if we go to the moon during that couple of days, you might not be able to sell and whatnot. But I would definitely not deposit any additional funds at Robinhood, and as soon as possible, personally, I would, as soon as possible in terms of, yeah, like once GameStop played out, like withdraw my funds from there and pick another broker, like, but that's just me, like, and I'm anyway not at Robinhood, so. What else do we have? The mother of all squeezes or all short squeezes will take a week or longer. I'm not sure, like, I'm not sure if it will take a week, if it can even take a week, because, I mean, even if nobody sells, like literally nobody sells, then there are still some shares always available, like already people with a sell limit order, like for example at a price of $1 million per share. And yeah, but like based on the volume, simple, like what do we have daily volume right now? 5 million, 3 million. Yeah, I mean with daily volume like this, definitely would take a couple of days. Yeah, if the stock is still shorted more than 100%. If we have daily volume like, I don't know, like this here, 40 or 28 million. Here we had 45 million. Here we had 22 million, 70 million, and so on. Yeah, so then we would be more likely here on one day 129 million volume. Yeah, so there on that day we technically, if they shorted 100% of the float, yeah, technically could get through the squeeze in one day. Now I don't think that's going to happen, but I think that's a 2-day event. I don't expect it to be a week. So like, but maybe it will be. We will see. Like, time will tell. New regulations, which actually are not regulations, which we already talked. So what we showed earlier in the stream, that like the SEC announcement, yeah, and the comment here, I'm gonna just pause the video. The comment here actually, if the lender lends out the share, they must have capital on hand to cover. If the lender does not have capital to cover, they must recall your shares, forcing the short to cover. I don't know why the lender would need capital cover. He's just lending the share to somebody else, and that person needs the money to cover. That doesn't make sense to me. If the lender has capital and the shares can still be lent out, no problem. But, and big but here, the lender probably doesn't want to be on the hook for this, so likely to just say fuck it and recall your shares unless the capital required is trivial. Okay, yeah, like, I mean, I don't understand why the lender would need to have the capital at the first place, because they're just lending out your share to somebody that would need to have the capital cover. But if it's like this, then yeah, technically it would make sense to say, okay, well, I'm not going to take the risk for your shorting, so I'm going to recall my shares now. Yeah? So theoretically, yeah, but the word lender is used everywhere. So theoretically, if it were the borrower, then I would understand it. But it really is, and further comments also go into that it's more about lenders, and it would then basically mean that some banks and institutions would reduce the amount of shares that they're willing to lend out to basically manage the risk a little better, which would again create a shortage of shares. So there would not be like that many shares to sell or short, and would make squeezes more likely in No, actually not squeeze is more likely, but will make it harder for short sellers to drive down the price unless they use naked shorts where they don't borrow anything. So no, if you have a margin account, it's actually technically different because it just means you buy on margin. So instead of if you, for example, on eToro, you could have a 5 times leverage and you then as a result have actually a contract for difference with eToro. But if you just have a regular margin account and it's not clarified that you're then trading as a contract for difference, what would happen is if you open a position for $1,000 and you have a 5 times leverage, you're actually buying for $5,000, just that the broker would lend you the $4,000 line of credit so you can do it, which means that every 1% increase would not be 1% for you, but 5%, and every 1% decrease would equal 5% loss for you, yeah? And so there would be that. And it literally is about like the lending out of shares, and that would only be that you only borrow shares for short selling. That's where you borrow a share. Other than that, you're not borrowing shares. So if your account has margin, then you're still, I mean, the only difference there is, I'm not sure if you're borrowing a share then, but I think there's then a difference in terms of the settlement dates, because if you have a cash account, all your positions settle today plus 2. And if you have a margin account, they settle instantly in quotes, yeah. I'm not sure if that's lending you shares, if they basically, I mean, that would be, for that to be the case, lending you shares would actually again make it a contract for difference, because you don't own the share, you also don't pay interest on the share, I guess, and you would have a contract for difference where you actually never bought the share from the market or from anybody, but if the price goes up and you close your position, the broker would have to pay you the price difference between at which price you loaned it, I don't know, no, not loaned it, but yeah, and the price you closed it for, or if the price goes down, they would keep that difference. So, but I'm not 100% sure, like, considering what people on Reddit are writing and so on, I think it definitely affects bigger players and not the average retail investor. Yeah, but yeah, but we'll see. We'll see. Osama, yeah, welcome here. So no problem. Like, I haven't looked at DE0. I haven't heard of it. Like, stock company or what's that? DE0. Nothing I can invest on. So let's ask Google. Online stock trading, stock broking. I haven't used them. Cannot say, like, no experience with them. I would check where they are regulated, and then based on that. And I would then check their pricing and so on. Is this food for me? Oh, cool. Yeah. And think only makes sense at higher volume, because you also pay for each order, kind of like a minimum fee of 50 cents in euro plus 0.04 cents, dollar cents per share that you buy. And for me, I'm currently picking my broker pretty much based on what integrates. Yeah, and Interactive Broker has the best integration into MotiveWave, and MotiveWave is the best software that I found so far to do my analysis and make up my mind. And so yeah, I'm willing to accept a few other maybe downsides simply because of that. So, but we'll see if that is the right choice in the long run. Yeah, and yeah. So, but yeah, like, so we'll see if that news event is relevant for us. So the 22nd, if it changes something. If it really would mean that they have to have the cash on hand to cover, it would technically lead to some kind of share recall. So they would need to recall some of the shares from the people that currently sold them or they borrowed them to. And it would technically might not change anything because they would have time to find somebody else to borrow a share from to keep their positions open. It might not be forced to cover. If you wanted to add to your GameStop position, then would it be a good time to buy today, in your opinion, since we are at the start of wave 3? Likely will not go much lower for the week right now. Well, first of all, just my opinion, you obviously should do what you feel is right, yeah. But if our labeling is correct, we will not go lower. I mean, we might go technically, if this labeling here is correct, 0, 1, 2, 3, the lowest we could go would be to not into like 156, and that would be already like on the cent the lowest we could go before this becomes invalid, yeah. And if that labeling is not correct, then we would look at a 1, 2 labeling, where in most cases our retracement would go into the 38.2 or 61.8 area. So we would potentially or could potentially fall into this area of 160, maybe a little further. Yeah. So, but overall, like, it's really just my opinion. You really need to do what you think is right. Overall, I think that we have the accurate labeling with this endless long correction ending here, and this actually being the start of the 1, 2, 3, 4, 5 that will take us upwards. To really confirm that, we would need the breakout of this channel here at above 200. So to really have a confirmation that we are in that wave 3 now. But if this is a wave 1, the way we confirmed it here, that corrective pattern here is definitely over because it ends with a triangle, and which makes this then a wave 3. And while technically we could still go back here to some point, but yeah, like, I don't see it getting much cheaper, but I might be wrong. It happened from time to time that we mislabel things, but right now that still fits nicely. Like, I mean, that here would fit right now especially nicely to say, okay, maybe we see a drop a little further here to 160, yeah. So, which invalidates the idea that we have, how do we have it now? Wave 4 end here, but then that might still be part of wave 4 in some way, but we would have to figure out what kind of corrective pattern that whole thing here is, yeah. And although I'm fairly confident that this here could, or that here checks out very nicely as a flat, so, and the alternative again would be if we would say like 1, 2, 3, 4, 5, and this would be wave 1, and then our corrective wave wouldn't start from here with a flat, but would start from here and would likely be A, B, C, although part C is not really nice here, and we cannot really confirm it because we are not able to confirm that this is a zigzag or that's an impulse. And then the question is what kind of, then that would be wave X in a double free correction, and leaving us with the question what the heck this part here is supposed to be. So, whereas if we look at this, yeah, we are still okay, like 61.8 area and bouncing off of here would still be okay for 1, 2, and then 3, 4, 5. Would just indicate that likely our wave 3 will not be super sharp, because obviously it would lead us to a lower or flatter base channel. So a breakout out of this channel would then indicate that we're in the progress of wave 3. And yeah, so yeah, so pretty much it's like, I think honestly, if your opinion is that the price will go beyond 1,000, then it doesn't really matter if you, in my opinion, if you buy at 165, or if you buy or hope to reach 160, or hope to maybe even close that gap, yeah. Like if you would buy now and basically let's say we reach 1,200, 165, no, vice versa, 1,200 divided by 165. So you already look at 700% return, and if you buy $10 cheaper, it's like, yeah, I mean, it's 50% more return or less return, but it's like, so it's really, like, if your belief is that we go into that area, I mean, in my opinion, yes, but it's just my opinion and I've been wrong before. So then doesn't really matter. Then if you have more funds, then you could also consider like buying half of the shares now. And if you think that maybe we might see a little bit more of a drop, using some conventional trading techniques, we could also likely, if we take this point here and this point and parallel through this, we could likely come up with a trend channel and say, well, it's likely to bounce from here and we will go there. Yeah. So if we use conventional techniques and ignore other aspects, or maybe connect, oh, now again I have a trend channel, but maybe if we do it like this, so that would be an outlier of the trend channel, but other than that, it's nicely in the trend channel right now. Yeah. So again, where maybe the median here serves as a support where we will bounce, which, while it might not be perfect, but if we look here, kind of like the median line got very close and held. Yeah. Here, similar. So it's like no matter what you want to see, I think on a chart there's always a way to draw lines and channels and so on to support your theory. Yeah? And my theory would be that it will not get much lower, but even if we would close the gap here, my overall theory is that we go way, way higher, so won't change anything. Robinhood and Massachusetts. The Massachusetts Securities Division's attempt to prevent Massachusetts residents from choosing how they invest is elitist and against everything we stand for. So it's only okay when you restrict trading. Got it. Okay. Oh, it's on the Robinhood blog. Yeah. Okay. Yeah. So I don't know who Matt Taibbi is, but a nice quote. Your problem is that you're trying to look at it as an economic story, but once you look at it as a criminal or as a crime story, you'll get it. Yeah, so definitely true. Friendly fucking reminder, obviously, OBF is at 1.4 billion to the positive side. Strap in, I'm about to double the fuck down, no dates, just info, okay? Blah, blah, blah. When I relabel, does it mean, well, when I relabel the part that is wrong, so where I have a rule violation. Right now, depending on how this develops, I relabel only this part. If the price were at some point to fall below 152.20, I would have to assume that my wave 2 here is wrong, and therefore I would need to relabel, yeah, like a little bit more. So, and if we ever fall below, or not ever, but in the curse or in the case of labeling this, if we were to fall below 132, then I might need to relabel this part or this entire part till here. If we fall below 116, or no, in that case 38.50, then I would need to relabel all of that. So it really depends on how the chart develops. But it's like, yeah, like you never should forget, like when we look at this here, it might look like a lot of information and we see like a lot of candles here, but if we switch to the hourly chart, yeah, you already see that it's like a very small part. And on the daily, like we're literally looking at this here, at this small area here in the entire journey. Yeah. So while we might have to relabel parts quite I wouldn't say often, but especially in corrective patterns, it's very challenging to label them and might have to adjust the corrective waves more often. But overall, like I think the worst corrective wave we had was actually this one here, where we had to relabel quite often. Like we got this part right straight away, but then from here on out, that whole part we relabeled, I don't know, 10 times or so, yeah, until it eventually made sense. But yeah, like if you put things into perspective, we are looking at 3 candles or so, or maybe 4 candles under the microscope, simply because in the 5-minute chart we have movement. If we look on an hourly chart or daily chart, the streams would be more boring. Yeah? So I really recommend, like, grab your copy of Elliott Wave Theory, either order the physical copy, or there's a link in the description. You can read the book online for free and just read it. It's like, I mean, you guys are all anyway waiting for the squeeze to happen, which means if you're watching my stream, it means you're kind of like have at least some time to divert some attention to the stream. And while it's great when you're here, I mean, obviously I like to have viewers on the stream, but you might as well also just read the online copy of the book. Like, mute the stream unless there's like some big movement, and read the Elliott Wave Theory. It would also help you in some way, because when I then explain something or share my theory, it would obviously provide you with, like, you would have the knowledge to say, oh, that's wrong, or I disagree, and obviously it would help everyone else in terms of the more people learn more about Elliott Wave Theory, and you don't even have to understand everything. I also definitely don't, or am not a pro with everything in Elliott Wave Theory. But the more you understand about Elliott Wave Theory, the more likely you come up with an alternative theory. So if I label it like this, you can then just take a screenshot of your labeling, upload it at imgur.com, share the link, we look at it, and we get alternative approaches. So maybe I missed something and you then spotted it. So definitely. And even if not for that, not for GameStop, once you read Elliott Wave Theory and you see how accurate it is in so many cases, you might just have a trading strategy that helps you in the future as well, outside of GameStop, within other investments. So definitely look at it. And yeah, it's kind of like, like with the whole relabeling part, it's not necessarily, it doesn't mean that it's wrong what we did. It simply means usually that we jumped the gun. Yeah, like, so for example, if I label this here A, B, C, and say this is wave 4, and here we go 1, 2, 3, 4, 5. I don't have any confirmation that we right now go 1, 2, 3, 4, 5. And corrective patterns can also be complex corrective patterns, like double zigzags, triple zigzags, and so on. So I'm simply assuming that it makes sense. This could be ABC, and from here we go up. But it doesn't mean that it has to be like this. So it's just me already labeling what I think makes sense. But then we need candles on the chart to see if that makes sense. The tricky part are really the corrective patterns. Like, besides the 1, 2, 3, so the waves up, when we label 1, 2, 3, 4, 5 on a smaller scale, it's usually the easier part, yeah? So, but yeah, so looks we keep dropping here, which makes it likely, I don't see how we can have a zigzag here though. A, B, not happy with that being a zigzag, but it's likely that our corrective pattern has not finished yet. So this could be a like, there are then multiple options how we could label this. But again, like, we're looking at less than a day here. So, and it's kind of like, yeah. If you think about Elliott Wave Theory, it's about human mass psychology. Yeah? And when you have the 5-minute candles with like 13,000 shares out of like a whole day with a couple million shares traded, well, 13,000 is not a huge mass. Yeah. So while the patterns still apply, but it simply means that it's like trickier to label them because we're looking so close. And when we're looking so close, we cannot zoom closer to confirm them. When we are labeling the daily chart, we can at any time jump to the hourly chart or 6-hour chart or something like that to see if we can confirm the patterns, because there are rules with how each wave has to be structured and so on. But when we're looking at the 5-minute chart, we run pretty much out of options to confirm our labeling. And the only way then to confirm it is by price action on the chart. So by new candles that confirm or show us we were wrong and we need to see what else we can label here. Yeah. And right now, with the retracement going much further, while it's still possible, yeah, so it's still possible that this turns to a 1, 2, and we go from here to wave 3, it simply becomes unlikely. Not impossible, but unlikely, because our retracement here went too far. And only once the price goes below the 162.33, so below this point, is it impossible that this is wave 1, 2, but it simply would mean that the corrective pattern is not finished, yeah? Which brings us to the other alternative that we already mentioned, that actually this is 1 and this is wave 2. Although then if this would be a zigzag correction, so with this being wave A, then this here being wave B, then wave C doesn't really look nice in terms of having the right look for a zigzag, yeah? So we would then need to look into what other or corrective patterns fit here. So Nuns with Guns is at work and lurking, sadly, yeah, but I mean, that's also fine, obviously, and for you it might not be able to read the book as you go during work, but I mean, for many people, they are anyway so distracted by the whole GameStop situation from whatever they should do that they might as well read the book. It also depends on your job. If you're sitting in front of a computer, yeah, and therefore you can open the Elliott Wave website and read the book, and if somebody comes, just switch to another tab, then it's obviously easier than if you work, I don't know, like in construction, where you just maybe have the phone somewhere with the stream, yeah, and maybe able to listen to what I'm brabbling, yeah, but definitely not having the capacity to read a book, yeah. So it really depends. Just saying, like, it's definitely worth reading, not only for your own interest, but for everybody else, because again, it would mean that we have more people that come up with alternative labelings, which means we are better prepared for different scenarios, and we can better discuss like what's more likely, why something is less likely, and so on. And overall, the overall predictions become more accurate because we consider more options. Yeah, like I might see 2 options here. There might be 3 other valid labelings that I don't see, but somebody else sees. Yeah, I can only be here because remote work due to COVID. It's another viewer that helps. I got a lot of projects though right now. Yeah, like, I mean, that's already great. And if you're working at home and you have a lot to do, I mean, I get that. That's the reason why we're now only streaming Monday and Fridays, because I just otherwise drown in all my other tasks. And so can totally relate. And I appreciate you being here every stream. And yeah, I pretty much actually appreciate everyone that tunes in. And obviously, especially everyone that also here and there finds the time to label for themselves, like Ben, for example, that always provides some kind of alternative labeling, or simply provides confirmation that he agrees with my labeling, and so on, yeah. Because it helps everyone. It helps me with my GameStop position, it helps everyone else, and I think the biggest benefit of Elliott Wave theory is, even if we on the small scale here and there have to relabel and struggle in quotes a little bit, our overall predictions are more or less unchanged for quite some time, and they point upwards, which provides me at least with the calm that I can watch it go down from 350 to 120 without selling or worrying, and just know, in quotes, again, it's just my opinion, not financial advice, that's why the air quotes, know that it will go up way further, so I'm just going to hold through it. And yeah. One also has to consider, while Elliott Wave theory seems so, at least to me initially, it seemed so, first of all, ridiculous, and second of all, so static. So, okay, you have 1, 2, 3, 4, 5, yeah? And wave 3 always has to be the longest, and so on. So when you first learn about it, kind of like seems so static, and by definition, it means if it's so accurate, then it should be so easy to always predict where things are going, yeah? But when you then learn more and you learn about leading and ending diagonals and about the different corrective patterns and so on, extended and truncated fifth waves, third waves, and so on, then you suddenly realize that there's a lot of flexibility to it that is responsible for it always applying, because you have the flexibility that also considers rare situations, but it's also responsible for making it like not 100% accurate when you label yourself, because what currently might look like pattern A and might check out in terms of all the rules and guidelines are fulfilled might change into pattern B with a few more candles on the chart. I'm currently riding the Ryan Cohen wave. That also works. He's a great CEO. Even without like Elliott, that's one of the things why, I mentioned it multiple times, why I like Elliott wave theory as well, because it does not rely on short interest. It's not, Elliott wave theory doesn't say because there is short interest, that's why the prediction is that we will go somewhere up there. It simply says based on human mass psychology and Elliott wave theory, the next step has to be or is supposed to be up there. And that's why I don't have to worry if the short interest, I don't know, I haven't even checked for a very long time, but if we go to FINRA and check what was the latest reported short interest for GameStop, Dup. 10 million shares out of 70 million, if I'm not mistaken, so 75 million or so. So that would be like 15% short interest according to the reported numbers. Not sure when they last updated, likely 5 days ago or so, like I think every roughly 2 weeks. So, but yeah, if that short interest would be okay, then there is no squeeze, or if that short interest is correct, then there technically is no squeeze, and then it's kind of like if that's the only analysis that I have, oh, there has to be a short squeeze because they couldn't possibly have covered already, then I would panic when I see a drop from 350 to 118, but when my Elliott waves also tell me no, we're good, we're going up, I don't have to care about that number, if it's their true number or if they reported fake numbers or if they manipulated the reporting in some way by using synthetic longs or I don't know what, I don't have to care about that. So it's kind of like, I have a feeling point B might be a bit premature, point C might be a bit premature. It could probably going down to about 157, 80, 158. What do you guys think? No, like if this is a flat, so if that's correct, then no, because while it's a guideline, but based on page 90, I think it was, and there the rule for flat would be wave C is always an impulse or diagonal, and that we can technically already, although it's going to be challenging, but 1, 2, 3, or extended third wave, 3, 4, 5. So that would already be an impulse, and wave C is usually between 100 and 165% as long as wave A, and that would be the point where we take our Fibonacci extension, and that would be wave A. Then we put that from the starting point here, and we move that over, and we would see that we are within the 165%, so 161, but we don't have a lot of wiggle room, so that would be the maximum. It's usually, that was a guideline, not a rule, if I'm not mistaken. Page 90. Yeah, it's a guideline, But so if it is like this, then that wave C isn't labeled prematurely. If we drop further, then there's, I think, 2 possible options. Again, number 1 is that still this is 1, 2, 3, 4, but 4 is not finished yet, so that would be a flat followed by wave X and followed by some other corrective pattern that I have no clue how to label. Or the more likely scenario would then be, I think, like I don't know, like somebody earlier labeled 0, 1, 2, 3, 4, 5, and basically then would brownish golden 0.5 would be here, and then this could be, for example, A, B, C, yeah, but then we would actually also reach the 160 area, yeah, although I don't like that it's in the shape, it's not perfect, yeah. Nick says Volkswagen squeeze only near 10%, but there's a huge difference because with Volkswagen, Porsche owned 95% of the shares or so they literally owned the entire float and were controlling how much they released. And at some point they released 5% of the shares to not make the squeeze so bad, because they didn't care about the squeeze, they cared about taking complete control over the company. And whereas with GameStop, there is not one entity that owns 50, 60, 70% of the shares. There are some institutional investors that own more, and according to the Nasdaq website and other sources, the institutional investors alone already own more than 100% of the available shares, yeah, which indicates that the stock is shorted, yeah. And then you have the insiders that own shares, which indicates that the stock is more shorted. And then you have retail investors like me and you and so on that own shares, which indicate that it's heavily shorted. But the point still is it's a total different situation, because it's not one person that owns almost all the shares to take over. But at any point, there could be a post on Reddit that gets some people to panic and sell 100 or 1,000 shares or 10,000 shares combined. Yeah, so it's by far not the same situation. My point being is, I'm not saying that the stock is not heavily shorted, but I like to stick with the facts. And the facts are, nobody can prove that this number is not accurate. I'm not saying that it is accurate. I'm not saying like, oh, the stock is not heavily shorted, yeah? Because if we take the sources, so if we go to Nasdaq and check institutional holdings, then we can already see, I don't know how up-to-date those numbers are, but those is the officially 105% of the shares are owned by institutional investors. Then, then you can look up somewhere how much the insiders hold, so management and so on. Yeah, I'm not sure if it's listed here on the insider activity or if they're just the latest transactions, but so to me personally, because that number, if that's correct, it means that 5.16% out of 70 million or 75 million shares, yeah? So total shares outstanding 70 million, okay? So 70 million times, like basically divided by 100 times 5.16. So there's already 3 million shares that only exist because they can only exist because somebody shorted them, just based on that number, yeah? If it's accurate, not sure how accurate it is, yeah? Then, okay, there we have the institutional. Do we see total shares traded, net activity? Yeah, it's going to be hard. Do we see shares held here? Is there a sum somewhere? No, there is no sum, so it's going to be challenging. But if we would have that number, we could do the same, calculate the percentage of those shares, because they already would have to be shares that only exist because of shorting, since already institutional own more than 100%. And then we could go to retail, and I think we likely get more than 10 million in short interest, yeah. But the point is, nobody can prove that this number is accurate or is inaccurate. It might not be up to date. It might be from 2 weeks ago or something like that, but nobody has solid proof. Yeah, we all have circumstantial evidence. Nobody has solid proof that the 105% institutional ownership are up to date and accurate and so on. So while I also think that the stock is heavily overshorted, that's something where simply if we look at the official sources that we have available, we don't have enough information to say it with a 100% certainty. We have a lot of circumstantial evidence, or one could argue that, or say that, well, based on the short interest at 140% that we had in January or February and so on, or January, the volume that was traded here was not enough to cover, yeah? Or actually the volume technically would have been enough if we look at, where did we have it? 130 million shares traded here, so definitely enough to cover 100%. But then the price movement would have needed to be bigger, yeah, in my opinion. But if we just look at the volume and take it out of context with the price movement, then yes, technically they could have covered. They could have also covered when people panic sold here because of buying restrictions and so on. So I'm not saying that they covered. I'm not saying that I think that they did. I'm just saying I like to stick with the facts, with things that we can definitely verify. And what I can definitely verify is that maybe they covered, maybe they didn't. I don't care. My Elliott waves tell me we go up. Yeah. So, and yeah. Yeah, those numbers are self-reported, but it's like it's the same thing. Like if we say, does Elliott wave theory apply in GameStop because it's heavily manipulated? Or if we violate a rule, maybe there's a rule, like for example, we have the rule that wave 4 is not allowed to go into the area of wave 1 unless it's a leading or ending diagonal. Yeah. Now, if that happens and we start to say, well, but the stock is heavily manipulated, so maybe that's why the price fell a little lower. Yeah. Then we kind of make our own excuses for breaking rules to fit our buyers, to come up with labeling that supports our theory that there will be a wave 5 that goes upwards, when in fact we should accept, okay, the labeling is wrong because we violate a rule, so we have to redo the labeling and come up with what actually makes sense. Yeah. And the same is when we look at short interest and say, well, but it's self-reported and they have every right or every incentive to lie about that. Yes, if they still hold big short positions, they have an incentive to say, we're just going to lie on those reports because the fines are ridiculous combined to the suffering that happens if they keep up the buying pressure. Yeah, but that's again, we don't have a proof that we don't have any proof that they reported it wrong. Yeah, I'm not saying that we also don't have proof that they reported it right. But if we always jump to the conclusion or to the theory that supports our narrative without any evidence, then I think we might set us up for some kind of disappointment in terms of how long it takes. Yeah? Because with Elliott, and that's again why I love Elliott wave theory, because I don't have to care about short interest. I just care about how the price develops, how the labels apply, and based on that, at every turning point, I roughly get an expectation how far we will turn in the other direction. And the further I zoom out, the bigger the waves, so the bigger the prediction in terms of where we are going. And yeah, like I also expect the squeeze to happen, in my opinion, but that's the one thing where simply, yeah, like, I don't know, like based on misinformation, manipulation, or whatever is going on, there are no facts. There is like the facts that we have available would suggest, like the official fact, short interest that is reported would suggest that there is no squeeze. Yeah, still doesn't change anything because Elliott waves still tell me we go up above 1,000. And in my opinion, if we look at a monthly chart, yeah, if we reach 1,000 in a week, or if we reach 1,000, I don't know, like here like at the end of the year, or maybe early next year, February, March next year, well, I couldn't care less. It's like an insane return, like a couple 100% return, even if you just bought at 150, yeah. It's still more than 100% return if you bought at 480 in a year. How many stocks are there that make that kind of return in a year? So even if there would be no squeeze and we just organically, according to Elliott wave theory, go up here to 1,000 or above 1,000, yeah, I still don't care. So that's why I like Elliott wave theory so much, because I don't have to care about short interest and all that stuff. I check those things from time to time. I obviously check the posts, what news are there, the new regulations. And one important thing, there's a lot of evidence that points towards a potential squeeze, like just a lot of coincidences, like the SEC for the first time since 1973 appointing a new, I think not director, or maybe director, which the last time they only did during a huge financial crisis, which would be a sign that maybe they expect another financial crisis and they want to quickly get it done, yeah? Or all those rule changes in terms of, like, for the DTCC, that not the entire group suffers if you over-leveraged yourself and get margin called and don't have money, but first your reserve is spent, then you have to sell your positions and so on, and only if that doesn't cover, then the community pool is used and so on. So there's a lot of evidence that supports our theory, yeah, our combined theory that the stock is heavily overshorted and there will be a squeeze. So we have a lot of single pieces that all point into the same direction, but we also have facts, in air quotes, that say, well, sorry, but short interest says no. Yeah. So, what is the biggest expected number provided by Elliott wave theory under the current labeling? Hard to say, because currently we're only labeling till wave number 3, so we're not looking at the following wave number 4 and 5. And while I did that in my initial posts, and I personally, like, it comes down to, it comes actually down not necessarily to Elliott wave theory, but it comes down to, is the stock more than 100% shorted or not? If the stock is shorted more than 100%, then it means once or if we have a squeeze, the short sellers would have to buy every share that is available at least once, which means even my one share that I hold here in this account with a sell limit order at $1 million would execute. Yeah, and if I would sell that sell limit to $10 million, it would also execute. Yeah, and if I sell it to $100 million, it would also execute. Now, would I receive that money? Not sure. There's a lot of other factors that probably play into that, but the order would be forced to execute, because it would then be the short sellers would buy all the shares and so on. But at some point, my one position with that insane price would be the last one that's currently available, and they would be forced to buy that. Yeah. If the stock is not shorted more than 100%, so basically they don't need to buy every share at least once, well, then that one position might not execute. So, and however, if it's shorted more than 100%, then we would look at something like an extended third or an extended fifth wave, where we shoot wave through through any price target. Yeah. It's going to be interesting to label the squeeze when it happens, and it's going to be quite challenging as well. But we're also going to have drops on the way up, and simply because of trading halts, people paper handing, people already thinking, oh my God, we're at 1,000, it won't go higher. Oh my God, we're at 10,000, it won't go higher. Oh my God, we're at 100,000, it won't go higher. So I don't know. Personally, I think the sky is the limit. I think even although it's just one share that I hold here in this account, overall I have like 80 shares or so. But I think, I don't know, like I don't plan to change that. I mean, when we label out the squeeze, and we should see we will not go there, okay, then I would just manually smash the close button at some point. But other than that, that sell limit will stay at 1 million. And yeah, I know it's just one share, so it's not, oh my God, I'm YOLOing and hoping for 1 million with all my shares. But it's also because on eToro I cannot set a price that high, so yeah. Sorry, I just need to correct you on that. They don't have to buy every share. They need to buy or replace each share, which means that they need to make purchases the number of synthetics. So as long as people hold more, now I cannot read that because of some stupid notification. So as long as people hold more than the real float, infinite squeeze is a go. Yeah, but only if the shorted shares are also bigger than the float. So only if they have to buy more shares, cover more shares, however you want to call it, then are available like floating shares. So I think we are pretty much saying the same. So, and if we would have 10 million, so if the short interest reported on FINRA, if the 10 million short interest of FINRA would be correct, well then that would not be the case. I'm not saying that that is correct. I'm not saying that we won't see a squeeze. So, but if that were correct and the short interest would be 10 million shares, then technically, yeah, like even on the, yeah, like here, 25 million volume, 50 million volume. Yes, I know recently we have almost no volume, yeah, but we see that there is enough days with where we have more than 10 million volume. And I don't know, if we would consider, for example, on this day we have 130 million volume, and the price moved, yes, from 80 to 160, so doubled, yeah, but, or even then in the aftermarket went even further, I get that, yeah, but if the 10 million were correct, then covering them would even right now, even if they would split it up, so even if they don't, if they're not forced to cover and they accept, okay, we're gonna cut our losses and we slowly cover if the 10 million short interest were correct, they could literally every day since whatever, since this point here, here it's 14 million volume, if they dare cover a couple 100,000, maybe 500,000 shares, maybe it wouldn't drop like this, yeah, maybe it would then go straight, or I don't know, but, and I'm not saying that they covered, so it's like, I'm just trying to be like, you know, like focus on what we can literally prove and make a difference between what we can prove and what is just, while there might be a lot of circumstantial evidence that supports the theory, it doesn't make it a fact. It just makes it like a strong theory with a lot of supporting evidence. Yeah? Okay, I think there's a ton of naked shorts hiding out there. The FINRA showed institutional ownership having the whole float, plus retail has a ton. Yes, that's also like what I said on, like, based on the Nasdaq website, that based on the institutional ownership, there already have to be like 3 million shares from the Nasdaq website for GameStop. So there already would have to be 3 million shares short just to create the 5% extra ownership institutional. And then insider ownership, I don't know the number by heart, how many insiders shares own, but I think Ryan Cohen alone owns 9 million or so, which would already, they all would already be kind of like synthetic shares, or they own the real shares and some of us own the synthetic ones, doesn't matter. But that already would, if he owns 9 million shares, if I got that one right, then we would already be looking at 12 million shares shorted just with the institutional ownership, and Ryan Cohen, not considering the other insiders and not considering the retails. Yeah. So I'm saying we have strong evidence. Yeah. But the point is, just like we can say the short interest that's reported on FINRA or wherever is wrong, one could also argue, well, maybe the number of institutional ownership is wrong. Yeah? I'm not saying that it is, and because that number comes from somewhere else, from the files, instead of from self-reported. Yeah. So, yeah, like my core point is, again, that's why I like Elliott wave theory, because I don't have to worry about what of that is wrong and what of that is right. I have my opinion about it. I'm also saying like we go up, yeah, but I don't have to swing or try to bend things in my direction, yeah. And I know there is like way more evidence supporting the theory that the stock is still heavily shorted than there is any kind of information that says otherwise. But still, yeah. But again, Elliott wave theory is still showing over 1,000 with or without short, so short, but just gonna make a good situation better, yeah. Yep, like 1,250 to, or with my prediction it was 1,300 to 1,500, and according to Jeffrey Kennedy it would be around 1,250, and that would be just wave 3, so it would not be the end of the line, it would be a stop along the way. So, and yeah. But that would even be without a squeeze, and with a squeeze obviously we would look at extended waves and blah 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 and whatnot. So yeah, it's crazy that the numbers are so unreliable when the money we're talking about is so big. Yeah, I agree. Like it's like there's no transparency, and it's not even that the money is so big. The problem is more that the fines are so ridiculous low, and the fines are so ridiculously low, so that for whoever is on the other side, like short selling and so on, I mean, you would do the same. Like if you were in the situation, okay, either lying on some report where you get a $10 fine if somebody figures it out, or reporting the reality and then having to declare bankruptcy 2 days later because you provided the people with the last motivation to buy more, yeah, you'd also lie on the report. But that's just an assumption, no proof there. So, but if we were to point out, like, or like kind of like write down all the evidence in terms of that the stock is still heavily shorted and that something is definitely brewing, yeah, and likely blowing up, versus all the evidence that, which pretty much is just the official short interest number, that they already covered, then we would likely have a huge pile supporting the short squeeze is coming, and the short interest number on the other hand, which is self-reported, yeah. But again, I think it's like a dangerous habit if we like try to like always explain things that don't go the way we expect them to by, oh, they manipulate, oh, they lie. Might be true, likely is true, but if we go down that road, it kind of like just leads us to, yeah, next thing would really be, even with Elliott wave theory, to yeah, like ignore rule violations, because the labeling supports our buyers, and so we would say, yeah, but that's just because they manipulate the stock, or that's just because of a short ladder attack or whatever else, yeah. And in the end, it would just, yeah, like end to some kind of disappointment. And yeah, the higher we can get pre-squeeze, the better, yeah. Like, yeah, but even the squeeze, we will be able to label it with Elliott wave theory. We will not be able to predict the targets precisely because we likely will shoot through those predicted targets, yeah. But we should still be able on 10-minute or 5-minute time frame to label things out. So on daily, weekly, monthly, and so on, it might be more challenging. On there, we might not see the end of the wave pattern, so we likely will just have a wave 3 or wave, yeah, like likely wave 3 will be the squeeze, followed then by the drop after the squeeze to some reasonable price level, yeah. And then wave 5 of that pattern will then take, I don't know how many decades probably to develop to at least get into a reasonable area to confirm that it's a wave 5, yeah, in my opinion. Or, yeah, I mean, we will see how it plays out. But again, like for me, the most comforting thing is the knowledge that no matter which short interest number is correct, I don't have to care about that because even Elliott wave theory tells me, okay, just hang in there, we're going up. And because I'm playing for the bigger wave, so what we're labeling here on the 5-minute chart is just for practice purposes and entertainment. I also don't have to worry too much if I get a labeling on this 5-minute chart wrong or so, because it doesn't affect me. I'm not gonna sell now and buy then later. So yeah, I know we shouldn't talk about dates, but do you think the Morris will happen sooner or later? No idea, no idea. With Elliott wave theory, no idea. Like there are methods to predict the time or the when, but that's the least accurate of the Elliott wave method. So it's kind of like the least reliable. Yeah, it's possible to some extent, and sometimes that comes true, sometimes it doesn't, but it's not what it's meant to be. And if we consider Elliott wave theory, it would still take a little bit, because we have to consider that waves also should look reasonably. And if this is our wave 3, this is our wave 4, now we need some time to develop our wave 5, like of that smaller degree here, that takes us to 1,200. So it will not just shoot up in one candle, yeah? So, I mean, maybe it goes up to whatever. Again, in my opinion, we have to go be above 500 to trigger a squeeze. So maybe we have like a slow growing or fast growing wave, whatever, that takes us above 500 and triggers some kind of squeeze to get us the rest of the way. Then we anyway would look at trading halts, people paper handing at 1,000, maybe that making our wave 4, so this one here in the circle, and then taking us further. So just have to wait and see. Like that's the point. Like as mentioned before, what does it matter? Even if it takes till February next year until we reach 1,000, it's still an insane return. It's still, even if you bought at 480, you still look at more than 100% return in a year if it were to take that long to organically walk that way up. So greed and impatience are the reason why people lose money. So yeah, in my opinion. So just hang in there and wait. Now it's boring that we have this sideways movement again. And at this point, because it's not really looking like 1-2 anymore in a way that I like it. So we'll likely are looking at, definitely. So first of all, I need to move that wave here. So that goes here. And we're likely looking at either this is either this is still correct, 1, 2, 3, and that's wave 4 with A, B, C, X, and whatever gonna be tricky. X, A, B, C, yeah, doesn't look nice. Also not really a triangle or something that's developing here. Or the other option would be a set that this here is wave 3. Oh no, sorry, this here is wave 3, 4, and 5 of this degree, which makes this then wave, wave 1 of a higher degree, and makes this then the current wave 2, blah, 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 which now doesn't connect it to the wrong point, yeah. So, but yeah, like looking, we're likely, and then in this case, if we look from here to here, are we still within the retracement areas that are okay? Yep, so between 38.2 and 61.8 is kind of like our expected retracement area for wave 2. So at this point, it looks more likely like this. Might need to move that a little, and then, yeah, so. But the expected area, as we see, if this is an ABC correction, would actually be down here. And there, this sideways movement doesn't really fit well because usually those the zigzags look quite similar. And I mean, yeah, and then that would be actually a wave 2, so it cannot be a triangle. If that is wave 2 indeed, then that would be 1, 2. It kind of like just doesn't look nice. So yeah, we'll have to see. I actually expected that today we will get to see more play out. So didn't expect that we will have a slow sideways movement here. But it also means if wave 2 is a longer correction, then wave 4 will be a sharp one. So it means that while we suffer now, once we finish this purple wave 3, the following wave 4 should then be a sharp correction. Although I still think there can be an argument made that our previous labeling of 1, 2, how did we have it, 3, and currently wave 4 is valid, because this one here is a quite easy correction, so it's nothing complicated, and this one here is as well, which kind of violates the, yeah, like, I'm not sure if it's a rule of alternation, but yeah, like corrective patterns should alternate. Although one could think that maybe, no, like the wave has to end here because that would be 1, 2, 3, 4, 5. If it would end here, we don't have enough candles to make this an impulse. So wave 4 definitely would need to be here. That could be a zigzag, yeah. So it's tricky, you need a few more candles to see what it is, yeah. And yeah, as said, in terms of dates, it's like everyone would like it if the squeeze happens today. We go to 1 million, 10 million, 15 million per share. Everybody can sell at the top, and we're all super rich then, and whatever, yeah. Or that it happens tomorrow, or that it happens next week, but nobody knows. And yeah, like even if you think about a date, the problem is you then start to expect that date, and if it doesn't happen, we just have disappointment. And if you honor the core rules, so don't invest money that you cannot afford to lose, don't invest money that you need in the near future, don't buy on credit, yeah, so like only invest money that you can afford to lose and stuff like that, and only invest into things that you believe in. So not because I'm saying I think it will go to 1,000 or my labeling suggests it would go to 1,000, but because you do your own research, maybe confirm what I'm saying, or use some other kind of due diligence to confirm and come to the same conclusion. Yes, I agree, the price will go up, and then that's why you buy. And if you know the price will go up, especially if your perception is that will go from 160 or earlier 150 or even earlier $50 or $40 and so on to more than 1,000, then the date doesn't matter. Even if it happens in 1 year, still an insane return. If it happens in 2 years, still an insane return, yeah. So dates completely irrelevant. Like, would be nice if we would know them, but yeah, like based on Elliott wave theory, I actually, again, expect it to take a little bit of time to develop the patterns that should be there for things to also look the way they are supposed to look with Elliott wave theory. Something that I initially didn't pay too much attention to, but I learned that that's a crucial aspect. So, and so, yeah, like so many channels there now. So that's just what, yeah, like I'm doing. Zoom, 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 zoom. There we go. And what else do we have? Yeah, they're watching. Just bought 2 more shares. Uh, okay. The SEC was ignoring securities manipulation to focus on money laundering. Okay. There we have somebody with 111 shares and bought all of them above. Like, see, that's like when you know why you buy, then you likely don't care if you look at a, what's that, 50% loss or so, yeah? Right now, pending loss. Because you simply, as long as your analysis doesn't change, it just means that you got in too early in quotes, but if you thought it will go higher at 300 and if your analysis doesn't change, you still think it will go higher. And yeah, so that's why it's important to do your own research and not just buy because somebody else tells you, but to come to your own conclusions so that when you have a dip in quotes, that you don't panic. And in theory, they can only keep kicking the can for so long, yeah? Yeah, sure. Definitely, especially if the price keeps going up, which means their margin, available margin would get smaller. But yeah, we don't know all the tricks that they have available. There are some things that we speculate, some things that we know, some things that they probably do and we have no clue about. Yeah, so especially if there are multiple people or institutions that kind of like try to hold together, then the question would be, how much money can they come up with to just like delay things in the hopes that people get too bored, yeah? Or maybe slowly let it go up to whatever 500 and you know, like kind of somehow come up with the money to not get squeezed at 500 and then try to short it down from there again or so and spread the narrative, that's it, there will be no squeeze, whatever, yeah? Have you looked at Dodge? No, I don't invest in Dodge. I don't, like, it's a crap. In my opinion, like, when it comes to cryptocurrency, if you have a coin that has no maximum supply, so literally can be printed to infinity and serves no purpose, that's like, yeah, like, I don't know, like, when it comes to crypto, I invest and look at coins that have a purpose, solve a problem, and definitely, if they have no maximum supply, then it should be only because the additional supply serves for inflationary purposes. But yeah, Dodge simply is literally a coin that was created for a joke and until now doesn't have a purpose. So something I'm not gonna recommend, comment on, or invest myself in. But yeah, if people, based on Dodge's popularity, based on Elon Musk's tweets, are investing their money in there, it's their own decision, but that's something I'm gonna not do, stay away from, and not gonna recommend anyone to do. So yeah, so that is possible, but that is a fine line to walk between letting it run and not letting it get out of their control. Yeah, but if we, I mean, it's kind of like, you know, that's like a conflicting thing. On one hand, people are saying, well, there are so many naked shorts and they are still naked shorting and so on. Well, if they're just naked shorting to whatever extent they want, then they could also let it go to some point and they would have enough shares to keep it in check, because they could just create way more naked shorts to keep it in check, yeah? In fact, if we say they are printing naked shorts or creating naked shorts without borrowing the shares, then yeah, they could technically hammer it down to any price, yeah? What do you think of the new boss for SEC on our side? Yeah, that's what I mentioned earlier, that it's been the first time, according to a post, the first time since 1973 that a new boss was appointed on a Sunday or on a weekend. And might be possible, but might also be completely relevant and for some other reason or completely random. It's like that all those things are, what's the right word in English? Conjecture. So kind of like yeah, could be good for us, could be completely relevant, and dangerous. It's dangerous to tend to try to look at everything as like if it's relevant for GameStop. Like, I mean, the stock market is bigger than GameStop, so, and I'm sure the SEC also has a million other things to do and regulate other than the stock market, so cryptocurrencies and so on. And I'm sure they also are responsible for a bunch of other stuff. So it's like, yeah, like I also like to think that many of the things that we see and figure out and learn and the news that we see, that it's like GameStop related or good for us as being invested in GameStop. Yeah, but on the other hand, as so often mentioned, like then I'm really happy that I have Elliott wave theory that I personally use and rely on, that simply tells me, well, whatever, if it's relevant for us or not, overall my labels still tell me we're going up. And so, yeah. Seems like we're just waiting for some news from the company that will result in a huge increase in trading volume. I don't know. I mean, there has been already great news, like new, first of all, getting rid of the old CEO, looking for new CEO, new key hires, and so on. And still, that's actually good news, is the point where short sellers usually have the best point of attack to, oh, there's good news, but the price is still dropping. So the average person that has no clue assumes, well, then there must be something else going on if it's dropping after good news, yeah. If they print shorts to bring it down, it will be interesting to see what happens. But I mean, the fine line would be avoid. Yes, the fine line would be. But if we on one hand assume everything happened because they can just, or they did just print naked short. I mean, I'm sure they did. But if the assumption is they do that to whatever level without any control, then technically they could literally do that till the price hits zero, because at that point they don't have to buy back the shares anymore, and all their naked shorts become pure profit. Yeah, so technically, I mean, maybe there's some fine line there. Yeah, maybe because of all the media attention that's already there, that's why they cannot do it. Yeah. Technically, they could also, I don't know, like maybe they could start to actually buy shares and go long to some extent, and I don't know, like, but still buy shares, but still spread negative media coverage to have enough of average people sell, so to have their buys not drive the price up too much or so, and then at some point sell those shares, yeah, and combine it with naked shorts to double the effect of the dump, and yeah, like maybe not drive the price down fully, but then cover the naked shorts because they also actually sold shares plus created panic and so on, so that their covering of those naked shorts or of whatever maybe real shorts that they create there doesn't cause the price to jump too far up again. It's like yeah, and we don't know who's in bed with them. Exactly what I mean. Like so much we don't know. That's why I don't want to. When I say something is not proof or it's not sure, we don't know for sure, it doesn't mean that I don't believe it. I just want to be the voice of reason here that says I already have something that has been apparently accurate for at least 100 years on the stock market. Yeah, that tells me we go up. So I don't need to additionally hype or point out, look at this news and it's likely positive for us. Yeah, nice green weenie. Yeah, like depends on where we go here. So still tricky to be sure about where this correction ends. Like if we go up from here, then technically it could be 1, 2, 3, which means that our wave 2 would actually end here. Or as I have had labeled it before, 1, 2, 3 and 4, and we're still in wave 5, so it's like tricky. Still 2 or maybe even 3 possible patterns that apply, and they pretty much only vary if we go up from here, if we first go a little lower. Yeah, so the overall thing is still we go up. So I think crypto is being manipulated by hedge funds as well. Look how the Doge dropped this weekend because institution can't trade days will say. Doge is literally the only thing I'm not gonna look at. Like it's Elon Musk is tweeting about it and people based on just his tweets jump and buy it without doing any research. There are literally so many great coins out there. Yeah, StoreJ, Geo, potentially Phonium, basic attention token, like so many really great coins and tokens with a real purpose that solve real problems, like that really serve a purpose, that are properly, that were not created as a joke, but with the intent to solve a problem. HNT for helium, for example. So they are like pouring money into a coin is like, it's literally into a coin that was created as a pure joke, in my opinion, like pure gamble. Yeah. Sure, some people make huge returns with Doge right now, yeah, but I had non-financial friends contact me this weekend about crypto investing. Generally a good sign that it's a good time to sell and wait for dump before re-entering. Yeah. Like it's like the same thing when the media starts to talk about something like you should invest in gold, or back then when they started to talk, especially in Europe, once the media started covering Bitcoin, we were like in 2000 whatever, close to the $20,000 or euro mark per coin, and media started mentioning Bitcoin and its hype, and people started buying, and then we had to drop. Yeah, so. And you know, like, I mean, maybe Doge serves a purpose at some point, yeah, maybe, but you really have to consider, it's like if I would suddenly, I start my printer, or I set up a coin based on whatever, the Ethereum blockchain, like an ERC20 token or something like that, and I literally just use a picture of an ape and I call it ApeCoin, and I already tell you that there is an unlimited supply. Just with your computer, you can constantly mine more coins. There is no limit, and the coin serves no purpose. Yeah. So why would that coin increase in value? It's like, based on that logic, US dollars should constantly increase in value, although the government constantly prints more. Yeah, it's. Might be a good gamble, might have been a good gamble, like kind of like technically created, somebody actually developed a trading bot that every time Elon tweets about something, it buys that and then sells it a little bit later. Yeah, so Elon tweets about Doge, go buy Doge and then sell it half an hour later, or maybe an hour or a day later or so. Yeah, might need to check the time of his tweets with bumps that then happen. Yeah. Dogecoin has fixed inflation, so it will matter less and less over time. Okay, I will need to check that. Still doesn't change the fact it doesn't serve a purpose. Yeah. So. Yeah, probably. Like Elliott wave principle is about mass psychology. So you have a ton of people buying that coin, and even if some on purpose bump and dump it, yeah, then you have people panic selling, which is again mass psychology. So Elliott wave theory likely applies there as well. It's just one of the things that I personally, yeah, like I just don't like the coin in quotes, yeah. Doesn't mean that people didn't make insane profits, or maybe still will make insane profits off that coin. Just for me personally means that I don't want to spend my time. But I also have to mention, for those that didn't hear that on previous streams, I do not invest in crypto. Like I mine Bitcoin, I receive basic attention token based on my YouTube channels and some other stuff. I receive geocache or geo tokens. I earn Phonium. I earn Crow, so the crypto.com coin, with my cashback card and other stuff. And then there is, what else is there? Oh, StoreJ. So I run a StoreJ node as well and earn that coin. I pre-ordered or ordered 3 helium hotspots. That first one should arrive early May or mid-May. We will see some shipping delays. Yeah. And so I do not buy crypto. Like I look at coins and projects that I like, and then I look at how can I get that coin or the token by setting up a node or doing something else, so that I have an investment, ideally in some hardware, because I can sell the hardware at some point with a certain percentage loss, but the hardware likely will bring me coins for months or years. And yeah, and then if I believe in a coin, I simply hold it. I mean, here and there I bother to try to apply Elliott wave theory and to determine how the coin's value will develop. But then usually I do not bother to sell in between, especially because you also have to consider taxes, which most people don't do. Yeah. So for example, if I hold crypto for less than a year, I have to pay more taxes on it than if I hold it longer than a year. So if I were to, yeah, like with the coins that I anyway mine, if I just hold them, maybe they drop in between because Elliott wave theory tells me there will be a drop. But if my wave theory also tells me that still we have long-term potential and go up, and especially because I believe in the project, then selling in between and so on, it's just more effort with tax calculations. And in the end, the additional profit is not so big because every time I sell, taxes from the profit. Yeah. So now it's error, can't see you in Sweden. I would say try to refresh, but if you can't see me, you also cannot hear me. I'm still here, so. And yeah, so it's, for example, also an issue if we think about eToro. Yeah? On eToro, my popular investors portfolio, although it's not big and so on, you guys all know that, but it's pretty much, initially I had one Bitcoin position, yeah, or I think it was one Bitcoin position, but since then I pretty much stick with stocks. And why am I doing that? It's not only, so there is like crypto, there was one, but that was before people copied me, yeah. And why am I doing that? Because not only for myself, but for people that potentially copy my portfolio, because if we go to copy people, and we, I don't know, let's pick this guy here, whoever that is, yeah, and we check his portfolio or check here. So he's invested in stocks, commodities, ETFs, crypto, and indices, yeah. So when you copy his trades, and there are 1,381 people currently copying him, congratulations, and likely has a nice performance, yeah. Once per year, you have to then go to, I think settings, if I remember it right, account, or no, like portfolio, history, and then go to here and go to account statement. And then here you would set the range, for example, for last year, and get your account statement. And then this account statement, which you can then download as Excel file or PDF, yeah, will contain every position, so every CFD, ETF, cryptocurrency, and so on that you bought, sold, and you then need to pay your taxes depending on the tax law in your country, based on your position. So you basically, if you copied that guy that we had here, and I'm not saying he's a bad popular investor, he really seems decent performance, a lot of copiers, but basically last year he had a 17% return, this year is already at 27%. And if we look at 173 trades total, so not that many positions for a period of roughly 1 year, yeah, but you will then have to declare taxes. So his report for last year would likely contain 170 positions, and you would have to declare taxes or figure out, okay, which one were crypto purchases, which one of those positions were held less than a year, which one were stocks because there are different taxes likely, which one were contract for differences, so CFDs, because there in Austria it would be, if we were talking about Austria, the cryptocurrency held less than 1 year would have a different tax than those held longer than a year. Regular stock held less than 1 year would have a different tax than hold longer than 1 year. Contract CFDs would be taxed differently because they are considered speculative products and so on. And so in the end, while you might look at the nicer return, but because every trade that he executes is also executed in your account, when you then do your taxes next year, it might turn into a nightmare to figure out, and especially if your currency, if you live in a country where the currency is not US dollar, because all those things here are basically US dollar based. So you would also have to then consider and look up the conversion rates for US dollar for all those states and figure out how much it was actually in your currency to determine how much real profit you made, and then probably also declare the profit or loss that you made based on the foreign exchange between US dollar and your currency during that period as well separately. So, and yeah. Blah, blah, blah. Here's a short snake or free snake, however you want to be pronounced. For some reason, although links are not blocked in general, they are blocked. So I disabled it already multiple times, but people cannot share links. So if you want to share, like, you see it, I know, but nobody else sees your Twitter link. So you would basically just, for example, need to write it differently, so, and people would have then to do some work. So for example, instead of sharing the actual link, you could write twitter.com and then / and again with spaces and then whatever, yeah, so that it's not a link and YouTube lets it through. It's kind of annoying, but I haven't found a solution for that yet, so yeah. But I'm also saying, like, for me, core aspect is still the coin was created as a pure joke, so, and there are so many other crypto projects I'm actively looking into. So while if you can share the link to the thread about, like, a lighthearted thread about Dodge, maybe some of the other people would like to look at it. For me, like, it may be stubborn, you know, I may be like really stubborn in that aspect, but for me, Dodge is something I'm just not gonna waste my time on. And that's how I see it personally, yeah. It might be missing out on one opportunity, I get that, yeah. But I don't know, like, if I jump where the wind blows or so, if I bend where the wind blows, then that's not who I am. Like, I'm able to admit when I'm wrong, yeah, so that's not the problem. Like, so for example, like, yeah, also you mentioned that Dogecoin has fixed inflation. I'm not sure about that, yeah, like, so but I'm also not gonna say I don't believe that, it's wrong. I'm just saying I'm not sure about that. And if it's like this, yes, then the inflation might not be an issue, but yeah, still serves no purpose, created as a joke based on a meme. That's like, and then it goes to the aspect, you know, if you think about cryptocurrency, for example, how much energy is burned to mine Bitcoin, so literally how much energy, how much other great projects don't proceed or cannot make progress because cryptocurrency miners buy up all the graphic cards with the nice chips that would be also used for example, machine learning, yeah, and AI development and so on. Where then other projects, maybe something like an AI that develops vaccines for something or so, cannot be developed further because there's a shortage of GPUs and other chips. And yeah, so if a coin serves a purpose, like again, Helium serves a purpose, basic attention tokens serve some kind of purpose, yeah. CRO from crypto.com, yeah, serves a purpose as their currency, as like for cashback and so on, yeah. Geo serves a purpose. Phonium, not sure yet if it really, I mean, it tries to serve a purpose, time will tell if it really serves a purpose and so on. But if a coin is literally created just for, yeah, like no reason at all other than to be a joke, then yeah, like, yeah, I think, I mean, you get my point, but I'm also, if you believe in Dodge, or if you see it as an investment opportunity, I'm not gonna judge you for it. It's like, it's your decision. And I fingers crossed for you, then really wish you the best that you make profit from those trades or from holding Dodge. For me, it just seems, I don't know, yeah, I mean, anyway, already got that. Yeah, we're still looking, by the way, at some boring sideways movement. Now at this point, it's kind of like, if that would be a wave 2, it cannot be a diagonal, by the way, yes, or a triangle. It's impossible to be a triangle then, yeah. But yeah, it wouldn't be like this then, but it could be a double free, although it wouldn't be nice, but then again, yeah, I mean, it would fit that this is an easy correction here. Oh no, that's one on the smaller scale, so, but it could be a double free, which would likely, or could be like this. Yeah, not like that, but wave C would actually be to this point. And then, the diagonal could then technically, there we would need to have an A, B, C again. So, and then the diagonal would start here. If a triangle would start here. So A, B, C, D, E. And we could confirm that to some extent by looking again at the Fibonacci retracement, because if I'm not mistaken, the wave here should be, yeah, doesn't work out properly because we fall short of the area that we should have. So we'll have to wait and see a little bit to see how that works out best. And yeah. And yep, so, oh no, can I close that? That would be a bad idea. And can also check, did I get cash back for the motive wave purchase? Check Crypto.com. Doesn't look like it got purchased for the domain renewal. So I'm gonna move that. God, I love like Curve, for example. So didn't get cash back on one card for the motive wave purchase. And so I'm just gonna go into Curve and take that purchase and move it onto another card where I will get, in that case, miles. There we go. And then change the category. That's a business expense, not entertainment, business. And cancel and business. There we go. There we go. Yeah, but so I actually really thought that today we will see a little bit more. I mean, I knew that we will see at least on 1 degree, like a 1, 2, 3, 4, 5. Now I'm still not sure if this is our 4, 5 or if it's 3, 4 and we're still waiting for the 5. For that again, like we're kind of like waiting to see how that plays out. But considering if this would be 1, 2, 3, 4, 5, then that overall pattern would already look so distorted that by now I'm actually more convinced that this is actually correct. 1, 2, 3, 4, 5. And then this is 1 and we have like this endless wave 2. And yeah, and then just take it from here. And yeah. Do we have anything else relevant? And that one's nice, road to the moon, So you see, it's also an Elliott wave, but from the other side. 1, 2, 3, 4, 5. Yeah, so just gonna, it's maybe the road back from the moon once we are there. And back we go. And and no new messages here. Up. And how many? 6 p.m., 5 p.m. Okay, I think that was the to check. 8. No, that's not updated. Or is it? Yeah, I'm multitasking, as you guys can probably tell, or cannot tell, since we're just doing nothing. We need a stick to poke. And yep. Curious, since we have our power hour coming up, if we see some power then or not. And also interesting, I forgot who mentioned it first, but obviously if we look at options, then we have the max pain. So what price the put sellers or buyers, depending on how you look at it, suffer the most, which is at 160 right now, which means that the long whales have an interest to, by Friday, keep the price above 160, and the people with put options have an interest to keep it below. And yeah, which kind of like fits nicely here with this war to get it to 160. Although I think by Friday we should definitely, I cannot imagine that this correction here goes till Friday, and yeah, we are 165 actually, nicely away. So I think by Friday we are far away from 160. So in terms of that we have finished this wave 2 and have a wave 3 and then a wave 4. I really need to look up that one part again, what I mentioned earlier, you know, like when you have a corrective wave, it usually, I'm not sure if it just applies to wave 4 or also to wave 2. I need to look that up again. It usually retraces into the area of wave 4 of the impulse, previous impulse wave of a lower degree, which means that the correction here should actually not go lower than this wave 4 here. And I'm not sure if that's a rule, I need to look that up again, but if that were the case, then it would also help us to point out that our current labeling is not accurate. Yeah, we'll likely not do that during the stream, but we'll look it up probably like tomorrow, and then we'll see how that plays out. Yeah, like so much flexibility with Elliott waves that when I first learned about it, I also didn't consider that there's really so much wiggle room in terms of how things can play out. But yeah, the more you know, the less you know. Okay, under maintenance, or the more you know, the less, or the more you know, the more you realize that you know nothing. January 27th as a wave 5. I adopted the labeling that Jeffrey Kennedy came up with, where the high here is actually a wave 3 followed by wave 4, and I truncated wave 5. Previously I also had it as wave 5, but it brings us to one problem. Like on this time frame, it might look nice if we label this here as wave 5 and then say ABC and then or whatever, and then have here another 1, 2, 3, 4, 5 start. But it actually brings us to a problem on the monthly chart, because if we label the history from start here 0, 1, then 2, where we have a guideline violation, which I explained already a couple of times in posts and videos, so I'm not going to do it again. But if this would be our wave 3 already, it wouldn't fit even remotely in terms of time, because we have a wave 1 that goes over a couple of years and a wave 2 that goes over a couple of years, and then our wave 3 suddenly would just be a matter of what 3, 6, 9 months, so not even 1 year. Yeah, so it would like distort. So basically what I had first would be like 3, 4, so the dip here would be wave 4, which also would violate another rule. So the point being, if you make this here your wave 5, then it automatically becomes the end of wave 3 of a bigger degree, and automatically this here becomes your wave 4. Yeah, and that wave 4 would then, first of all, not only would it not look nice, because again wave 1 and 2 both take years to develop, and then suddenly you have wave 3 in less than a year and wave 4 in less than a month, plus wave 4 would violate another rule because it would go into the area of wave 1. Yeah, and however, if we label it that we are still within wave 3, because we look at here 1, 2, 3, 4 and a truncated 5th wave, which usually follows a very strong 3rd wave, and that definitely was a very strong third wave. and the movement is at least 70% of wave 4, so, and we definitely recover more than 70% here. It just makes more sense when you then look on the bigger degree. So, but I also had that wave 5 first and just like didn't consider how it looks overall on bigger degrees properly. And with Jeffrey Kennedy's analysis of the stock, I adapted his labeling, which also is kind of nice because if you have this wave 5, that would also be wave 3 of a bigger degree, 4, and it would assume that we're in wave 5, which is the last wave of this a bigger impulse. However, if this is just 3, 4, 5, actually that still wouldn't be wave 3 of a bigger degree, that's then this wave here. So if this would be wave 5, then it would also be the end of this wave here that I've labeled here, which kind of like, if we would want to, we could say 3, 4, 5, and as a result, that 3, 4, 5 is basically, so that would be 3, 4, and then we would end here. So we would still end up with a truncated fifth here, but it would simultaneously likely become wave 3 of this other degree here, this one. And you might still end up with an overall accurate labeling though. Like, the only thing is if you then zoom out to bigger degrees, you lack one wave in the end. So where your labeling then says we're already at the end of wave 5 and a drop is coming, our labeling would then say we're at the end of wave 3, a drop is coming, but then there's still wave 5 to come. So it might not make a huge difference, to be honest, because the wave of this degree is so insane long that in terms of time that it might not matter at all. But for the look of how everything looks on the chart, if this would be a wave 5, it would need to be the end also of another wave of a bigger degree, which means that would then be either a wave 2 or on the biggest degree likely a wave 4, which would violate a rule. But if this is not yet a finished wave 5, but we're still, if this is not a finished wave 5, but we basically have those subwaves up here, maybe on weekly it's better visible. So we have 1, 2, 3 still in progress. Then that third wave is 1, 2, 3. And then as in part of that third wave, it's 1, 2, 3, 4, 5 with the truncated fifth. Yeah. So with that labeling, we actually kind of like have a better looking pattern that looks more like Elliott wave theory, or like the waves are supposed to look, and have still more room to grow, because while we are currently in this fourth wave to complete this one here, it's only wave number 3 followed by a drop to wave number 4 followed by wave number 5, and that wave number 5 will only finish wave number 3 of that brownish degree here, yeah, of the cycle degree that we have here. So but overall, still, if you would have this here wave number 5, and you would still, it kind of like is similar, because we say 3, 4, which means from here we started 1, 2, 3, 4, 5 impulse. If you say this is number 5, it automatically would become like a, for example, 1, 2, and you would have wave 3 here, and it would be an impulse. You would have then where we might have wave 5, and then basically it becomes our 1, or in our case our 3, 2, or 3, 4. For you it might be 1, 2. Yeah, so just when we come towards the end, things might not add up properly anymore. So you can always, you can always start labeling just from a recent distinctive high or low. Ideally, if it's long enough in the past, so you don't necessarily have to start labeling back in 2003, but you could actually start labeling back in March last year. So you would not have that brownish wave at all. You would literally just start from here and start with your 1, 2, figure out where 3 reasonably could be. And if we use again the Kennedy channeling technique, we could draw our base channel. Now wave 2 is roughly here according to this labeling, but it could also be further along. But if it's here, then wave 3 would be once we exceed that base channel. Now, as said, that wave could also be up, hard to select the right point. No, So wave 2 could likely also be that low point, which means we are in 1, 2. This here is the beginning of wave 3, but it still would point with the Kennedy channeling technique that this here is wave 3, because in order to confirm our wave 3, first of all, we need a reasonable movement, and second of all, we would then create our so-called deceleration channel, or basically we would create our base channel or our wave 3 channel, and when we have a breakout from that, it usually indicates that we are in our wave 4. And then we would create our deceleration channel, so by taking the high from our wave 3, parallel here, with a parallel through our potential point 4. And once we have a breakout from here, it indicates that we're in our wave 5. And then we can also take our point 4 and connect it parallel through our perceived point 2, which again, likely not this one, but we would move it here. And with a parallel through 3, and in most cases our wave 5 would end up on the top of that channel. However, we have an extended third wave here, so the median is also an okay target. Now we go higher than the median here, but still using Kennedy channeling technique, it would look like our point 2 here is not 100% accurate and should be here, but that doesn't change the overall labeling, because we still would have then 1, 2, 3, 4, 5 to still confirm the rest of the labeling is accurate. So I'm not really gonna, maybe I'm gonna bother to move that here just for completeness. But yeah, so that's likely, depending on how you look at it, that's likely a wave 3. So if we count from March, then it's a wave 3, 1, 2. So from the COVID low last year, 1, 2, 3, 4, truncated fifth wave, which then in return becomes basically, if you count from March, becomes wave number 1 of another degree, which then would mean, like there we didn't have the correction that we would expect. Then where's this 3 coming from? This is from this subwave here. Oh, 1, 2, 3, 4, 5, Now that count actually was also now not 100% accurate, because if we look from here, 1, 2, and we assume that we're still in wave 3, likely because we don't have enough time on the chart, and only on the smaller degree here, where we can also confirm it with Kennedy channeling technique, there we say we have the 1, 2, 3, 4, 5, which is part of this degree, where we could also say 1, 2, and technically we could point to 3 here, but it's not possible because we already confirmed the smaller degree inside. So like gets confusing at some point when you haven't looked at some of the labeling for some time, because we've been so close for most of the time, or at most at the daily chart, and also focusing on the later area. But basically, that's where we're looking at right now, or what we're looking at right now. So for me, that's wave 3, followed by wave 4 and a truncated fifth wave, which in return is wave 3 of another degree. That's why we are in this wave 4. And in the end, that wave 4, 5 completes wave 3 of the next degree, which should be 1,320 or to 1,500, followed by our next wave 4, and then followed by our wave 5 that completes wave 3 of this next degree. So that's kind of like where we're looking at. And so thank you, sorry, Smooth Brain, starting to get some wrinkles slowly. But you see, like, it's for me, it's also not like, oh yeah, that's it and so on. Especially since we focused so much on just the latest daily stuff and haven't been looking at the preparation from here to here for a while. But I would say that's maybe also like the issue with Elliott wave theory in quotes, that technically, like again, if we go back to weekly, so just to have everything more compact, technically we could say 1, 2, 3, 4, 5, and that becomes a wave 1. But then we would also expect a bigger drop from here. Then we would expect a set based on the Fibonacci retracement. Then we would expect a drop into 250 again. And I don't see that happening. So like, while multiple labelings can apply at some time, it's kind of like, doesn't mean that all of them are accurate, and you have to like then either try to label even a bigger, zoom out and label a bigger degree as confirmation, or just think of other aspects, maybe using other data or other indicators and so on to think about like what kind of like seems reasonable. It becomes tricky with the truncated fifth waves and so on, yeah, like to think of that possibility. And at the end of the day, while the Kennedy channeling technique is something that we use very often, it's something that works, but it's not something that's 100% accurate. At the end, like the only thing that counts is like the price movement on the chart and the rules in the book. So kind of like, yeah, and the look of the waves, that they're in terms of like length and time, so price movement and roughly time relationships and rules of alternation and whatnot, that stuff kind of like works out, yeah. And yeah. But yeah, we keep dropping a little bit more, so yeah, I really don't think that this would be 1-2 anymore. Like here at this point, it would have been fit, and that's again the point, like when we only had those candles, this would have fit perfectly to say, okay, we have 1-2 and from here we go up because we have a short corrective pattern here, like we had it labeled before as a flat. But at this point here, I also don't think that this will turn into a triangle, because there we simply don't have the movement. If it were a 0, A, B, C, D, E, then it would work out with E breaking the bottom and going up. But according to our cheat sheet, wave 2 is never a triangle. According to Elliott wave theory, it's pretty much never a triangle. And according to motive wave, it's very rarely a triangle. Yeah. So this being a triangle, while again, one could kind of like try to come up with that labeling and then have another one going here, blah, blah, blah. The Fibonacci relationships between those movements also don't add up, so still have to figure out what that is. Or we don't figure out what it is and we just wait for decent confirmation that we are moving up 1-2, because then we also know where the correction ends, and then we basically, yeah, while we may not be able to figure out what pattern this is from those corrective patterns that are possible, and we still would have enough evidence to know that this should be wave 2. And that's one of the things, by the way, if you look at page, where was it? Page, or before there, page 126 in the book, you see a table that shows all the possible combinations, yeah, or like how many wave things there are, or templates. And if we look at corrective patterns, so you have like, what do we have? Like 3 types of zigzags, 3 types of flats, 4 types of triangles. So we technically have a total of 10, yeah, 3, 3, 4. So 10 regular corrective patterns, plus the double corrective and triple corrective, which add another 8. So we have a total of 18 corrective patterns, some of them obviously being combinations, that could potentially fit. Yeah. So I mean, not here, not all of them will fit, but whenever we have a wave 2 or wave 4, we have to consider that there is 18 possible ways of labeling them, in quotes, that could apply, that could develop. Yeah. And many of them, especially if we consider from those 18 patterns, yeah, you have 1, 2, 3, 4, 5, 6, 7, 8, and 6. 14 of those 18 would start with an ABC, because they are either a single flat or single zigzag or double or triple, or they are so double flat, double flat, double zigzag, or they are a double corrective pattern that just starts with a flat or a zigzag, or a triple corrective pattern that starts with a flat or a zigzag. Yeah? So that's why labeling corrective patterns is so challenging, because there are literally 18 options and most of them start with the most common one, A, B, C. Either like this, like it would be from here, A, B, C. So we could say it's a flat because B is higher, C corrects down here and the percentages check out. or like in a downward motion, like where do we have it nicely maybe? Yeah, like do we have a zigzag nicely somewhere here? Like maybe, I mean, it's not super nice, but A, B, C, yeah? And then we tend to jump to the conclusion, or I tend to jump to the conclusion, oh, we just saw an ABC zigzag. That trend channel here can get rid of it because we changed that with 0.2. So, and jump to the conclusion, oh, our correction might be over and we should go up, when in fact there is 14 variations that start with an ABC corrective pattern. So if we see an ABC corrective pattern, if we still would have our point wave 4 here or so, yeah, like, or 2 here, whatever, then there are still 13 other options that just start with that pattern and then go longer on, yeah. And that's the tricky part. And then you might see that there's 2 zigzags developing, not the case here in my opinion. And you might think like, okay, that's it. We have a double zigzag. Now we are going up. But then you but then you ignore that there are 4 different triple corrective patterns, where you could just be looking at the first double zigzag or the flat zigzag combination that is in the beginning. That's followed by another triangle, flat, or yeah, no zigzags in the end. So yeah, where there's still 2 other options with a triangle or a flat at the end. So a lot of flexibility with Elliott wave theory that causes a lot of the annoying stuff or annoyance along the way. And where we just have to, with the corrective patterns, we just have to be patient. I mean, I really thought that today we will see more movements, and as I said, maybe during the last power hour we might get lucky and see a little bit more. Might also not be, but it would be nice, because if we see a distinctive upward movement, we know that definitely this is the end of a correction. Now we still wouldn't know for sure if our current labeling is 100% correct, so 1, 2, 3, or if the previous labeling was correct, 1, 2, 3, 4, and we go to wave 5 of this golden degree. So basically 1, 2, 3, no, 1, 2, 3, 4. So 3 would be here, and that would be a flat correction followed by something else. So it would be a double corrective pattern. But based again on the length of each wave, so in terms of time, price levels, and so on, I think the current labeling makes the most sense. Just have to see how this plays out and have a distinctive upward movement. Doesn't have to be super far, but have something distinctive upwards that makes it clear that our corrective pattern here is over. So we have a 0.2. And yeah, in terms, as mentioned, in terms of the retracement here, we are still within the reasonable areas. Could even see a further drop to 160 first. So, I mean, it's not expected, but yeah, like we very often are in that area, as said, when we have our corrections, which is actually very fascinating by itself. If we take the daily chart randomly, and for example, we pick or actually let's go to the weekly chart for that. We picked the low in March, and roughly, yeah, and the high we had, and then we can see that in this case we got close to the 50% retracement, yeah. So 38 to 61 is usually the area in many of the corrective waves that we retrace. In this case, 50% retracement. If we, I don't know, pick a daily chart and go from wave 4 to wave 5 here, and we look and we see the low here is again close to the 50% retracement, yeah. And if we, I don't know, like on a smaller scale, look from here to here, and then we look, then we see the 38.2% retracements got slightly exceeded, and then we moved upward, yeah. So in other words, even without Elliott wave theory, if you believe that a stock is still going up, so that you're not in a downwards trend, then you could technically, on any time frame, and it's not trading advice, it's just some opinion, yeah, but you could on any time frame, even on, like, if we take 5 minutes, just pick a low. So for example, this low with this high, and then when it starts, or basically then have your pending orders at 38.2, 50, and 61.8% retracement. Maybe with a stop loss at the 78.6. So in this case, you would have opened 3 positions and they would have all triggered the stop loss. Yeah. But in other cases, if you then from this small low here to up here, you would have opened one position at 38.2. Your second one might not have triggered, but then you would have seen that gap up. Or if today you would have created the retracement here, and your 38.2 retracement might not have hit exactly 166. Yeah, it didn't execute, okay, but close. Or maybe I picked the wrong low point, because this point here would be lower. And if we pick that, okay, we just get a lower, yeah, it doesn't really help us, so we still wouldn't execute. But then if we, from that low point here, go to here, and you would open a trade at 38.2, at 50, and maybe at 61.8. I mean, we will see how it plays out, but with a stop loss maybe at the 78.6. So I'm not sure if this is profitable. I'm really not saying you should do that and go ahead and do that. I'm really just saying, considering how often Fibonacci retracements turn out to be relevant. Like if you look here, like we have from here to here high, and while yes, eventually we broke through, but initially we bounced off the 38.2 twice. Yeah. So, and I think it works both ways. Even if we were to do that, since this is a corrective wave here, the other way, then we see 38.2, we touched the 50, but then we bounced the other way. So it really all depends on the overall trend. So technically, yeah, like while it might not be in every case 100% accurate or so, but I think Fibonacci retracements are a great mystery in terms of how can something like that actually apply that often. And I think even in every other stock, if we pick Apple for that matter, and we pick the whatever monthly chart, or yeah, like scale it properly, we can also likely, I don't know, like go from here, roughly from, yeah, like this low up here, and we see we hit the 50% retracement before we move back up. Also, it seems that at the 38.2, roughly there was some resistance, yeah. Now, if we go from here to here, and we see 38.2, but we don't, or we actually reach 50 here and almost the 61.8. If we go from, I don't know, from this low up to here, yeah, 50% retracement, yeah. And no, yeah, maybe we bounced here on 38.2, so, but still, go from here to here. Okay, there we don't have a distinctive, we reach only the 23 area, so might not be enough movement we had here. And yeah, there we also likely, if we go from here to here, we already can see 50% retracement. If we go from here to up here, we still, yeah, like didn't reach any of the retracements, blah, blah, blah. But yeah, Fibonacci, definitely a useful tool. Even independent, even if you don't believe in Elliott wave theory or whatever, it's just incredible how, even here with those diagonals, by the way, if we draw a retracement from here to here, then, oops, you see 61.8 almost on the spot from this way down here, yeah? And if we then do this from here to here, okay, in that case we went a little further, 78.6. If we do it then from here to, oh no, not from here to here, but from here to here. So let's see, 38.2, slightly a little bit higher, but not really much, yeah. And if we do it from here to here, well, there we went further because our wave E broke through the line, yeah. But pretty much, yeah, so thank you, sweetie. And pretty much amazing, yeah. Anyway, while we're still moving sideways, I'm going to take another short 5-minute break. Maybe we'll have our power hour or not. Even without that, still a great day. We're up 5.5% today, basically opened high, and since then kind of like in a sideways trend channel, maybe like, yeah, like this, yeah. Which eventually should obviously end, and then we go up again. So, but yeah, be back in 5 minutes. In the meantime, if you have a charting software in front of you, play around with some Fibonacci retracements, pick some random stocks and just connect lows with highs and see how often the 31.8, 50 or 60, 38.1, 50 or 61.8 retracement levels actually are the levels with quite incredible accuracy where the price turns around, or at least in between that area. Yeah, so yeah, but anyway, be back in 5 minutes. So, or yeah, see you soon. Hopefully nothing happens in the meantime, or maybe it does.
I'm back again and nothing's moving, so we still have to wait patiently for anything to happen. In the meantime, I'll do a little bit of other stuff real quick on the other side. And yeah, like that's the boring part, the corrective patterns, pretty much like waiting for them to finish and play out and try to label them, because whenever we are able to definitely recognize them, then it obviously is easier for us to already define where it would make sense to buy. And it would be 9 with up. But whenever they are complicated like this, all we can do is either zoom out and focus on the bigger pattern, or just wait for them to finish. And that's that one. Yep. And that and that. I'm, by the way, open for any ideas for what you guys think that pattern could be. And here, 1, 2, 3, no. Yeah. Just for the fun of it, if we go on the 1 minute time frame, 1, 2, yeah, it doesn't work, so like, I'm curious if we can confirm this way 3, but there we just run out of smaller candles to actually do that, so yeah, just have to see how that plays out. And tup. Nice. And really a pity, like, that we have to suffer through that boring corrective pattern. Which means I can check and look up if I can find the rule about if wave 2 or wave 4, if that's like a rule or a guideline that, yeah, corrective waves 41. Let's check if we find something there. No. And then chapter 4, multiple wave relationships, 145. So let's check. There it's about the Fibonacci ratios, but 1, 2, 3, 4, 5, and then the ABC actually went further. 1. 4 is 3.82 or 3. But for 3 we don't have a precise, not 0 to 3, but 5 is 6 point, yeah, it doesn't help us.
time sequences, no, 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 no. ABC, ABC, no, no, no. Here it's also not the case. Wave 2, maybe 1, 2, 3, 4, and wave 4 here, yeah, into the area, okay. Wave 1, wave 2, no exceeds that area. There it falls into 3, 4. There it falls into 3, 4. So it might just be a rule that the corrective pattern, so if we have wave 2 here, so not a guideline, wave 2 often but not always falls into the area of 3, 4. Let's check if we have it. So it might just be a guideline, not a rule. Yeah. So let's check what we have in the rules for impulse waves. Wave 4 will almost always be a different corrective pattern, so it's not always. And wave 2 is usually a zigzag, wave 4 is usually a flat triangle or flat combination. Wave 5, no. Yeah. Often the extended subwave is the same number as the parent wave. That's interesting. So we are currently in a wave. Yeah, I mean that will not be the case here. Here clearly wave 3 would be extended in terms of where it went, but we are within a wave 1, and overall we are also in a wave 5 of bigger degree, which means we would expect wave 5 here to be extended, but it's often, it's not always. Wave 4 typically ends when it's within the price range of subwave 4 or 3. So for wave 2 that doesn't apply, but for wave 4 it typically ends, which I actually saw, for example, wave 4 here, or here we didn't see it because we have, or we didn't label that, but we would have 1, 2, 3, 4, but it went further. But somewhere else we saw that wave 4 here, yeah, that one here is within the range of wave 3 and 4 of the wave 3, yeah, but it's a guideline, not a rule, so yeah, so cannot use that. And for wave 4, not for wave 2, so. And wave 4 often subdivides the entire impulse into Fibonacci proportion in time and or price. Okay. Just looks so simple, but so many details and exceptions, making it challenging to really label things properly. Yeah? And yeah, with that we're back basically to just waiting and seeing what happens. What do you think will happen after market today? No idea. Like, I mean, aftermarket is always low volume and therefore higher volatility, and so we'll just have to, I mean, not we just have to, but it's like hard to say. Like, considering, like, if we consider from the option change, the max pain at 160, and it's Monday, so it doesn't really matter till Friday. We had our run up, and maybe people took profit because it was a decent, like 20% or so to here. And now we are back into boring low volume sideways movement. Maybe towards the end of the day, during the last half hour now, maybe we see a little bit more movement in one direction or the other. But considering how this all plays out, it just likely will go more sideways, and aftermarket is kind of like irrelevant. Yeah. There is something maybe interesting. Wall Street's mega bank CEOs to be hauled before Congress in May. Nobody will say why. We've been closely monitoring the Senate Banking and House Financial Services committees for the past 15 years. We can think of no other time when the committee issued a joint statement to announce they were hauling the most powerful men on Wall Street to testify without offering a scintilla of information on the topic of the hearing. The press statement simply indicated that the Senate Banking Committee would hold its hearing on Wednesday, May 26, 10 a.m., blah, blah, blah. The announcement indicated that the following CEOs are scheduled to testify: JP Morgan Chase, Goldman Sachs, Citigroup, Morgan Stanley, Bank of America, and Wells Fargo. Yeah, I mean, might not be related to us at all, but might also have something to do with the whole mess, the whole GameStop situation caused, or may cause. And another one, yeah, like back we go since nothing else is happening. So NCC's margin call was waived to Robinhood to the tune of 2.2 billion US dollars. Yeah. Yeah, so kind of like being an effective supervisor of any sort, a risk manager, a regulator, a parent, means following a simple rule: don't reward bad behavior. In the eyes of many of its members, the National Securities Clearing Corporation has failed to observe that rule. The linchpin of the US equity markets, NSCC, which processes the best part of $2 trillion worth of trades every day on behalf of investors large and small, is facing serious questions over its handling of broker Robinhood's flirtation with bankruptcy in late January. The basic fact of the episodes are well established. In the early hours of January 28, Robinhood, broker to some 30 million largely retail clients, many of them betting on surging meme stocks, received a 2.2 billion add-on to its margin call that far exceeded its stated capital and available funding. By early morning, the charge had been halved. By mid-morning, it had been rescinded entirely. In the intervening time, Robinhood had moved to halt purchases of the 8 offending, violating stocks. Yeah, kind of like a different scenario compared to what they said that they were restricted from buying and blah, 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 and protected their users and whatever. I mean, we already knew that, but it's interesting that there is at least some press out there that focuses on the WTF of the whole thing and blah, blah, blah. So today, a lot more calls were bought than puts, almost 2-to-1. What about max pain at 165 US dollars? Well, maybe it changed, but for now it says 160. So I mean, obviously it's the same thing. Like if the price is above 160, it causes max pain for people with put options. So, but it also means that for the long whales that want to inflict max pain, they don't need to spend money or buy shares to keep pressure for upwards movement, because as long as the Friday ends above 160, they achieved their goal in terms of their call options work out and put options suffer max pain. Yeah, and we have a little movement that might even be the end of our corrective pattern with like either this candle low 130.63, so likely this candle, but might also be that we get stuck here and move down again. So we already had some acceptable candles here. Let's see if that changes here. Yeah, seems like we're moving a little bit. Now, another thing here, like obviously selective, so true triangles or bull flags, or you ever want to call it, that both kind of like diverge or contract right now, which would then indicate here we could break out. I don't know how he comes up with the price target here. So what the blue line indicates, but it's likely some average or something like that. Yeah, maybe. I mean, again, we don't do dates, and it's kind of like creating the wrong expectation. And if we would really see a price tomorrow from here to 69,000, although how it's like obviously 69,420 favorite number, yeah, like would not play well with Elliott wave theory. So yeah, then another hedge fund, New York's Infinity Q winds down hedge fund as valuation issues spread. Not sure if it's relevant to us. When I get asked when was the last time I went shopping, blah blah blah, yeah, and like bags of GameStop shares. More incentive to move from Robinhood. And like we have really some big retail traders in our midst, like 307, it's 307,000 shares, I would say, yeah. No, 307. Does that add up? So 307,000 times 150. $307 shares, so it's just with 3 comma places here, decimal places, yeah. So, and but back we go. Yeah, it's 307 shares, yeah. Pretty sure it's just, we all know what the boy from Bulgaria did, yeah. And yeah, we all know, but it's like the narrative initially was obviously different, and that article really points it out even more. And yeah, like the price for 64,000, no, like 69,420, obviously just memeing, yes. Blah, blah, blah. Okay, CNBC Pro tweeted GameStop turnaround plan accelerates, but one analyst still believes the stock is worth only $30. Well, good luck with that. and that's likely market watch, I would say. Yeah. Yep. Definitely spreading FUD for people to sell or to motivate them. Really. Yeah, nothing going on. Yeah, no other posts I stumbled upon that are really, really noteworthy. Obviously a lot of funny stuff, and obviously I'm currently in GME. Let's check Super Stonk. Don't know how that happened. So I guess it's busier at 3 a.m. Yep. BlackRock just rang the alarm on CNBC regarding the impending market crash. BlackRock on CNBC ringing the alarm, too much liquidity in the market. Just watched live CNBC usually, blah, blah, blah. From Google, too much liquidity risks the creation of asset bubbles like in housing before the financial crisis and farmland afterwards, and distorts financial markets. Throughout the world, ongoing central bank liquidity has bolstered financial assets rather than goods and services that produce growth in the real economy. He ended saying, with so much liquidity in the market today, there's literally no value in the market today. Okay. Rick Reeder, Chief Investment Officer of BlackRock, who manages $9 trillion of assets worldwide and owns 13.2% of GameStop. Actual quote, the flood into high quality assets because liquidity is so large, there is literally no value in the markets today. Okay. And so apparently there was a guy running in front of Citadel, if I got it right, like this, and the end is near, and the Simpsons predicts the futures again, yeah? The future, so not futures. Yeah, and this candle here would need to go a little bit higher to distinctively break the line that we can draw if we would want to. Which also reminds us of another trading strategy. Simply, if we connect certain points with a trend line, once we have an outbreak, so a candle that's completely outside of the trend line, preferably even with a small drop back to the trend line in the next candle or in one of the next 2 or 3 candles to bounce off of the trend line, we could basically open a long position because it looks then like the resistance of the trend line has been broken. Yeah. Or another strategy, by the way, would be if we take a high and we connect it with, in that case, a low, and yeah, like maybe this one here not, but this one. And when you then have 3 such lines, and basically, I mean, you pretty much do the same. Once you have a breakthrough, you consider buying, yeah, but it's would need to look it up, but I think when you have the third line, that's when you buy basically, so would need to look the details up. There's a lot of things you can do, like basic trading strategy that just rely on trend lines or trend channels. Yep. And what else do we have here? Nothing. CNBC very, very rarely has valid news for the market. I'm not surprised the price action wasn't sideways again, but thank you for taking time out of your day once more. Yeah, I mean, I really don't mind it. It's a little bit pity that we had for the last couple of hours just that sideways movement. I actually thought that after that endless sideways movement that we already suffered through, that now this wave will develop a little faster. Well, apparently not, but on the other hand, it means I don't see how that corrective, so if this one is correct and this is wave 2, I don't see how that can go on much longer, yeah, which means that, well, maybe not today, so maybe this turns down again and so on, and maybe nothing happens in after hours and pre-market, so we just stay here in the tomorrow as well a little bit, but somewhere in tomorrow we actually would need to see then the wave 3 start. So again, 1, 2, 3, 4, 5 that make up our purple wave 3, simply to keep some reasonable relationships between the waves itself, yeah. At the very least, it teaches patience to all GameStop holders. Yeah, it definitely does. Like, and I mean, it's also a great practice. I would like to figure out what kind of corrective pattern this is, but I really, while I could come up with A, B, C here, and I wouldn't be perfectly happy because it more likely looks like it would be 1, 2, 3, 4, 5 down here, yeah, as a likely then as a, okay, that would make wave 3 the shortest wave. Which cannot be the case, yeah. But could be, yeah, like not like this, but could be that wave 2 is actually here and wave 1 is actually, yeah, gets hard on the small scales. And yeah, it labeled it as a diagonal, but as an impulse that would be okay. Wave 3 would be the longest, most distinct movement. It would actually be an extended third wave in this case because we have that other spot in here, and it also in terms of having a channel would work out okay-ish, yeah, well, not perfect, but if we take 5, so our wave 3 would be extended in this case. We see that we connect 1.1 with 5 on a nice channel, and here we would maybe wave 5 hits the median, yeah, so it's likely that this down here is a 1, 2, 3, 4, 5 impulse, and which would be the case in a zigzag. The first wave of the A wave of an A, B, C zigzag would be an impulse. Then that would need to be a zigzag, but that would also need to be a 1, 2, 3, 4, 5, and simply in like how that would look, it just doesn't work out. That would be A, maybe B, and then that cannot be C. It just doesn't make sense. I mean, maybe it can, but to me it doesn't make sense. So, but yeah, in other words, I don't expect this corrective pattern to go on much longer. Maybe we see the end already now in the last 10, 12 minutes, or tomorrow within the first few hours, but then we should see another strong upwards movement, which would then, it would require, if this is 1, 2, just to keep that in mind, yeah, Kennedy channeling technique, our wave 3, which in purple would again consist of a 1, 2, 3, 4, 5, has to exceed this line. So it means as part of this wave 3, which again, it could be a little bit more sideways movements, which would flatten potentially, or yeah, like flatten that channel a little bit. But as part of this wave 3, we're actually looking to at least hit the $200 mark, which would kind of like make sense. 200, again, psychological price level where some people might take profits. And then our wave 4 would be the corrective pattern that takes us a little bit down again, potentially then maybe to the median of that base channel. So if our wave 3 would be we hit the $200 mark, I don't expect that our wave 4 will just be to 190. It seems like a too small of a correction, but we would expect a fast correction considering that this one took some time, and likely then maybe from 200, I don't know, A to maybe 180 something, B, and C taking us to that median line here. Depending when it happens, so depending if it's like we have an early start or the correction goes on a little further, we can see that we're talking about wave 4 around the $180, $184 line. Yeah. We'll see. And again, while I don't like, again, this is more likely an impulse, so it's part of another corrective pattern, which we have to come up with. But it just, if that goes on longer, then the only pattern that starts to make sense again would be another triangle in the end. But it cannot get much smaller than the movement that we already have. So yeah, just have to wait and see. And it's just crazy how many boring long corrective patterns we suffer through in this stock. Yeah, like, I mean, here wave 2 is boring long, then from the subwave, wave 2 is boring long, and on the bigger scale, the wave 4 is boring and endlessly long, and it's kind of like it would be time for some fast corrections again. In some of Keith Gill's recent tweets, they show fountains shooting up and down multiple times like we saw in after hours and pre-market. One of patterns you mapped showed huge gain in after hours. One of the patterns I mapped showed huge gain in after hours. When did I map that? Like, I mean, you mean for today? Like for today after hours? Possibly yes, but if we would have huge gains in after hours, then it could be that this is the end of wave 2, which I don't think exactly. Although possibly, because we could confirm that this would then be 0-1 of wave 3 and or 0-1-2 of wave 3, currently with the 61.8 retracement, which would suit nicely if we don't go lower here. And then basically if we open up somewhere high in the after hours, then or if we have after hours and pre-markets higher up, doesn't matter, hard to say where, even if it's like, because we would then have a small base channel again, yeah. So any price above 160 something would indicate that we are in our wave 3 now. And so if tomorrow again we open up with a gap to the top, it would indicate that it's 1, 2, 3, and maybe goes higher, maybe develops 4, 5, becoming wave 1, 2, 3, 4, 5, and so on. So, but yeah. Who knows what may happen though? All we can do is wait, and if these gains do happen, we would need to see if it continues the next full trading day. Yeah, yeah. I mean, after hours and pre-market are kind of like nice and an indicator in some way to okay where we are going, what's going on, and so on. But I'm not sure. I think I can trade after hours and pre-market with Interactive Broker. Actually, check Interactive Broker after hours trading. Yep. So I can also trade during the extended hours. So pre-market and after hours. But for like for Elliott wave, it's not relevant because most people or many people cannot. And so, yeah. Anyway, no other posts or... And yeah, in TDA I can trade after hours. The order type is AM, PM. Yeah, I don't know, like, would check with, need to check with Motive Wave, like, but I mean, it actually, to be fair, can't wait to witness the last 5 minutes. Want to see how it goes. Well, it doesn't look like anything is happening. I mean, if that candle, if we have a red candle during the last 5 minutes that goes lower, then that might not be the 1-2, and we might still see the finishing of that 1-2 of that wave 2 in the early hours tomorrow. Not order type, but where it's a stiff type of whatever. Good job, sub. Be patient and hold, guys. It's a bumpy, wavy ride to the top. Thank you. Appreciate. Yeah, I mean, it's just a pity. I really expected, based on the pre-market and how we started the day, that we will see a little bit more movement, and not, slightly disappointed. But again, we are looking at a very small area in a like very, very big picture that all points upwards. So that line points downwards, but it's like a triangle on some whatever degree. But the wave patterns all point upwards. So yeah. Welcome to the gang, yeah. And we'll have to see if we have some strong movement tomorrow. I'm not sure if I can fit in a stream. I mean, if it's really, really strong and insane movement, I will do whatever I can to spontaneously come online. But if it's just like reasonably strong movement, then I might not be able to drop everything else to jump on the stream. But yeah, I think what is safe to say, or safe in quotes, that with that gap up, we definitely left that endless long corrective pattern here behind. And as a result, I mean, while we are still not out of the woods, if we look on the daily, yeah, like, I mean, there, well, from our labeling, from here, 4, 5, or 3 actually, and this is wave 4, from our labeling, we were able to label a triple 3 corrective pattern till here, which already is a strong sign, because there is no such thing as a quadruple 3 or whatever, yeah. So there is no such thing as, in Elliott wave theory, 4 corrective patterns in a row. So it's 3 is the max, and they all in size and so on work out quite nicely. So, oh wait, A, B, C, W, X, Y. Oh, we actually have a double 3 corrective pattern till here, yeah? So a zigzag, then a wave X, which is another zigzag, and then our triangle, yeah? But a triangle is always the last corrective pattern, so assuming we didn't screw up here with the triangle, that definitely is the end of wave 4, which means we're definitely in the wave 5 of this degree, which means while our smaller labeling here, which you can on this time frame not even discern anymore, might still need some adjustments along the way, but overall all the bigger labeling still, like before, points upwards, and next stop there, roughly this range, in my opinion, not financial advice and so on, you know that. Actually, in my opinion, 1.3 to 1.5, but according to Jeffrey Kennedy, who has way more experience, where does that limit come from? What are you doing? What's there at 180? What am I missing? What, buy? Okay, that's... Oh no, I don't want to sell. Like, why do you, like, discard, leave me alone. Probably pressed the wrong hotkey at some time, yeah? So not gonna sell at 180. It's orders. Yeah, so those are my take profits. That's fine. So that's fine, but whatever that was, not fine. And yeah, so last candle, last couple of minutes, 2 minutes to go, and it looks like we might hold up here. So it might really be that this is the end of wave 2, 1, 2, which would also, if we open with a gap to the top tomorrow, might indicate that might confirm that end of wave 2, 1, 2, 3, 4, 5, and so on, and we move up further, and which is nice. And yeah, and then we'll just have to wait and see. Patience is key. It's like literally not only with GameStop, like with everything in life. Like if you are impatient, you make hasty decisions that literally end up costing you money. Whereas, I mean, if you, for example, if we look at, I don't know, Dow Jones historical, historical chart, typo, but still, and we look at max, while there has been a long time, like from here, from whatever, 99, and that's not even the whole history, I guess, but from 99 till whatever, like 2008, so like a 10-year period where if you just held your shares, you would have been at a pending loss. But at the end of the day, obviously not all stocks always go up, and some companies go out of business and so on, or might go down for a couple of years. Or even like if we look at GameStop, on the 3 months chart, we can see that there is a corrective pattern from 2007 till 2020. So 13 years where pretty much we have a sideways downward movement. So for a long time, especially single stocks, obviously. But if you're diversified enough and so on, again, just my opinion, not financial advice, then like sometimes closing positions in the red, if the kind of like your analysis changed, like the reason why you originally bought and thought the price would go up suddenly doesn't exist anymore, then cutting your losses makes sense. But just because, oh my God, I'm 10% in the red, what should I do? Should I close or so? That's why you lose money, because you sell them at a 10% loss instead of waiting a couple of days or maybe a couple of weeks, maybe a couple of months, maybe a couple of years for eventually for the position to recover and eventually making you a profit. Now, it may not be a huge profit then, and you would have to consider opportunity cost. What if you sold at a loss and then invested the rest of the money in some other position that might have better returns and so on? But I don't know, overall, like whenever in doubt, look at historical charts for indices. So for how the whole stock market behaves, like not just a single stock, but the average of a lot of stock. And I don't know, if we would look Germany, the DAX, one day not so tempting, 1 month cool, 6 months cool, year to date cool, 1 year cool, 5 years, like again, like people that last year panic sold here, maybe they did that because they knew, and maybe some of them did that because they expected a further drop to re-enter later, but like in most cases, like here, again, if we would have worst case bought in 2000 and there would be like a 13-year period, a 12-year period if we just held, where in between we would be slightly profitable, again at a loss and so on. But even from here, where we were at 7,700 to now where we are at 15,000, so 100% in 20 years. So not super great, for 20 years. But if you compare it to regular savings, so if you compare it to panic selling here at a 50% loss, then you still would need to find an alternative investment that fits. So patience is key. I mean, it's like literally Warren Buffett, impatient. It's like best quote, the stock market is a device for transferring money from the impatient to the patient. So Webull showed 71 at 4 exactly, NE1. See that? What? When what? Webull showed 74 at 4 exactly. I'm not sure what you are trying to say. So they showed 74, but for what? For GameStop or? And markets closed, by the way, for 3 minutes now. We could show the extended data, which then doesn't show up here. Okay, we don't show the extended data. Webull had a green candle at 171 GameStop. Maybe aftermarket already. So that we would see on TradingView, for example. I also have the data subscribed. I should see it, but so it was likely there. You see that that's aftermarket. There the high is at 171.80. No, 175.20, and from 171.80 it went up to 175.20, and now it's 160, or the low was 162, and now we are somewhere at 165 after hours. But yeah, like we basically, after hours we could also go down, but then pre-market, depending on, or pre-market will be relevant in terms, it will show us very likely will open, and if we open here or open higher, it just makes it more likely that we are past that corrective pattern. Especially again, even if we lose things or use things that are not Elliott wave theory, so just trend lines, yeah, we could technically draw one like this, where we might not have a confirmed breakout here, but that definitely would be a breakout from the trend line. Or that trend line could actually be a trend channel if we are like 1, 2, so not just one line, but we could technically maybe even if we take, I don't know, if we take that point, we would still be within the channel, but not with the after hours, but technically something like this where it looks like we had a breakout. Now, if we would draw a channel here, the parallel would go through likely roughly here, so we would also have a breakout already from that channel, and which means we technically could probably go the other way now and do something like this, and maybe not take that one high, but like take the I don't know why TradingView behaves so weird to me lately, yeah, so like not going or not attaching to the right candles. Let's disable the magnet. Yep. So maybe like this, so that we have more, which would then also, if we use this as a trend channel, oh, we're by the way on a daily chart, yeah, so obviously too far zoomed out here, yeah, but which anyway, we broke through this trend channel here, indicating that we go up. We can make a decent trend channel here now, which technically could still move, but if we look how nice that line here aligns, it should actually stay like this, indicating that we bounce off from here. And if we zoom in on the 5-minute time frame where we are playing around mostly, we likely, what kind of channels can we come up with? So first of all, we could connect obviously those 2 points here like this, where we would now have a breakout. We could, if we take it lower, go from here to here, yeah, maybe, so we have more candles covered, would be like this, where we would have a breakout. We could obviously also take the points here to here, so those two, where we might not have a fully confirmed breakout, but it looks like breakout and bouncing off, so being confirmed here. And yeah, then if we zoom out further, yeah, if we take something like this, then there technically would still be some potential downside, but yeah, here we definitely broke through. And technically, if we want to, we could also remove drawings and indicators, yeah. We could also likely, maybe not perfectly, but you know, like have another bull flag. Again, not perfectly, maybe like this. Maybe it's flatter and that part is also in there, which would then indicate another breakout from here. Yeah. But yeah, so while the after hours went already higher, it already dropped a little lower, and yeah, we'll see how that plays out, but it's not relevant for Elliott wave theory. Yeah, after hours don't matter. Like we will see it tomorrow. Like if we open higher, then it's a strong indicator that this is definitely wave 2, but not because we open higher. Sorry, zoom out, literally zoom out. But mostly because the retracement here is pretty much on spot with the 61.8 line, making it reasonable that this is 1-2 of an impulse of a smaller degree. Yeah, and if we open above the base channel that we can create here, so if we open above this here, it indicates that we're in wave 3 of this small 1, 2, 3, 4, 5 impulse. And if that is a 1, 2, 3, 4, 5 impulse, then our corrective pattern has ended. And even if this would not turn out to be a 1, 2, 3, 4, 5 impulse here immediately, if we open higher, so the moment we open, like currently we could still draw like trend lines like this or maybe like this and come up with some kind of like, okay, that's some part of a diagonal or whatnot. But the moment we open, for example, at 170 or at 170, it's clear that this has to be the end of wave number 2. At least that's in my opinion, and that we go up. Yeah. So hope that makes sense.
Yeah, so Webull had the green candle, and does that mean, yep. So with that, yeah, yeah, I know the last couple of hours have been boring. I hope you were able to take something away from it. If it's patience, if it's like some additional ideas how to play around with trend lines and get ideas for potential entries or exits. Again, like trade lines or trend lines, really quick. Technically, we could connect all of this here, yeah, so those points. And we have a breakout. We don't get it confirmed, but doesn't matter. We have the breakout. So we buy with the first candle here, set our stop loss at the low of the last candle that's inside, below that line, and buy. And then we basically look forward to creating the next trend line, which could potentially be something like this one here, yeah. And the moment we have a breakout from here is where we close our position, and where technically we could open a short position if we were short selling, because we have another trend line that gets broken in the opposite direction, and which means we would now from here on out, from that candle with a stop loss roughly here, hold a short position, which means we would try to find the next trend line that could be like this. And the moment we have a breakout from here, we close our short position. So I'm not short selling in general, but we would have from here to here sold short, and would open up another buy position, which in this case might hit our stop loss. So because we would open, our stop loss would be at the low of this candle at 163.54. And here we went slightly lower. So here we would have a losing trade, but not by much, yeah, because we would have opened it at 164.84, yeah. But yeah, so a lot of ways how, or a lot of tools that you can use. You can also combine them. If you think about it, the more you learn about Elliott wave theory, you will learn, or you will see that it actually encompasses or uses a lot of other things, but in a combined way. So every impulse wave at some point is basically a trend channel and consists of multiple trend channels. Yeah, Fibonacci's are very important, or Fibonacci relationships are very important in Elliott wave theory. Instead of just using the trend channel, you could also just use one side of the channel, which would then be a trend line, and so on. And so basically simple strategies that are very basic, thrown in together, combined with certain rules, suddenly you have Elliott wave theory. Anyway, glad to hear that it was less boring thanks to the stream. Yeah, at some point it's just tricky to find things to talk about when things just are moving like this. And yeah, like we have previously, I would try to label this part during the stream, but based on the previous weeks we suffered through long corrective patterns, I rather just wait it out instead of like really at the point where it becomes clear that it's a corrective pattern that's going to be struggling to identify, or I rather just wait it out. Yeah, but anyway, so the next scheduled stream will be on Friday. As said, if we really have strong movement tomorrow, I will see if I can push some other task from my list to jump online spontaneously. In that case, the best way would be if you subscribe and enable the stupid bell icon, then you would receive an email when I go live. If you want to, and other than that, I would see you all on Friday. To summarize, or we already summarized most of it, but just on the daily thing, we would get another 4 candles here, and those 4 candles basically should move us upwards. Now, they might not get us all the way, obviously, so 4 candles are not enough to create an entire 1, 2, 3, 4, 5 impulse to get us to 1,200. But if we look on the hourly chart, where we will get a few more candles, so it's definitely enough to get us above the $200 area. I'm not sure if it will be exactly 280. For that, we would still have to measure some other things and so on. But we should technically, within another, how many days do we have till Friday? Friday would be the 23rd or so, if I'm not mistaken. So we're like till here. So we should technically manage to break out of the channel. So we should actually be above 200. If we are then already in the wave 4 of this wave, so if we reach wave 3, so going out of the channel and start wave 4, we might be back below or around 200, but we will see. Or actually we shouldn't. We should have wave 4 touch here or the medium, but yeah. So yeah, so thanks for tuning in. yeah, it's always my pleasure. I hope you, if you haven't already, you don't have to order the physical copy of the book. I get that, like $29 for a book, and maybe you don't enjoy reading that much and whatnot. But yeah, like I recommend, like, check the link in the description to sign, or check the free version of, or the online version of the book. And even if you don't read everything, if you check chapter 1 in the physical book, it starts at page number 20 roughly, 19, yeah, and goes till page number 61. So we're talking about reading 42 pages. It's not that much, and you would have the basics of Elliott wave theory. And if you then want to go further, yeah, like chapter 2 would also be great, 3, 4 would even be better. So if you manage the first 4 chapters, would really be great and help you and everyone else. But just the 20 pages of chapter 1 should already help you a lot. And yeah, so Nick, yeah, great. Yeah, like if there would be more movement, I might not have had the time to go into every message and so on, but always happy to share my opinion. And yeah, like everyone has the right to my opinion. Yeah, so have all a great evening, night, middle of the night, morning, depending on what time it is for you guys and maybe girls. And see you all maybe during the week, but definitely on Fridays. So till then, and bye-bye. So, and